once. It just keeps coming out. So I think weakest, to me, it's the labor market that matters most, because that's going to drive consumer spending, and that's really the bulk of our economy.
Hey, Kathy, Jim Caron here. Good to see you, my friend. So question I have for you is this really about the employment situation in the U.S.? I know the Fed has a dual mandate, but have they kind of forgotten about their inflation component of this? Not that it doesn't matter to them. We all know it's part of it. But they recently did a review of their policy framework where they're thinking more about the average rate of inflation, which means that you could have a period of higher inflation to catch up for those periods when we were below target inflation years ago. So how much of this is the Fed ignoring on the inflation side and is willing to risk inflation in order to keep the jobs market stable?
Well, hi, Jim. Always good to talk to you. So I think that's sort of what they're weighing right now. I wouldn't say that they're completely ignoring the inflation impact. I think there's a great uncertainty and there's diversity of views within members of the FOMC, where some of them are saying, hey, no, we do need to wait and see. Could this inflation increase that we're still waiting for, by the way, still hasn't really showed up in the data, but we all think, and we do think it's going to happen. But how much is that, so-called temporary, and then how much is it persistent? I think the thing that I look at is also how does that the budget talks, how does that impact growth and inflation for next year? Sort of what we're thinking is the Fed waits until September. By then, I think you're going to get some real clear evidence. Labor market is weakening, the economy is weakening enough that they can say, all right, inflation may be up, but eventually aggregate demand cools. That will help temper inflation. They'll be a little late, I think, to help the economy. So they probably have to go 50 in September, maybe another 25. But then I think that's it. I think they have a short window of opportunity, because next year that we will get some stimulus. It may not be as much as previously advertised, but we'll get some stimulus, and that could keep inflation elevated, could keep the Fed on hold for the entire year.
Yeah, look, and I think there's been some lags in terms of just the way the data has been coming out through the cycle. So effectively, we had a weaker first quarter. We're likely to have a stronger second quarter. I think some of the Atlanta Fed surveys are showing somewhere around 4% GDP. And then you've got the second half of the year to contend with. How do you, in your calculus, how does this work out in terms of the rate policy path? Because on one hand, they're getting a weak first quarter, a very strong second quarter, and the second half of the year may be somewhat average. I mean, does it really just argue that the Fed stays on hold indefinitely?
Yeah, well, first, on your point is a very good one on the volatility in the GDP measures, right? It's very difficult to parse out what's really happening underneath the headline numbers because of these wild swings in imports. So yes, second quarter, we just went through our numbers yesterday. We're also around 4.5% for Q2, but it's really largely driven by inventories and consumer spending from the handoff from the first quarter. So really March, April, May, June, we think consumer spending softens. As you said, in the second half of the year, we look for substantial weakening in the consumer spending, in the labor market, business investment too. Keep in mind, businesses are just on hold. They're not only just on hold with hiring, but also investment. So my view, I know people are kind of jumping to the idea the Fed's on hold for the whole year, or more forecasting that. I think they wait, but I think they still start to cut in September in the fourth quarter a little bit to try to ease some of the downward pressure on the economy.
But those downward pressures right now, Kathy, do rate cuts actually address that?
I think it helps. It's not going to avoid a slowdown. And again, I think the Fed is probably going to be a little late because of the tariff impact on inflation. But I think it certainly helps. If we could start to see a little bit of lowering rates, and maybe even long-term rates come down a little bit, that could help lower mortgage rates. It takes some of the pressure off of the economy. I certainly think it's the only tool really the Fed has, but I think it can be effective. What we don't know right now is will tariffs ultimately land, and also we don't know about the stimulus for next year. So still a lot of uncertainty.
When we talk about maybe getting some clarity, so you get sort of Washington sorts out whatever's going on with the budget, you start to see more of that hard data, and maybe that does give the Fed a little bit more confidence to make a decision. The question then becomes not so so much are they too late, but do they risk maybe overstimulating the economy in trying to address conditions that might have sorted themselves out on their own?
So I think, great question, but I don't think at this point they're risking overstimulating the economy. I think if anything, they've been hesitant, and they will continue to be a bit hesitant. I think what we're probably going to see is the slowdown in the second half of the year pretty pronounced. But then we will get some tax relief next year. That maybe it's not as stimulative because you're going to have the drag from tariffs and some of the other spending reductions coming in the system. But I think net you do see an improvement in the economy next year because of that.
Kathy Bostancic of National Mutual Insurance, thank you so much for being with us this morning and parsing through what to expect ahead of that payrolls print that we get on Friday. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief, Yahaira Anand. Yahaira.
Hi, Lisa. President Trump has reiterated his call for the Fed to cut interest rates. His comments come after ADP data showed U.S. hiring decelerated in May to the slowest pace in 2 years. He wrote on Truth Social, quote, "Too late, Powell must now lower the rate. He is unbelievable. Europe has lowered 9 times. But here's a fact check for you. The ECB has actually cut rates 7 times, and it is meeting tomorrow. Meanwhile, Walmart is cutting some jobs in Florida. The company told employees in at least 2 stores that they will lose their jobs if they don't get new work authorizations. Walmart and other U.S. companies are responding to recent Supreme Court rulings that are expected to affect the legal residency of hundreds of thousands of migrants. And the largest U.S. theater chain, AMC, reached an agreement with National Cinemedia to run more advertising spots ahead of movies starting July 1st. AMC theaters will feature a platinum spot that's shown right before the film starts, and it will get a cut of the ad sales, receiving what it described as vital revenue. That's your Bloomberg Brief. Lisa?
Wait, seriously? You can't go to a movie theater right now without getting ads?
As someone who goes to the movies a lot, I don't think we need more ads.
Seriously?
I mean, I deliberately show up like 35 minutes late because I know by the time I get there, they'll still be like showing the latest, Coca-Cola,
Exactly. That's the reason why they have reserved seating in some of these places now. So you can skip that. And you don't have to rush there and get there 3 hours early.
Yeah. I don't know why I'm paying for a movie to go see ads.
I mean,
but it's platinum ads.
Oh, geez.
Well, yeah.
Anyway, up next, setting you up for the day ahead. Plus, EU Economy Commissioner Valdis Dombrovskis on trade negotiations with the United States. From New York, this is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Africa.
a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Taking some heat out of the rally that we've seen over the past couple of days. Right now, you are seeing just a little bit of a retracement in equity futures, but pretty much flat across the board after having been up, at least when it comes to Russell 2000, up about 0.3%. In the currency space, you can see the euro ascendant once again reaching session highs of 114.07 after that ADP data came out in the United States, giving extra fuel to a trade that has been strong, which is strong euro, weak dollar for the bulk of the year. We are discussing this amid discussions in Europe. The EU trade chief saying he had a productive discussion with the U.S. on trade today, and talks are advancing in the right direction. There also have been a host of agreements in the European Union toward a closer fiscal union and bringing in some new members. EU Commissioner of the Economy, Valdis Dombrovskis, joins us now from Brussels. Commissioner, I'm so glad that you're here with us. Thank you. I want to start there. How much are the trade negotiations with the United States the backdrop pushing a lot of European Union nations together and bringing into the fold this morning Bulgaria, which was green-lighted to come join the euro?
Good afternoon. Indeed, well, I would say all in all, we currently are living in more turbulent times and more conflictual geopolitical situation, and that obviously adds to the sense of urgency for European Union to act and to act in a united and coordinated way. So that's why we have made strengthening Europe's competitiveness and strengthening Europe's defense and security as a top priorities for the European Union right now. As regards Bulgaria's euro area accession, indeed, today European Commission has published a convergence report concluding that Bulgaria is meeting all the Maastricht criteria to join the euro area as of January 1st next year. It's not the final step in the procedure. It's still for euro area member states to follow up on this convergence report and actually to invite Bulgaria to join euro area. We expect this procedure to be concluded by mid-July, but clearly it shows that euro remains open and attractive currency.
Commissioner, one big question has been just how much fiscal stimulus is going to get injected into the European region. There was this deal that people have been talking about to support the economy. How much has the economy been affected by the ongoing trade negotiations, or do you really see robust resilience as the European Union looks to other trade partners?
Clearly, we do see a negative economic impact from the tariffs already imposed on the EU by US, and also on uncertainty which those tariffs are creating, as we know that we are also not yet at the end of the negotiations. So correspondingly, we saw it as one of the factors slowing down European Union economic growth this year, and correspondingly we expect only EU economy to grow by 1.1% this year. So from European Union side, we are willing to find a mutually acceptable solution with United States as regards the tariffs, also to put an end to this uncertainty and to avoid further also global economic fragmentation.
If you guys cannot reach an agreement by this, at least the deadline that the U.S. has put on you for next month, have you prepared a package of retaliatory tariffs against the U.S.?
Well, as you know already, when the steel and aluminum tariffs were introduced by the Trump administration against the EU, we already prepared the first set of countermeasures, counter tariffs, but we also suspended these counter tariffs to give negotiations a chance. But we had reiterated that if we are not able to find mutually acceptable solution, we are ready also to put those counter tariffs in place. As regards the first package, which was our response to steel and aluminum tariffs, but also a broader package, which is a response to already further tariffs which had been imposed on the EU. But right now, we are still negotiating. Actually, exactly today, our Trade Commissioner, Maroš Šefčovič, is in negotiations with U.S. Trade Representative, Mr. Greer, and they are making progress.
Commissioner, at the same time, China has announced an agreement to buy Airbus planes, potentially 300 of them. And I wonder how much, while trade negotiations are going on with the U.S., the European Union is moving forward with some sort of discussion with China about tightening ties there.
Well, as regards China, it's worth noting that China is second largest EU trading partner after the US. So obviously for us it's very important to have our transatlantic relations and including trade and investment relations on track, but obviously also relations with China are important, that it's our second largest trading partner. Obviously in relations with China we have also concerns regarding the imbalances in our economic relations, regarding China's non-market policies and practices. So there are also issues which needs to be addressed.
Going forward, what do you think is going to be the key issue that you would like to see some breakthroughs made for, when it comes to U.S. and European trade?
I would say it's ongoing discussions as regards tariffs, and we do not have so much time left till July, so it's importantly to resolve this issue, also then to put our relations on overall more positive footing.
Economy Commissioner Valdis Dombrovskis, thank you so much for being with us this morning. Right now, counting you down to the opening bell. Here's what we have ahead. At 9:45 a.m., global PMIs. At 10 a.m., ISM services on Thursday. An ECB rate decision, U.S. trade balance data, and another round of jobless claims. Plus, German Chancellor Merz meeting with Trump at the White House. Friday, May payrolls, and Monday, Apple's Worldwide Developers Conference. Jim Caron of Morgan Stanley still with us. So, Jim, what is going to be the most important indicator for you that you're watching that actually is somewhat tradable?
So, you know, for me, it's all about employment. It's all about jobs, right? So I think this is the economy that we're in right now. If the labor market holds up, and if there's enough supply shipments coming into stores so that we don't have an inflation shock, I think that is going to be really good news, because it's going to unwind a lot of the negative narrative. Because look, the narrative right now in the market is that, okay, markets are okay now, but the tariff damage is yet to be seen. If it doesn't get seen, then we're in the market for an upside surprise.
Jim Caron of Morgan Stanley, thank you so much for this morning. And Romain Bostic, who's going to be with us here in the building until basically the day that everyone goes to sleep, considering the fact that you're here. I'm just wondering, I mean, the idea of the momentum of the market, especially at a time where you're seeing something different today than what we've seen over the past 2 days.
And we should point out the momentum's died down a little bit, despite the fact that we are climbing to these potentially these new highs here. We've seen volume low. We've seen conviction in the trade somewhat muted as well. And I think a lot of that is related to the economic data. We do want to see what that jobs report looks like on Friday and the CPI report next Wednesday.
Yeah, and I think that that's the reason why some people are more focused on the economic data also, because we're not getting as many earnings.
Yeah,
you had been getting all of those earnings. It is over, and so now it really comes to what is the other indicator that could potentially be the risk clearing event.
Yeah, no disrespect to Lululemon, but that's not going to move the market.
Can I just say, Five Below is basically wrapped for people who have allowance wants money.
Yes.
And they're between the ages of 10 and 15.
Yes.
Or maybe 9 and 15.
And adults who are kids at heart, too.
Oh, yeah.
I like my Haribo's.
Evidently. Coming up tomorrow, Lori Cavacino of RBC, Dan Greenhouse of Solis, Tom Becker of BlackRock, and Sundar of JP Morgan. Romain, thank you so much for being with us today. This was Bloomberg Surveillance.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Why is Baltimore so important to you? It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime. And now Baltimore is having amongst the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
Incidence of cancer, which is to say people getting it, is higher than it was 20 or 30 or 40 years ago. Is that because detection is better than it used to be?
All right, so the dirty secret is we have no idea. We don't collect data well in the United States. What we do know is that there's not a dramatic rise in cancer in the United States, but what we are seeing is a troubling trend is younger people are getting more cancers. That's real. We have no idea why, but we are seeing younger people, more colon cancer, more breast cancer, and other cancers in younger individuals, 20, 30, 40-year-olds, that we never used to see.
What do you think could possibly be the cause? I assume pollution or the environment in some ways?
We assume it's either something in the environment, we assume it's diet, it's ultra-processed foods, it's microplastics, it's changes in the microbiome. We really don't know.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are 3% away from an all-time high on the S&P 500 futures. Little change. 30 minutes till the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, tough talk. President Trump lashes out at Jerome Powell again, while Elon Musk calls Trump's tax bill an abomination. Still, global stocks hit a record high as the S&P is within striking distance of its peak, and Wells Fargo rises after being freed by the Fed, while CrowdStrike plummets on an uninspiring outlook. Katie, what are you looking at?
Well, let's talk a little bit more about Wells Fargo, because analysts now see new growth opportunity for the bank after the Fed lifted that asset cap that restricted its size for years. You take a look at what shares are doing pre-market, currently higher by about 2.4%, Matt Miller.
All right, I'm looking at CrowdStrike. Those earnings came in really in line with estimates. I mean, 1.15 billion was their projection. 1.16 billion is what the street was looking for. But the company is getting punished in the pre-market, down 7.5% right now, Katie.
We'll dig into that in just a bit, but let's get back to that tough talk because President Donald Trump again going after Fed Chair Jerome Powell after that latest disappointing ADP data dropping at 8:30 this morning. President Trump says that Powell must lower interest rates now as we see weakness in the labor market. To be specific, ADP private payrolls rose by just 37,000 versus an expected 114,000. Bloomberg Washington correspondent Tyler Kendall joins us now from Capitol Hill. He also went on to call the Fed chair unbelievable, comparing us to the European Central Bank. And Tyler, this, of course, sets the stage for what the president's reaction might be on Friday when we get the big, important payrolls print.
Yeah, hey, Katie. Well, he's definitely ramping up his pressure on Jerome Powell, and we have to keep in mind it comes after he met face-to-face with the Fed chair last week at the White House, which the Fed said was on President Trump's invitation. Now, after that meeting, the Fed did say that they did not discuss the trajectory of monetary policy and that anything, of course, is going to be data-dependent, adding in a statement that any decision will be, quote, careful, objective, and consider non-political analysis. Now, of course, President Trump has previously said he has no intentions to fire the Fed chair ahead of his May 2026 chair term being up, but definitely has been piling on the pressure because he wants to see the FOMC ultimately cut rates because, as President Trump has long contended, he thinks lower rates would go hand in hand with his tariff policy. And of course, there's just so much uncertainty around that policy, which makes Fed Chair Jerome Powell's job harder. Now, I did have the chance to catch up with two key senators on Capitol Hill right before I came on to talk to you, Senators Rick Scott and Senator Ron Johnson. Their names keep coming up because they have their eye on the economy when it comes to the reconciliation package. Rick Scott told me that he doesn't blame President Trump and his criticism of Jerome Powell, but Ron Johnson ultimately told me that he doesn't really understand the criticism because at the moment he has his eye on the bond market and says that trajectory is squarely on Congress's shoulders.
Tyler, I want to ask about Elon Musk because in a lot of ways, you know, he's more influential to U.S. politics and maybe to global politics as well than Jamie Dimon. And he has lashed out at Trump's big, beautiful bill, calling it an abomination. How much does this move the needle in Washington?
Well, we're going to have to wait and see, Matt. Of course, it comes at a time when the White House, President Trump himself, is directly picking up the phone to call some of these senators to move them forward. Perhaps this gives a little bit of leverage, a little bit of firepower to that group of Republicans really pitching themselves as fiscal hawks, including Senator Scott and Senator Johnson, as I mentioned, since they want to see some deeper spending cuts. And we did see sort of the same sort of coalition emerge on the House side, but at the end of the day, that package ended up emerging with a projection of adding more than $2.5 trillion to the deficit over 10 years. I also think it's fair to point out, too, that Elon Musk here has been critical of how this plan will speed up rolling back some of those clean energy tax credits, which impact electric vehicles such as Tesla.
All right, that is Bloomberg's Tyler Kendall on the First Buddy fallout reporting from D.C. Let's turn our attention back to this stock market because global stocks just hit a record high as investors navigate trade and growth concerns. The S&P 500, meanwhile, is also on the verge of a bull market from its April lows. Barclays, the latest bank to raise its S&P 500 target for the year. And you look at what's driving it, it's big tech. Just look at NVIDIA. Shares up 45% since April 8th. We'll discuss it all with Bloomberg's cross-asset reporter Alex Semenova now. And Alex, it's interesting. I mean, you talk about bad breath. As long as big tech is in the lead, it's okay.
Exactly, Katie. And it's really been a remarkable recovery. The Magnificent 7 index is up about 30% from April 8th's lows. So investors are really acting like April never really happened. And this is the full effect of a Trump put basically materializing right now. I guess it has a different term now called the taco trade. Trump always chickens out, where he, implements really aggressive tariff policy and then very quickly backpedals on it. And a lot of investors are saying that because he's been so quick to kind of rein in his rhetoric, we actually might not see the full toll of tariffs materialize. For example, Deutsche Bank said that because he was so quick to shift his policy, the estimate on corporate earnings, the impact on corporate earnings is actually going to be much lower than they anticipated, about a third of what they initially expected. So not a huge toll yet on earnings.
I mean, he gets a lot of flack, right, for backing down on tariffs, but even if he leaves the baseline at 10%, keep in mind, that's what has essentially, a 10% tariff is what's held U.S. auto producers out of the European market. So it can be effective. Listen, in terms of strategists, they've been all over the place with these tariffs as well. Strategists always chicken out too, right?
Yeah.
What are their targets right now?
Yeah, sell-side taco trade also in effect. Basically, we've seen a lot of flip-flopping, very reactionary responses from Wall Street prognosticators to Trump's policies. We saw Goldman Sachs, Yardeni Research, basically all of the big Wall Street banks lower their S&P 500 targets in April, and now they're back to raising them. Barclays today raised theirs, Deutsche Bank as well, Goldman also raised it, but there's a lot of nuance also in expectations. Barclays perhaps isn't as bullish as Deutsche Bank. They
Just
actually
a
say
hair that
just
they
a hair,
raised the
about
target.
1% from here by the end of December. So I guess everyone's trying to really figure it out still.
It matters. Hyundai raised prices 1%, and we wrote a big story on it.
That mattered.
By the way, you know what else matters?
I'm hoping you'll tell
The difference between a cross-asset reporter and an equities reporter here at Bloomberg. They sit on different sides of the row in the newsroom.
In the same room, but still different sides of the aisle.
Alex Semenova reports on equities for us. Thanks very much for joining us. Let's talk about Wells Fargo. It is poised for growth after the Fed lifted its asset cap that was in place for 7 years. That's biblical. We're joined now by Bloomberg's Sally Bakewell, who leads our America's finance coverage. So, Sally, how big is this?
Oh, this is a huge deal. Wells Fargo spent about 10 years trying to put right, remediate, rectify these scandals, which first erupted in about 2016 over its mis-selling of products and opening these millions of fake accounts. And the punishment, it effectively froze Wells Fargo in time. It wasn't allowed to grow beyond its 2017 level of about 1.95 trillion assets, while its rivals all shot up ahead. And it probably lost out on about 39 billion of profits by our calculations. And to put that in perspective, JP Morgan is now 4 trillion of assets, or more than that, and it effectively grew another Wells Fargo in the time that Wells Fargo had the cap.
It's just amazing, and you think about what this could mean for the next few years. You could get excited, but let's talk about the stock specifically, because you are seeing a reaction in Wells Fargo shares this morning, a little bit higher pre-market. A lot of this is priced in, though. Bloomberg Intelligence points out that, for example, since the November election, Wells Fargo has returned something close to 20%, outpacing the KBW Bank Index. So it seemed like people, specifically traders, were anticipating this.
Yes, I think the momentum towards clearing this hurdle has really ramped up, particularly in this year. It was clearing consent order after consent order. We were hearing optimism from CEO Charlie Scharf that they were really close to being able to say that this asset cap has been lifted. And now Charlie Scharf, he can go on the offense. He can really start to grow the bank, which means boosting investment banking. It means boosting trading, which requires a lot of capital to set up desks. And until now, that had not been feasible. It means boosting lending for consumers and winning them back after this brand was tainted. And also boosting lending for companies, trying to attract more wealth managers, targeting credit cards. It's going to be a big challenge, but this is the moment for growth.
I'm just looking at, because Sonali Basak mentioned on our call earlier that they trade at a price to book of 1.5, which, for a guy who went through the Euro crisis, that's a lot. And it's twice what Citi trades at. So their valuation is actually pretty strong.
Yeah, and if you think about the 10 years we've had, it has gone through a pandemic, and it weathered that well. It went through a regional banking crisis and weathered that well. And Charlie Scharf's kept quite a low profile as they've sought to put all of these wrongs right. So I think, investors probably saw a pretty strong institution. It just wasn't able to grow and close the gap with its rivals.
For context, I meant me. I'm the guy who went through the Euro crisis. And I guess it's kind of inside baseball, because I was actually in Germany for years. And so I'm used to price to book of like a Deutsche Bank in 2016, which is like 0.3.
Yeah. I was also going to say, that stat might also say a lot more about Citi than it does about Wells Fargo at this moment in time. But Sally, great reporting. Really know that the team has been all over this, long in the making. That is Sally Bakewell. She helps lead our financial coverage for Bloomberg News. Meanwhile, we're about 20 minutes away from that opening bell, so you take a check on futures right now. The S&P 500, the color is red, but it's pretty much flat. Of course, we managed to close in the green yesterday. We were higher pre-market, and then we got that pretty soft ADP print, and you can see that sort of took the momentum out of the pre-market. The NASDAQ 100, a similar story. The Russell 2000 pretty quiet as well. Small caps have been outperforming, but today it feels like everything is
How's the
restrained.
Dow Jones Industrial Average doing?
I couldn't tell you.
Just type WEI.
That dusty old index.
On the Bloomberg terminal, up 214 points yesterday to 42,519. So also within striking distance of an all-time high. Speaking of striking, CrowdStrike. The outlook disappoints. It wasn't really that bad, and nonetheless, investors are punishing the stock. We'll talk about the cyberspace next. This is Open Interest.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episodes this spring, only on Bloomberg.
Bringing you up-to-the-minute financial and geopolitical news whenever and wherever it happens. I'm Francine Lacroix in Davos, Switzerland, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Let's get out of high interest and look at what's making headlines around the world. China is considering placing an order for hundreds of Airbus planes as soon as next month. The deal could involve around 300 planes, including both narrow body and the good ones, the wide body models. The deal would help cement Airbus's dominance in the Chinese market. It would also be a significant blow to Boeing, which has struggled to make sales in the region thanks to, obviously, those trade tensions. A ship carrying about 3,000 cars to Mexico was abandoned in the middle of the Pacific Ocean after catching fire yesterday. The U.S. Coast Guard evacuated all 22 crew members, transferring them to a nearby merchant ship. The Morning Midas was also carrying about 800 EVs on board. In recent years, there have been a handful of significant blazes involving vessels hauling EVs, prompting concerns that the batteries inside those cars are vulnerable to fire risk and can lead to major disasters. They're really hard to put out. And Hewlett-Packard Enterprise reporting quarterly revenue that topped analyst estimates and indicating the tariff impact this year won't be as bad as originally thought for that company. Artificial intelligence has fueled a wave of demand for powerful servers and other hardware from HPE and other players like Dell as well, and Katie's super microcomputer.
very interesting. And of course, HPE reported results last night. So too did CrowdStrike, and it's falling in a big way, despite earnings beating estimates in the first quarter. Its unchanged full-year revenue outlook, however, was seen as a negative by some analysts, with Evercore and Canaccord, boy, downgrading the stock. Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh, joins us now. So Mandeep, this is an interesting one because everything was okay. It just seems like this was a case of really high expectations.
Yes, I mean, the multiple has rebounded since their global outage last year, which really did reset expectations, but they have executed well, and some of the metrics like gross retention was solid. They're talking about a second half acceleration, but they didn't change the guide. And that's why, you see the negative reaction. But to me, the big picture here is cybersecurity should benefit from all the AI deployment. When you look at the data that is being used for training these models, the inferencing, how everyone is excited about AI agents, everything involves a layer of cybersecurity. So from that standpoint, you would expect a category leader like CrowdStrike should see an uptick in growth. That didn't come out last night. They talked about second half acceleration, but AI wasn't a big piece of it. And I think that's why investors felt a little let down.
Well, putting AI to the side for a moment, which is hard to do, there's also just the fact that there's so many cyber attacks still. It feels like it's the new normal. You think about Victoria's Secret this week, for example, having its own outages.
Wait, what? What happened?
Yeah, Victoria's Secret had to delay its earnings because it's dealing with outages. Don't get too excited over there. But Mandeep, I mean, just the fact alone that this has become a reality for a lot of companies, shouldn't that be a long-term growth story for CrowdStrike?
There should be, but one thing that's unique about cybersecurity is the attack vectors keep changing. Like you may think it's a certain type of attack, a company is really good at protecting against it. Next time it will be a completely different type of attack, and that's why it's a very hard problem to defend against. But that being said, Google has announced this acquisition of Wiz for $33 billion. To me, that is where security is going, cloud, browser security. And when I look at, a CrowdStrike, which has to now compete against a Microsoft and a potentially Google closing that acquisition, that is where the pure play companies have a tough task ahead of them because, look, in the end, Microsoft and Google can bundle cybersecurity and everyone will end up using their cybersecurity products because of the bundled offering. So that's the challenge that all the pure play companies have, even though CrowdStrike is a category leader in the endpoint side. But a security attack is never just about endpoint.
Right.
It's all these different vectors that could come into play.
I want to ask about Apple. I was surprised when I typed ANRGO on the Bloomberg terminal, and I saw that there are actually 23 holds and sells on this stock. I mean, I figured everybody would have a buy. Apparently, Laura Martin over at Needham has also downgraded the stock. What's the problem at Apple?
Well, everyone feels they don't have EPS growth without a proper refresh cycle, and the refresh cycle keeps getting pushed out because their AI play is not clear. I mean, when you look at all the other Mag 7 companies, they're going big when it comes to AI investments, data centers, large language models. Apple so far has been watching from the sidelines, although I would say they have launched Apple Intelligence. It's just they haven't invested big in terms of CapEx dollars.
Right.
And that's why market is underestimating their, AI prowess. But with that being said, I still feel when it comes to distribution, if you need a personalized AI assistant or anything personal that touches, AI agents, you need to do that on Apple's platform. Where else would you do that? So in the end, they will find a way, but they don't have their own large language model. They're not investing big CapEx dollars, and that's why I think people are slightly negative when it comes to their prospects.
Well, all these problems build on themselves, it feels like, because you say that, the sell side is underestimating the AI capabilities here. It seems like consumers are as well, because as Laura Martin said, this stock needs an upgrade cycle. They don't see it happening because it seems like those AI features aren't enough to entice people to actually upgrade their phones.
And the other thing is the supply chain. I mean, look, the tariffs keep coming back into picture time and again, and their costs have gone up. They quantified that $900 million tariff impact. So that could be even bigger. I mean, 900 million we could be underestimating that given all the tariff talk. So the supply chain aspect is huge. But in the end, they have that lock-in with the consumers. Like, nobody wants to move out of the Apple ecosystem. And the barriers to entry for anybody coming up with a new device, even though OpenAI has talked about a new device, it's so hard to replace Apple ecosystem, given so many devices that they have with the consumer. So that's the hard part.
We'll see what OpenAI and Johnny Ive come out with, because no one knows, but very interesting. Mandeep, great having you on the program as usual. Mandeep Singh there from Bloomberg Intelligence. Check out his work by typing BIGO on your terminal. Katie, it's always interesting when we have someone famous.
Yes.
In the building.
Yes.
And I look over here, I see Andrew Slimman.
Sitting
Morgan
to
Stanley.
our left.
This guy has crushed it. I mean, global stocks at an all-time high, U.S. stocks 3% away, and he is beating in the funds that he manages both of those
Do you think he'll come on TV with us?
indexes. Yes. Coming up, Morgan Stanley's Andrew Slimman. He warns of another drawdown, but just this summer. So is that an entry point before we swing back up? We'll ask him what cracks he's seeing in the rally. This is Open Interest.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Barclays is the latest bank to raise its S&P 500 price target, saying that peak trade uncertainty has likely passed. Barclays joins a growing number of firms upgrading their S&P 500 forecast after cutting earlier this year. Let's discuss with Andrew Slimman. He is Senior Portfolio Manager over at Morgan Stanley Investment Management. Such a treat to have you on set with us. And let's talk a little bit about the trajectory of the rest of the year, because clearly you have some firms coming out, raising their targets up just a little bit, but you think that maybe the summer could be a little bit of a disappointment.
Well, you know, it's hard to get optimistic now.
Yeah.
It's up 19% off the low. The time to get optimistic was in April. Easy to say now in hindsight. But look what happened. People, we started the year with the average price target was 6,500, a 16% return. A lot of optimism. You have a drawdown. Everyone takes their numbers down. Now they're taking their numbers up. So as a contrarian, and you're coming into the summer. I think second quarter earnings will be good, but then you always get kind of this lull between end of July and mid-September, and that's I'm nervous about that because I see a lot more optimism as we started the year. Now we're back to that level. That gets me a little nervous on the summer. And overall, my view has been, we can get into this, is the third year of a bull market, which is from fourth quarter of 2022, was the first year, second year of 23, and so forth. The third year is not a great year.
Right. But bull markets don't die of old age, right? So the question is something going to kill this, or do you buy in October when the third year is up? Andrew Sliman is going to stick around to answer those questions and so much more. A check on futures ahead of the bell. Katie, what are we looking at?
Here is the setup as we skate into the opening bell. It's pretty quiet, but the colors are green. The S&P 500 up just a hair. A similar story if you take a look at the NASDAQ 100 and the Russell 2000. Let's see if there's any fireworks to be found at the opening bell up next. This is Bloomberg.
Another art museum called the Guggenheim. Now, Louvre's big enough. Why do you need a Guggenheim as well, right next door?
I think it's a great question. I think the beautiful thing about the UAE and Abu Dhabi is we live with over 200 nationalities. And in doing so, they have become a part of the country's and the city's fabric. And we need to celebrate that. So we need to celebrate everybody's identity, everybody's background, everybody's heritage, everybody's history. And what a beautiful way in doing so in these beautiful institutions. These museums are educational institutions and they're community institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and you, if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There, you understand the history of this great land. Not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller, and we're getting ever closer to 6,000 again on the S&P 500. Futures are higher right now, only 0.1%, but this market wants to rally. I said that yesterday, and we're now only 3% away from an all-time high. You hear the opening bell on the New York Stock Exchange. I believe Forbes CEO is ringing the opening bell with some editors at large. What does that even mean? What's an editor at large?
We seem to have a lot of them.
Not a lot of jobs get that kind of freedom. At the NASDAQ, AWS hoping for a unicorn. Celebrating the opening bell with a bunch of startups, Amazon stock is only up 67% in the last 5 years. I was really surprised by that.
Yeah, it is surprising. It's underperforming the S&P 500 over that time frame. Certainly hasn't felt that way. Shall we talk about Wells Fargo?
Yes, big story.
Let's talk about Wells Fargo. Analysts seeing new growth opportunity for Wells Fargo after yesterday when the Federal Reserve lifted that asset cap that has restricted its size for about 7 years. Gains of about 2.5%, which doesn't seem like a huge move, but Matt, as we were talking about with Sally Bakewell, a lot has been priced in since Donald Trump won the presidential election back in November.
All right, so we're going to continue to talk about that throughout the program because it's such a huge deal. I mean, 7 years is a biblical amount of time. And as Sally Bakewell told us, some companies like JP Morgan have grown one full Wells Fargo in terms of assets since that cap was put on. CrowdStrike, obviously, it's a much smaller company, about half the size at $120 billion, but it's shrinking today because while earnings came in line with estimates and the outlook was pretty much bang in line, the street is not impressed. They said they're going to have $1.15 billion in sales. The street wanted $1.16 billion in sales. And this shows you how much you get punished for missing in a quarter when so many people beat. We're back here speaking of that with Andrew Slimman. He's a senior portfolio manager at Morgan Stanley Investment Management. And Andrew, one interesting point that you've made is that in the first quarter, companies beat estimates, and yet analysts are still lowering their full-year targets. Why?
Because of I think it's a great setup. I think that's a very that falls into the bullish ledger, which is just to be specific, first quarter earnings beat by $3.50. So in theory, the full year number should go up by $3.50, but the full year number went down by $10. Now that's consensus for the S&P because yes, it was good, but we all know it's going to get bad in the future. Well, what happens if it's not as bad? And so this is the concept that I think is important, which is the hard data is telling you something, but a lot of experts are saying, yeah, but it's going to get bad out there. And if they're wrong, I think you're going to see a chase into the end of the year in terms of people raising their numbers because so far the data hasn't supported this pullback in earnings estimates.
Yeah, on the benchmark level, you've already seen that. Barclays, Deutsche Bank, Goldman coming out in the past couple days. I will note that the S&P 500 now is up 20% intraday from its April low. So if this holds, set to close in a bull market. And with that being the case, Andrew, are there still bargains to be found out there? When you talk about this great setup, are there still discounts or have we rebounded?
Well, I mean, back to Matt's point, which I think is really important, which is, look, can we find companies where they really blew out the number in the first quarter and yet their full year number went down, right? And Amazon would be a great example of that, right? So there are a host of companies that really reported great numbers where analysts are I think too negative on the full year number. So that's where, I think the market's giving you an opportunity. Anytime stocks diverge from their fundamentals because something's going on, Washington, D.C., blah, 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 that creates an opportunity because ultimately stocks move with earnings.
So far it's been in the AI rally, the picks and shovels, right? Or the gear, the chips, the servers, as we were talking about this morning. But it hasn't been the companies that are making money on their AI, say, software products, for example. We were talking about this yesterday with Bruce Richards. He's bullish, though, that those companies are going to absolutely dominate. When does that happen? When do we see the 100%. ROI?
Completely agree with that. Go back to when we rolled out, when the Mosaic browser was rolled out in '94. Well,
No.
Unfortunately, I do.
Sounds exciting, though.
So, but the internet really wasn't embraced until 97, 98, and that's what caused that big boom in the market in the late 90s was the productivity enhancement. So I think it's a lag, and that's why I think this year is just a pause year. But I think you're going to see this big productivity boom that happens starting next year as companies start to embrace this. Because at the end of the day, let's face it, AI doesn't have a healthcare cost. It is saving money for companies.
I will never forget in the year 2000 when my colleague Andrew Bulkley told to me in the Frankfurt office at Bloomberg, just Google it.
Just Google it.
And I was like, what what is that? What's a Google?
That was the
I had
first
no
time.
idea in the
Yeah.
year 2000 what Google was.
That's pretty amazing. I also didn't know what Google was in the year 2000. But I want to talk a little bit here about, okay, so it sounds like you see this productivity boom coming next year. There's a bit of a lag, but it's coming. So what do you do until then? Do you just hang out in your money market fund and be happy?
Well, I mean, yes and no. I mean, now maybe a little bit more so than a month ago or a month and a half ago, because I think at the end of the day, the market will end the year higher, just not substantially higher. But if I say to you, Katie, look, the market's going to be up 4%, 5% this year. Well, the market's not going to go up a little bit every day.
Yeah.
There's a lot of volatility, and lo and behold, in low returning years, you tend to have more volatility. So that gets back to the point of, do you tack against the headwinds? So I think it's unlikely that the volatility is over. I think we'll make an all-time high. I think second quarter earnings are going to be pretty good, and then we're going to get to this pause period, and that's what gets me a little nervous about later. And so volatility can be your friend.
What's your funds, as I mentioned at the top, the Global Concentrated Fund, MLNIX, and the U.S. Core Fund, MUOIX, have outperformed pretty drastically this year. I mean, you beat global stocks by 40%. You've doubled more than the S&P 500. What's your process? Do you look at history? I mean, you were talking about the length of a bull market. Do you go bottoms up? I mean, what do you do to win?
Well, I think we put too much emphasis on the ability to predict what's going on from a macroeconomic, and we don't focus enough on the behavioral aspects. This is the only business I know, Matt, where when prices go down, people sell. And when prices go up, people buy. And so as a core manager, I don't know if that's going to be in growth or value or financials or technology. I don't know. But I know people will react poorly. And so as a core manager, whether it's globally or domestically, if we can tack against the wind, that's our advantage. And I'll give you a perfect example of what I mean. When the market was down, close to 20% in early April, everyone was buying the safe stocks. It's like, well, they've already worked. The market's down 20%. So that was a time to get more aggressive. Now, as a long equity manager, I think it's a time to, okay, maybe I want to own a few more of those defensive stocks to protect the downside. So I don't know what's going to work. I just know that behaviorally people will consistently kind of move to what's already happened. And if we can tack against that, that will generate good returns.
All right, Andrew, that's a good place to leave it. Hope to see you again in studio soon. That is Morgan Stanley's Andrew Sliman. Meanwhile, let's get a check on this market. Of course, set for a bull market. Like I said, if we hold at roughly these levels right now, we're just below 6,000 on the S&P 500. And if you take a look at the breakdown of how we're getting there, it's kind of an even split when you take a look at the numbers of gainers versus losers. You have almost 270 names in the S&P 500 in the green right now, a little less when it comes to the red. And then you take a look at the individual names. You have Broadcom, Meta, NVIDIA, Apple, all leading the way higher when you take a look at the points contribution here. That's what you want to see. That's what's getting us to closer to those all-time highs. On the downside, you have a big weight when it comes to CrowdStrike, as we've been discussing. Investors not really loving the earnings that they delivered last night. You also have Philip Morris and Tesla, Palantir, et cetera, there. Let's take a look at how this looks on the sector level, though. Like I said, pretty much an even split, a little bit more green than red, though. Communication services at the top, healthcare, too, in second place. Eli Lilly having a big day, and then big tech coming in. You take a look at the bottom, and you do have some laggards today. Consumer discretionary real estate. Then it gets a little bit more real when you take a look at consumer staples and at utilities, Matt. That sector currently off by about 1%.
Well, that's a good time, I guess, to buy in that case, right? According to Andrew. I mean, especially since that's one of those defensive sectors, but utilities had a pretty good run yesterday with Constellation. Coming up, from extreme weather to supply chain uncertainty, taking precautions is more critical than ever for this, business owners, I guess, in this environment. We're going to get insights from Pat Gallagher. He's the CEO of one of the biggest insurance firms that you've never heard of. Gallagher's chairman and CEO joins us next. This is Open Interest.
right, let's cut right to it. This is Bloomberg's new show, Primer. Technology is a $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, a big call out from Needham on Apple getting downgraded because of growth concerns and because of its position in the AI landscape. The analyst over there, Laura Martin, writing that, quote, for this stock to work, it must have the catalyst of an iPhone replacement cycle, which we do not foresee in the next 12 months. Apple shaking it off a little bit this morning. Next up, we have Snowflake getting raised to a buy over at UBS thanks to an upcoming investment cycle. The software company gave a strong outlook for quarterly sales after launching a number of new products over the last year. And finally, we have Taco Bell and KFC parent Yum Brands getting upgraded to a buy over at Goldman. The firm cites its best-in-class growth versus its peers, and Goldman actually sees 16% upside in the shares, which are currently off by about 0.4%, Matt.
All right, let's talk about big growth business that you may not have heard of. Insurance firm Gallagher released its annual business owner survey. The results finding owners are taking extra precautions to safeguard their businesses, many growing increasingly concerned about extreme weather, but there are a lot of other serious concerns like supply chain, obviously, and cyber attacks more recently. Pat Gallagher joins us. He's the chairman and CEO of the company. And Pat, before we get to that, I got to ask about your growth, because I'm constantly astounded when I look at these charts. Over the last 5 years, you're outperforming massively. Over the last 10 years, you're outperforming massively. I look at the analyst chart, and their price targets are consistently under where your stock is going. Why do you think people underestimate Gallagher?
You know, it's a really good question, man. I don't know. I think people, in general, don't have a real clear understanding of insurance. And that's one of the reasons I appreciate an invite like this. There's a lot of people who just think of insurance as kind of a tax on what they do. And what you really don't realize is how important it is. I always make the comment that people don't realize insurance is the oxygen of commerce. You don't have insurance, you don't breathe, you don't do anything. You don't send a container somewhere, you don't buy a car, you don't build a house, etc. And when you look at that, then you realize how important it is, and business owners get that. There's no question about it. They know that once they write a business plan and buy a truck, they buy insurance, and that's because it's their family money. And they're concerned about what's going on out there. And when we do our survey every year, and we talk to 1,000 of these owners, you can see clearly that the concerns that come through touch right on risk management and insurance.
Right.
So what are you concerned about? Weather. What do we take care of? Weather. And the insurance industry steps up in these environments and really makes a difference. You've got about $200 billion of catastrophe loss monies that are going to be paid in the United States alone in a year. That's a huge spread of risk. And what that really means is that for those companies to have stability, they need proper coverage. And as that becomes more and more important, people like ourselves are advisors. We don't take risks. We're a broker. So we help that client work through if it's supply chain, if it's weather related. They'll even ask us for advice on where to relocate. If they're seeing, you know, I just can't take another hurricane and keep my business alive.
I got to get out of Florida.
Well, or position yourself somewhere else in Florida. Florida's important. And so it's all those things are very nuanced. They're very important, and it's incredibly important that people realize we're not just selling insurance. Of course we sell insurance, but we're also advising on all the things you should be doing to make sure your risk profile is better.
You have 57,000 employees, right? Or at least you did at the end of the year. And I'm looking at the stock. It's up 800% in 10 years. So you've taken this business from, I guess your grandfather started it, you know, 500 years ago, and now you 100 years ago. Now you've grown it. I mean, exponentially. What is your process? How do you do that?
Well, I think the thing that differentiates us is there's a couple of things that are big differentiators. Number one, we really are a composite of acquisitions. There's 30,000 agents and brokers in America, and I'm very clear about the fact that we're not a roll-up company. We're building essentially a business together with partners who have done well in our business locally. When they join Gallagher, they get a whole composite of new tools. Data and analytics are becoming much more important. The relationship with carriers, what we have in terms of expertise relative to the very verticals they're in, whether it's construction, religious, not-for-profit, real estate, et cetera. People want to trade with people that understand their business. So what you've got is these 30,000 entrepreneurs who, by the way, do well. If they combine together, bringing their brain power to what we have, it makes the whole enterprise stronger. And I think our biggest differentiator, frankly, is our culture. We like each other. We work together. We come 100% behind helping a client. And everybody gets that. And so over and over, we buy somebody and they'll say, yeah, I'll be here for about 3 years. I'll sell you the business, but count on about 3 years. And 7 years later, you say, how you liking it? I'm still here.
Well, let's go back to this survey, this annual business owner survey that you launched. You talk about some of the concerns there. Extreme weather, for example, is one. But at the top of the list, I thought it was interesting to see cyber security up there. We were just talking about Victoria's Secret, their cyber issues this week. But it's across every industry, it feels like, these cyber attacks.
So very clearly, I've been saying this now and that's one of the examples of how the insurance industry is so dynamic. We never talked about cyber 15 years ago. I heard you in your previous segment talk about Google. 2020, you didn't know what it was. Today,
2000.
2000.
Yes,
sorry.
2000.
2000.
By 2020, I was already.
You were there. You were there. Sorry, man. But the truth is, if you're running just a little store, bodega, you should be considering cyber cover. And it's that critical to the long-term safety of your company. And people need help with that. What is cyber? What does it include? Well, it includes the help you get after you've had a problem. And that can hit anybody from a small trucking firm all the way up to the likes of Victoria's Secret. And even if you're Gallagher at 57,000 people and you have a breach, you need a tremendous amount of assistance. And that's a big part of what the product brings. And I think it's good to finally see it making the radar screen, because we've been telling our clients, and there was a time when we were frustrated. We had said to ourselves, every single client will be talked to about cyber. And about 16% a decade ago were buying it, and that's ramping up incredibly now.
It's a great point, too, that, I mean, okay, it's one thing for Victoria's Secret to have a cyber attack and have to deal with it. It's a totally another thing if you're a small company such as a bodega. Running up against the clock here, unfortunately, I have to leave it. Really great to see you, especially in studio. Our big thanks to Gallagher's, Pat Gallagher. Now, coming up, Dollar Tree, warning of a profit hit from, you guessed it, tariffs. Details next. This is Open Interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on stocks as we approach 6,000 on the S&P 500 again. Right now, 59.86, 59.87, up 0.25%. The NASDAQ gaining about as much as well. A lot of red on the screen for a green day. Crucially, NVIDIA is only down 0.1%. Tesla off more than 2% as Chinese shipments disappoint, down 15%. CrowdStrike, we've been talking about, kind of missing its outlook. And then Dollar Tree, we're going to talk about right now. Katie, what do you got?
Let's do that. Dollar Tree warning of a profit drop due to tariffs despite adding more than 2 million new shoppers last quarter. Now, the retailer anticipates a reacceleration in sales to close out this year. Let's break it all down with Bloomberg retail editor Emily Cohn joining us now. So let's compare and contrast here because we got Dollar General yesterday. Shareholders seem to like the fact that they were kind of mitigating and navigating these tariffs. A different story when it comes to Dollar Tree.
For sure. So Dollar General is not your typical dollar store. It's much closer to a grocery store. I think something like 80% of its sales come from consumables, things that you eat. Dollar Tree is much more your classic dollar store. And what that means is that they're way more exposed to tariffs, the stuff that's coming from China. China's its #1 source of imported goods. So that puts it at, in a much weaker spot than a store like Dollar General.
So what do they do? I mean, do they become the $5 store?
There are some pluses and minuses in this report. I think they're saying that more people from upper income families are coming to shop. I think they probably saw a little bit of a pull ahead of people shopping ahead of tariffs.
But they can't raise prices much, Emily, right? Because isn't the idea that everything costs $1?
That's true. That's
or
true.
is that
but
not
I feel
the
like
idea?
They've moved away from that $1 price tag a little bit.
They can probably raise prices a little bit. They can probably, like Dollar General, negotiate a bit with their vendors. There's some other mitigation efforts there. But yeah, you can't raise prices that much if dollar's in your name.
That's true. We only have less than a minute left with you, but bring us forward to after the bell today, because we have Five Below to kind of close us out here.
Five Below is also in a similar spot as Dollar Tree.
Again, locking themselves in on a price with the name.
A little bit more.
Has to be below five, right?
That's true. But yeah, we saw in April, they turned around shipments of goods coming from China. They're much more dependent on China, and I think we'll be watching for that and how they're planning to mitigate the cost of these tariffs.
All right, Emily, every time a store that sells stuff for only $1 or less than $5, we're going to call you back. Emily Cohn there talking to us about today, Dollar Tree. Coming up in the next hour, Ann Maletti of Allspring sees opportunity in healthcare stocks. We've seen a lot of M&A there this year. We also have the CEO of the jeweler Kendra Scott on the rise in gold prices, and that rise doesn't look set to stop as central banks continue to buy. Plus, Citizens CEO Bruce Van Saun joins us at the desk to give us the look from a bank that operates on Main Street. This is Open Interest.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Companies that make everything from canned soup to dishwashers and cars are bracing for the impact of President Trump's new tariff hike. He's doubled them on foreign steel and aluminum from 25 to 50%. Tim Ebner is with the Can Manufacturers Institute.
What we are seeing in our supply chain will be an increase in cost to produce metal cans, which will then get passed along in the process of production.
One discount retailer has just warned investors tariffs are going to hurt its bottom line. Correspondent Michael Wallace.
Dollar Tree says its second quarter profits could be down as much as 50% from a year ago as it deals with tariff-related costs. Its first quarter earnings were better than Wall Street expected, with same-store sales rising more than 5%. Most of Dollar Tree's imported products come from China, one of President Trump's top tariff targets.
Mr. Trump posted to his Truth Social today bashing the Fed chair for not lowering interest rates. He called him too late Powell and said the time to act is now. Operations paused today at a U.S.-backed food distribution site in Gaza after dozens of Palestinians were killed over the past few days trying to pick up desperately needed supplies. The organization that runs the center says it's making changes to accommodate the crowds. Mirjana Spoljaric-Egger is president of the International Red Cross.
We cannot continue to watch what is happening. It's surpassing any acceptable legal, moral, and humane standard.
We're hearing from the family of the young Israeli embassy staffer killed outside the Capitol Jewish Museum in Washington, along with her co-worker boyfriend. Sarah Milgram's mother spoke exclusively to CBS News Minnesota.
She wasn't against the Palestinians. She wasn't against the people in Gaza. She was, in all her heart, working towards finding a way for everyone to live together peacefully.
Severe weather has caused widespread damage across the Midwest.
The storms have left tens of thousands without power. 13-year-old Sophia Winfrey was home alone when a bad storm hit at Independence, Missouri, outside Kansas City. She headed to the basement with her dogs.
I'm still a little shaky from it because it's very nerve-wracking.
Several hikers had to be rescued in the Grand Canyon after heavy rain fell. More than 30 million people are under the threat of more severe weather today, from parts of New Mexico and Texas, north and east to Michigan. Jim Crisula, CBS News.
A jury in Southern California has awarded $2 million to a couple of hotel guests who said they were, quote, massacred from bed bug bites, unquote, during a stay at the Shores Inn in Ventura. This is CBS News. A CDC official says she's resigning from her role overseeing updates to COVID-19 vaccine recommendations.
Dr. Lakshmi Pangiotokopoulos wrote in an email to some members of the agency's advisory committee on immunization practices that her career began with a desire to help the most vulnerable members of our population. And she says it's not something she can keep doing in the job. The move follows an order by Health Secretary Robert F. Kennedy Jr. to force an update to the agency's COVID guidance, excluding pregnant women from its vaccine recommendations. One federal official, when informed of the resignation, told CBS News more of us should be resigning in protest. Steve Kathan, CBS News.
Shaquille O'Neal had a surprise for the NFL's Kelsey brothers on today's New Heights podcast.
I'm going to show you guys something.
Travis and Jason dancing, celebrating, acknowledging Jason's girl, Taylor Swift's recent music catalog purchase. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning. Alex Steele, Paul Sweeney. We are broadcasting live from the BNY Insight Conference 2025 in National Harbor, Maryland. This is day 2. We're going to be featuring a lot of the folks that are here at this conference today. We're going to talk to them about their views on the markets, economics, and where to go forward from here. We have some economic data coming out right now. ISM services data coming out. 49.9, the headline consensus on this was 52, so now kind of flirting with a little bit of a contraction there in the services part of the economy, which again is about 70% of the U.S. economy. Let's get right to it. Steve Miller, the chair of the ISM Services PMI, on that data. Steve, I'm looking at that headline data, 49.9. That's below 50. Talk to us about that.
Good morning. Thanks for having me back. The it's 0.1% below the flat in services industries. Flat is bad. We've seen long-term growth, and when we get to flat or just below flat, it's certainly negative indicators. On the positive side, we track the numbers by industry and how they contribute to overall GDP. What we're seeing is a slight increase in the percent of GDP that's representing growth, and a slight decrease in those that are saying that they're in contraction territory. What we saw bringing the number overall down was for accommodations and food services, and the real estate rental and leasing, although both still in expansion territory, they're not as high or as fast a level of expansion as they were last month.
So I was confused as to how ISM services employment actually ticked above that 50 level, whereas, say, new orders just tanked to 46 and the overall index is below 50. What does that mean?
Well, on the employment side, my interpretation of those numbers is that we're still seeing confidence that the tariff situation is going to get worked out and we're going to be able to return to growth. But the new orders and actually seeing backlog as well, backlog of orders, we're seeing those very low. And another data point is when I look at the average of new orders and backlog, this is the lowest that it's been since 2 other points in the last 20 years. One was the beginning of the pandemic in March and April, and the other was in the 2008-2009 timeframe in the Great Recession. So for me, that's the biggest red flag, is the drop in new orders, as well as both the average level between the new orders and the backlog of orders.
So we got new orders lower. That's a concern about just the economy slowing down. And we've got services prices paid coming in much higher than expected. Is that inflation?
So can't say yet whether it's inflationary, but I would tell you that the 2-month growth rate is what we saw just at the start of the acceleration in inflation back during the pandemic. So definitely, that's
All right,
also
Steve,
a
we
big
appreciate
red
it. Yeah, we know you got to run, so we'll let you go. Steve Miller, chair of the ISM Services, joining us there. Really rough new orders, so we will keep track of all of that as it goes. All right, now let's kick it all off again with the Bloomberg Business Flash, get you up to date on some of the individual movers in the market. For that, we go to John Tucker. Hey, John.
I miss you guys. This Bloomberg Business Flash brought to you by IBKR. With the median new home sales price exceed $420,000 in May 2025 at IBKR Forecast Trader. The yes was recently at 37%. You can start predicting today at ibkr.com/forecast. And the last trading day for this contract is June 23rd. Well, after the latest economic data, the markets have turned mixed to little change, I'll say. Remember, they were higher. The S&P 500 up just 3 points right now, 59.73 on the index. The Dow Jones Industrial Average 17 points higher, and the NASDAQ 100, that has turned lower. It is down right now 16 points. And then you have Treasury, the prices climbing after the soft labor market reading. And then, as you just heard Steve break it down, the biggest part of the U.S. economy. This is services. Right now, I mean, technically in contraction territory, and for him, the biggest worry there, the new orders plunging in the ISM survey. We have also look at some of the most actively traded stocks. You have shares of Apple. They have turned higher, but earlier today we got a note from Needham and Company downgrading that stock to hold from buy, making it just the latest firm to turn more cautious on that stock. And we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul, BNY Insight 25.
All right, John Tucker, thank you so much. Alex Steele, Paul Sweeney, we're live here at the BNY Insight Conference, National Harbor in Maryland. Let's get a look at some stocks on the move today with Bloomberg's Isabel Lee.
Hey guys, we're looking at CrowdStrike first. So ticker there is CRWD. We see shares falling by around 7%. So that's after the cybersecurity company posted disappointing first quarter subscription revenue. So its second quarter sales forecast also underwhelmed, while an unchanged view on the full year revenue was seen as negative by some analysts. We have Evercore, Canaccord downgrading the stock. So CrowdStrike declined despite really beating earnings expectations. And again, we see that investors are more focused on the forward outlook. So the company also reported annual recurring revenue for the quarter that was just in line with estimates. And of course, in May, recall that CrowdStrike announced that it would cut about 500 employees. And at that time, shares dropped because Wall Street questioned whether the company's move came from a place of weakness or strength. So sometimes you feel like you just really can't please these investors.
Well, ain't that the truth? Interesting, too, because cybersecurity feels like a resilient place within the economy, but, you know, maybe there's some individual issues there. Okay, let's also go to, where am I? Dollar Tree. This is so interesting because the dollar stores really diverge on this.
Exactly. So Dollar Tree, DLTR, not to be confused with Dollar General, which is DG. We're talking about Dollar Tree. Shares are falling almost 10% because we have the company warning investors that second quarter profit could be down as much as 50% from a year ago. And that's, of course, related to tariff-related costs. So we have Dollar Tree saying that the timing of expenses will weigh on adjusted EPS, and that includes a 145% payout on levies because they have a lot of products coming from China. So Dollar Tree said they expect profits to, quote, re-accelerate in the remainder of the year. But still, the outlook, to Alex's point, really pales in comparison to its rival, Dollar General, because on Tuesday, the stock surged to the most on record after raising its sales, profit, and guidance. So both are dollar chains, but they're different because Dollar General generates around 80% of sales from food and consumable goods. So this means that they're less reliant on imports. Dollar Tree gets just half of its revenue from these categories, making them more reliable on inputs. And add to that, most of their majority of their directly imported products are imported from China. And we know what's happening there in the tit-for-tat trade war.
All right, what else we got? Snowflake, what do you got there?
Snowflake is a different story because we're seeing some green there, but really just 0.5%. The ticker is SNOW, S-N-O-W. So the stock is rising after UBS raised the stock to buy. They say that the company is early in the multi-year data investment cycle. So the price target is now $265. That's up from $210. They also had a big summit, and from that event, UBS said that they're becoming increasingly confident in the prospect that we're just a few quarters away for this whole multi-year enterprise. Evercore also said that there were no major financial updates at the event. Yes, but it's clear that AI has hit a tipping point. And TD Cowen also had good words. They said that Snowflake is leaning into an accelerated product roadmap. So lots of good words there in the summit, which is, I guess, the best news you can ask for when you hold one.
All right, Isabel, thanks a lot. Really appreciate it. Bloomberg's Isabel Lee joining us there. For more conversations just like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports and the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere where you listen. Let's go back to that ISM services data. I'm really focusing, Paul, on those new orders. We just heard from Steve Miller. We haven't seen that kind of new orders since 2009, 2008, or April of 2020. I don't want to compare my life to any of those times.
Right, exactly. I mean, when we first started talking about tariffs earlier this year, you know, economists would come on and say, really, the uncertainty surrounding tariffs could result in slower economic growth, could result in higher prices paid, i.e. inflation. And if you just look at this set of data today, again, it's only one set of data, that looks like what we're getting. We're getting the new orders plunging from expansion area 51 or 52.3 last period to 46.4. Big drop. And then you're seeing the prices paid also surge to 68.7 from 65 last period. So it seems like that, just with this one set of data, you're getting slower growth and higher inflation. So we'll have to see if it plays out throughout the economy going forward.
What I'm also curious as is to if we get any resolutions either on tax cuts or deregulation or on tariffs quicker than maybe some think, do we see a rebound then in ISM services and ISM manufacturing? Now, when we were dealing with the ISM manufacturing data, the read-through is not so much. It's going to take a while for that to open up and feed through. But will it for services, or can we see like a V-shaped move?
Right, exactly. And so that's maybe some of this shifts some of the focus back a little bit more towards this tax legislation that is winding its way through the Senate right now. And we know that the Senate has said, and House Speaker said they'd like something to be voted on by the Senate by July 4th. We'll see if they can make that level as well. But that would be presumably stimulative, although the CBO comes out and says we had $2.4 trillion to the national debt. So not a free lunch there.
I was just going to go there. The bill then, because of that, in part, facing a lot of opposition in the Senate. They're wanting demands for changes, and that's really concerning for the Republican fiscal hawks, as Paul was just saying, the CBO coming in with that $2.42 trillion of addition to the U.S. budget deficit over the next decade, which kind of bring us back to where we are here, right?
Yep.
So we talk about how you have to look through the noise and look long term, but if we have a significantly higher budget deficit with kind of no rein in spending, isn't that a structural shift, say, for the long end? And does that change then how you allocate and how you think about using the back end of the curve in your portfolio investment?
Yep, I'm looking at the 10-year Treasury here, up 18.30 seconds, pushing the yield down 7 basis points, 4.38%. So we are seeing a reaction to this economic data, maybe a reaction to the CBO report. So it just feels like there's a fine line to be kind of walked here over the next several weeks and next several months for this economy here. So obviously we'll be all over that as well. Coming up, Enda Curran, Bloomberg Global Economy Reporter. Get his thoughts on what's happening with global trade. President Trump out with a tweet saying it's really hard to negotiate with President Xi on these economic deals. So he's one tough cookie, I think the president said. So we'll get the latest there. Leanne Russell, Chief Information Officer and Global Head of Engineering at BNY, on BNY's approach to AI, which is, you can imagine, a big theme here at the BNY Insight Conference here, technology and how our financial advisors using technology in their business to help in their workflows. So we'll talk about that coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Let's start with the economic data that we got today. Activity as U.S. service providers. Remember, this is the biggest part of the U.S. economy. Just barely slipping into contraction territory last month. For the first time in nearly a year, we saw an abrupt pullback in demand. Prices also accelerated, the higher tariffs reverberating across the economy. And earlier we had the employment picture from ADP, and that showed hiring in the U.S. decelerated to the slowest pace in 2 years. This all comes ahead of the non-farm payrolls report that we get from the Labor Department. That's on Friday. Stocks right now are still pushing higher along with treasuries. The dollar down about 0.4%. The S&P 500, 9 points higher. That's up about 0.2%. We're at 59.79 on the index. The Dow Jones Industrial Average right now 35 points higher. The NASDAQ 100 up 16 points. That's up just about 0.1%. Now, in the S&P 500, 7 of the 11 major industry groups are higher right now. Communication services, that's in the lead, and that is home to Meta Platforms. Those shares right now up 2.5%. We also have Dollar Tree after its report. That is one of the big decliners today, down about 10%. And we check markets for you guys all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Report. Alex and Paul.
All right, JT, thanks very much. Really appreciate it. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from National Harbor in Maryland, right across the Potomac, as we sit at the Gaylord National Convention Center at BNY Insight 2025, as we get all the professionals from BNY to talk about what the real issues are and how they're helping their clients navigate this market. One of the issues, of course, is trade. We don't know where it's going to land. And obviously the relationship between U.S. and China really key on that. President Trump now saying that China's Xi is, quote, extremely hard to make a deal with. So we want to go to Enda Curran, a global economy reporter who joins us from D.C., just not on set. And Enda lived for many years in China as well. And what about how China and President Xi operates makes it hard for someone like President Trump to make a deal?
Well, there's clearly something slowing down this process, Alex. If you remember, if you step back, both sides came together in Geneva in last month and said, look, here's an off-ramp for the tariffs. We're going to open up now a negotiating process on the various issues that both sides have. Then you roll that forward. The White House have been messaging and signaling that they expected a call with Xi of China at some point, probably soon. But clearly there's some obstacles in that, and it's probably reflecting what's going on both sides. On the one hand, the U.S. is frustrated that China is not releasing the rare earth minerals as quickly as they would like. That's a key sticking point on the U.S. side. And of course, for China, the U.S. is pushing ahead with the crackdown on visas, student visas for China in particular, and of course has pushed ahead with export controls on sensitive, semiconductor technology to China. So there's a bit of tit for tat going on both sides. Doesn't necessarily lend itself to the kind of atmosphere you would expect for an agreement to be reached on all things trade, and maybe that's what's bubbling up right now. This fact that there's just frustration between them, and they can't really line up the conditions to get that call off the ground.
And I don't know, I've always thought that trade policy is the result of years and years of work, multiple layers of government, multiple arms of government, crafting these agreements, which can be very complex, making sure there's adherence to these, as opposed to subject to just, quote unquote, striking a deal, like buying a house or buying a golf course. Are we wrong on that? Is this something that it can be just treated deal by deal?
No, if you're talking about a trade agreement, like a fully fledged classic trade agreement, that takes many months and years of technical negotiation. It's very legal. It comes down to minutiae. It's not just about tariffs. It's about other non-tariff barriers, for example, as well. It can include all kinds of factors. So to your point, these things take time. Now, you throw in an economy as kind of complex as China is. Parts of it are opened up, parts of it are well sealed off in the rest of the world, up against the US, which of course is wide open, and there's going to be a lot of work to be done there between both of those economies, and clearly none of that can be resolved near term. I think what most observers would say is that in the near term, the best that could be expected is some kind of a deal on merchandise goods, maybe between both economies, some kind of a deal on perhaps bringing down some barriers on the Chinese side, but nothing that would solve any of the bigger structural complaints that the US has about China, near term.
Well, that's kind of the issue, right? Is that China is a really different economy than any of the other main trading partners that the U.S. is dealing with. I mean, it's not like President Xi is elected. It's not like he's an electorate that he needs to respond to. So I just wonder if that just changes kind of the threats and the dynamic that President Trump uses effectively with other nations.
Well, you've got, there's two ways of looking at this. If those people who say, President Trump makes this point, that, the U.S. is China's biggest customer. And if the US pulls up the barriers, then that's going to inflict a lot of pain on their economy. That's one side of that story. And the other side, you have plenty of people who say China can wait this out. They can dig in. They have cards up their sleeves as well. Not least the fact that right now they have this control over the rare earth supply, which is certainly critical for US industry and other industry around the world. So that kind of leans into the argument that this could be a long, drawn-out affair. But ultimately, I think both economies were hurting, and that's why they came to that meeting of minds in Geneva last month. Clearly, there was going to be disruption to U.S. imports, potentially supply chains and supply of goods on shelves in the U.S. I mean, that was clearly coming down the pipes. And on China's side, their industrial and manufacturing sector was hurting too. So clearly, both sides say they've got cards they can play, but both sides are also taking pain on this.
Yep, and thank you so much for your reporting. As always, we'll stay in touch with you. And Curran Bloomberg, Global Economy Reporter on Global Trade. We, of course, are at the BNY Insight Conference here in National Harbor, Maryland. Joining us here today is Leanne Russell, Chief Information Officer and Global Head of Engineering at BNY. You found an engineering degree and you made it to financial services. Nice.
That's impressive.
Very good.
Actually.
I like that. It's good. Talk to us about technology, because we've heard over the last several years coming to this event how much technology is a part of what BNY does to help its clients run their business. So where are you now? How is AI impacting your business and your client's business?
Well, what a time to be an engineer,
right.
Whether you're financial services or not. And technology is really at the heart of everything that we're doing at BNY. We have 3 strategic pillars, and technology goes absolutely through that, whether it's run our company better, be more for our clients, or actually power our culture. And I'd like to start with power our culture, actually, because what we are doing is simply amazing. We have 94% of the bank fully trained on Gen AI, which is incredible. We actually have 1 in 4 of our employees, so 12,000 people building their own agents, and most of them are not even from the engineering function. So we are really infusing AI in everything that we do at the bank.
What are the risks as you move towards this? Like, how do you troubleshoot what potential issues are?
Well, we start with safety, and so I would say AI is in particular a team sport.
Really?
Yeah,
that's
absolutely. So if you look at our legal function, we're the first in the bank to reach 100% training, which has really unlocked how we've been able to unleash AI, but do it in a safe and compliant way. So if you look at the data side of things, we absolutely partner with operations, or we partner with the lines of business. But when it comes to safeguarding our AI, we are lockstep with our compliance, legal, and risk functions. And so that's why having all our employees trained on AI becomes really foundational.
What kind of applications are you hearing from your clients? What do they want from an AI perspective from BNY?
Well, we're a wealth conference, so I think maybe we have more than 50 solutions actually in our AI portfolio, which again is really, really advanced. When BCG would tell you that only 10% of companies have 1 solution in production, we have more than 50. But if we stick with some of the wealth examples right now, I think that's a good place to start. So what do our wealth clients want? They want to be more productive, but they also want to grow their book of work and grow with their clients. So 2 examples I would give in the wealth space. The first of all is around productivity. So we have built a AI-assisted search engine that goes across our NetX 360 and Wove wealth platforms. Now, what did that allow our wealth advisors to do? Well, they can go and get intel on their client portfolios. They can access really complex client statements, and have that all at their fingertips. So instead of spending their time preparing for client meetings, they use their AI-assisted search program to be ready, and then they can spend more time with their clients. On the growth side, we also have a AI super agent. That sounds really fancy. It is really fancy because it's multiple agents talking to one another. And in that example, we have the super agent making sure that they analyze all the data in our ecosystem. For example, we have a wealth call led by our wealth management team. We take data from IPOs, from nonprofits, and smash that all together. What are the nuggets that our clients are really going to be interested in to help them optimize their portfolio?
And then they talk to other, I don't get it. And they talk to other agents?
Yeah, this is a whole brave new world.
But how do you know that they're all saying the right thing?
Well, we can monitor them on the back end. So we don't allow the agents just to go rogue in our environment. So we have very strict controls. So our agents will talk, so in this case, we have about 12 agents talking to one another. It's completely monitored. So there's always a human in the loop to make sure they're not doing anything crazy in our ecosystem.
This sounds expensive to me. So talk to us about the financial commitment that you guys have made, continue to make, because it sounds like it's not cheap.
I will tell you that one of the reasons I think we've been successful at BNY is we are actually have one of the smallest AI teams in any of our competition landscape. And we have really done this as a hub and spoke model. So my engineering hub is tiny compared to most banks. But we have pushed AI out into the hands of everyone. So when we're developing these applications, the best ideas are coming from people who are not engineers, which is absolutely the right way of doing it. So they craft the ideas, they craft what they want to build, and then my very small AI hub enables those applications to come to life. And I would say that small but mighty approach to this has really helped us to be very nimble.
So I go to you and I say, hey, as a financial advisor or whatever, this is what I need, and then you guys build it.
Absolutely.
I mean, I'm dumbing this down.
Well, we work, no, not at all. We work together.
Versus you saying, like, go use these tools.
100%. The best ideas come from outside engineering, and that's why I said it was a team sport.
Do you feel, though, that AI can commoditize this space in a way that is difficult? As in, like, it just becomes so available to everybody that there's no specialty.
I don't see that. I mean, I now use AI in my life every single day, and it just gives me a better starting point. So that instead of like plowing through very manual tasks and emails and things to do, I like have all of that pretty much automated, and then I can go straight to the exciting stuff. And that's again why we wanted AI in the hands of everyone everywhere. That's our mantra at BNY. Because that's how we harness the power of our employees to get really into the exciting stuff and gives them a competitive advantage.
Yeah, good stuff. I mean, I can't say the AI is in every part of my life. I mean, maybe a little bit.
Yeah, but maybe we're like not the right audience for that, or we should be.
We should be, maybe.
Yeah. Well, why don't you come to BNY?
We can get trained. Train me up. Okay, that might have been help. Leanne Russell, Chief Information Officer and Global Head of Engineering at BNY here on site at the BNY Insight Conference in National Harbor, Maryland. We're going to have more coming up from this conference. Lots of smart guests coming up in just moments. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. Right now, stocks are pushing higher. The S&P 500, 13 points higher. That's up 0.2%. 5983 on the index, under 3% below the all-time high for the S&P 500, by the way. Dow Jones Industrial Average right now 59 points higher. That's up 0.1%. And the NASDAQ 100 up 34 points. That's a rise of 0.2%. There's a weakness in the latest data, but despite that, again, as I say, the stock averages are still managing to inch higher. The U.S. services activity contracts for the first time in nearly a year. Yes, below 50, which is the cutoff between expansion and contraction. There is a hint also in this data that stagflation may be ahead. Earlier, we did hear from ADP, the private sector payrolls increasing by 37,000 last month in the U.S. That actually marked the slowest pace in 2 years. It was also lower than all the estimates in a Bloomberg survey of economists. Dollar Tree, among the stocks on the move, they're warning second quarter profit may be down 50% from a year ago. They're blaming tariff-related costs, including 145% levies on some of the products that they sell from China. Dollar Tree shares right now 10% lower. Applied Digital shares, they're soaring, with the digital infrastructure company extending its massive week-to-date rally. Oh, finally, here's one for you. Wall Street tech analyst Dan Ives lending his personal brand to power a new ETF. Wedbush Fund Advisors launching a product tracking the investment picks touted by Dan. This is the Dan Ives Wedbush AI Revolution ETF. It is launching today with the ticker IVES, I-V-E-S. We check the markets for you all day. I wonder if it has multiple colors on it. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, thanks, JT. I really feel like you've made it.
Yes.
If you have an ETF named after you.
I think so.
I feel like that really counts for a lot. Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from the Gaylord National Convention Center right here in Maryland across the Potomac. We are at a BNY Insight 2025 where BNY brings together thousands of leaders within the wealth management, private wealth, alternative assets, investment managers to just talk about the market and find the right tools and products with which to help them help people like us. And joining us now, Ben Harrison, head of client coverage at BNY Pershing, and he joins us right here on site. Good to see you.
Good to see you, too. Thanks for having me.
So as head of client coverage, what does that mean?
So my team covers our wealth intermediary clients across all of BNY Pershing. So we cover registered investment advisors, broker-dealers, trust companies, firms that have clients that they need to deliver advice to.
So what are the key things you guys and your team are focusing on right now in the marketplace?
Look, there is a tremendous amount of complexity and markets to navigate, as you all are aware. So clients really need high-quality advice from financial professionals. And what we do is we really help the firms on our platform navigate that and provide a platform so that they can be productive and leverage the scale of BNY in order to deliver great advice to their clients.
We were just talking to Leanne about AI and the role that AI can play and how important it is. What other stuff do you provide them that helps?
Sure. So AI is one of the big trends that we're talking about here at the conference. But if you think about what advisors need, they really need a platform that can provide one-stop access to deliver financial solutions to their clients, and that's something that we're seeing more demand around. It's about more than just investments. It's also about delivering banking solutions, delivering planning solutions, delivering the full picture of financial products and solutions so that advisors can help solve complex needs for individual investors.
One of the trends we've seen in consumer finance really forever is retail financial advisors leaving the wirehouses, the Merrill Lynch's, the Morgan Stanleys, and going out on their own or going to independent firms. But when they are at Morgan Stanley or Goldman Sachs, they do have a wide range of offerings to provide. Is that something you guys, is that your benchmark, or you look at it differently?
Look, no, we look at it the very same way. The financial services marketplace has done a terrific job in the last decade plus, kind of democratizing tools so that they could be accessed by independent advisors, RIAs in the marketplace, and we look to build out a set of capabilities so that they can have the best access to the most robust institutional tools in the independent space. They get to leverage the power of BNY as an institutional provider to be able to take those solutions to that individual investor.
And what about alternative investing? Like, how has that made its way into what you do and then what you guys provide?
Yeah, the rise of private markets has been substantial in the financial advising space. We have been very focused on connecting private markets and advisors on our platform. And again, in the spirit of that democratization, we've seen the markets move from the private sector being very focused on institutional, and now there's this very significant focus towards the wealth management marketplace, and that's been a showcase here at Insight this year in terms of that connection, making it easier to access the investment solutions, educational tools so that advisors and investors can learn more about private markets, and then at the end of the day, how do you buy and then report on the assets seamlessly in an easy way on a platform akin to the public markets.
You know, I started coming here several years ago, and I was surprised speaking to some of the RIAs here, what allocations they allocate to private or alternative investments. I thought it'd be 5%, 10%. Some of these folks are saying 20%, 30%. So, I mean, that's a big part of their business, a big part of their portfolio. So I would think you guys would have to have a portfolio of offerings to kind of match that demand.
Yeah, absolutely. And as firms get larger, serve clients that are high net worth, ultra high net worth, family office type of clients, that allocation, as you know, increases. So we need to have tools to serve the wide spectrum and continuum from more liquid solutions all the way up to custom private market access.
And then you also have to be able to have the RIAs explain it well to their clients, which is like, so it goes from the product through to you guys, to the RIA, to the actual end user. That's really tricky. Like, how do you guys help them do that?
Look, we have a number of tools that are embedded within our platform to provide access, but you're absolutely right. There is this rising need for education and connection to thought leadership. And one of the things that we do as a company is we have a really unique vantage point because we not only serve individual investors through our Pershing intermediary channel, but we also have significant resources in our asset servicing business and our fund administration business to really connect the market infrastructure and kind of everything that you need to know about the private market ecosystem and take that to the more retail side of the business.
What's the biggest headwind you guys face in your business today?
Look, the biggest headwind is the need for continued focus on growth. We see advisors, there's a significant demand for their services, but we need to unlock more productivity. There's only 300,000 financial advisors in this country, if you can believe it, and they haven't been growing. So we need to make sure that advisors can meet the capacity for the demand that is out there in the market and deliver more advice.
This is where Paul says his youngest offspring is now.
He's in the biz.
He's in the biz, so he's helping.
Yes, exactly.
We need the next gen to come in.
Yeah, exactly. Good stuff. Ben Harrison, head of client coverage at BNY Pershing, joining us here at the BNY conference here, Insight 2025.
Feels like a concert.
It does. It's kind of got lots of loud people running around having a good time, so it's good stuff. Coming up, we are going to check in with Craig Trudell, Bloomberg Global Autos editor, on the Bloomberg Big Take story here. Fatal Tesla crash shows dangers of full self-driving cars. I have my concerns about that as well, but they say the technology, if it's not there today, it's going to be there very soon. So we'll have the latest breakdown there. Looking at the markets, kind of a mixed thing. We got that those ISM data really a little bit concerning there in terms of growth, in terms of inflation. We'll have some more reporting on that going forward, and the markets are mixed here. Well, more coming up. This is Bloomberg. Good morning.
Listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. Happy Hump Day. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from the Gaylord National Convention Center right here in Maryland. We're overlooking the Potomac. We are at BNY Insight 2025 as we talk about wealth management and all the tools and tricks that can be used to help navigate these markets. We're also continuing to take a check-in here on what's happening in the overall market. We want to turn now to today's big take story. It talks about Tesla and what autonomous driving and robo-taxis, say in Austin, as Elon Musk keeps talking about them, are talking about investigating whether the system is actually too dangerous, even if you have a human behind the wheel. Joining us now is Global Auto's editor Craig Trudell. Craig, so here's the title of the big take. A fatal Tesla crash shows the limits of full self-driving. Walk us through the details of what the issues are surrounding completely autonomous vehicles.
Yeah, so I guess maybe the thing to start with is the Teslas that you can buy today that are on the road now are not that, right? They are not autonomous. You can pay extra for a system called full self-driving, and yet it's a misnomer. It's a system that you have to pay attention to at all times. If you get into a crash, it is on you, and we've seen that play out. When Tesla customers have, tried to come after the company says, look, we warned you, we told you that, you're responsible for driving while using this system. The company is trying to make this leap. It's been trying to make this leap for years to eventually get to a point where you do not have to supervise, and even to take it further than that, take the human out from behind the wheel altogether. And we hear Musk, talk about that quite a bit lately because it's something that they're actually trying to commercialize, even just in the next matter of next week or so. There's a lot of questions about how exactly they intend to do that, whether they can do it, especially after he's predicted, year after year that they're on the cusp of doing it. And part of the reason there are doubts is because of the hardware. And I think that's kind of an important aspect of today's story is this particular crash involves, an incident where a driver was using full self-driving, driving into the sun, and that appeared to play a part in the crash, which resulted in a fatality, and it led to a federal investigation that is ongoing.
I mean, this is all very much feels as part of the growing pains as we kind of understand this technology and how it works itself out. So what are the steps that Tesla is taking and that the regulators are taking at this time?
Yeah, so we should acknowledge that this incident happened in November 2023. Tesla has changed. They've made upgrades both to hardware and software. Hardware for certain customers, I should say. But in terms of their approach to the sensor system for their vehicles, Elon Musk has been, really sort of out on a limb and having this view that all you need is cameras. And companies that are also in this space, I think the one people recognize the most is Waymo, the Google company, and they use a mix of camera, radar, and LiDAR, and their sensor set is much more expensive. It's more extensive. These sensors are placed all over the vehicle. But the sort of bet here on the part of Waymo is that is worth it. It will mean this system is safer. What Musk has tried to do is go with the cheaper route, go with the system that he can afford to put in every Tesla, and make this bet that he can develop his way to autonomy faster by sort of leveraging the broader Tesla fleet, even if it means putting cars on the road that draw scrutiny from federal regulators as to whether or not this is unreasonably unsafe.
So, Craig, I think Elon Musk is back at the company. What does that mean? I mean, are you hearing anything like, okay, now we can get back on track. Now we can really move forward, maybe at a higher velocity. What's that mean?
Yeah, I think it's difficult to tell at this point because he's kind of coming back to business means coming back to so many businesses, right? And so on a day-to-day, we're seeing him travel to his various companies, devoting some time and attention to them. But it's not as though he's sort of 100%, focusing in on Tesla and neglecting all of his other businesses. We see him, regularly engaging with, users on X about, troubleshooting problems that they have with that service. I would say he is, more actively engaging there on Tesla Matters, and definitely is trying to sort of send this signal that, okay, it's time to get back to business here. But whether or not that's, resulting in sort of tangible changes at the company, I think remains to be seen.
I guess, quickly, 20 seconds. What's the rush for autonomous driving?
I think 40,000 people die on U.S. roads every year, right? And so the rush, of course, is to bend that, to change that. And I think one of the challenges that you have if you're a company in this space is we've now, seen a lot of companies pursue this for, roughly a decade. That number has not budged. So, we still have a long way to go to where this capability is, putting a dent in those figures.
All right, Craig, thanks a lot. Really appreciate Craig Trudell joining us, Global Autos Editor on Tesla and autonomous driving. For our listeners in the U.S., a reminder, listen to us via satellite radio, Sirius XM Channel 121, access the world's only global audio business network, coast to coast, presented by Oracle. This is Bloomberg.
is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, happy Wednesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio, broadcasting to you live from the BNY Insight 2025 conference. We're at the Gaylord National Convention Center right here in Maryland. We can just beautiful view of Washington, D.C. as we're at National Harbor here. A great show lined up for you. We're going to dig into a lot of the themes here at the BNY Insight 2025 conference. Jennifer Baker will be joining us. She's Global Head of Treasury Services and Depository Receipts at BNY. So we'll get the take on that. We'll also talk about Wells Fargo and that asset cap being lifted yesterday. Huge news and kind of what competition now Wells Fargo can provide to big banks. Michael McKee will join us on what we saw earlier for ISM Services, as well as disappointing ADP. And Ainsley Simmons is Executive Platform Owner, Wealth Services Platform for BNY. Private wealth is all the rage, so how do you really differentiate? But let's kick it all off for you with the Bloomberg Business Flash. And for that, we go to Charlie Pellet.
All right, thank you very much. And here's what's going on. Stocks higher. Treasuries extending this year's surge after weaker than expected economic data this morning reinforced speculation that the Fed will cut rates at least twice this year to prevent an economic recession. Our Michael McKee is going to be all over the eco data for you coming up later on this hour. Right now, the Dow, the S&P, NASDAQ all advancing. S&P at 59.86, up 15 now, up by about 0.3%. The Dow up 68, higher by 0.2%. NASDAQ right now advancing by 0.3%. The Russell 2000 index in the red, down 0.1%. Your 10-year at 4.37%, with the 2-year currently yielding 3.88%. Spot gold up $23 the ounce, up 0.7%, 33.76. And West Texas Intermediate crude down 0.4%. WTI 63.18 a barrel. Activity at U.S. service providers slipped into contraction territory last month, with the ISM index dropping 1.7 points to 49.9. Reaction from Steve Miller, chair of the ISM Services Business Survey Committee, who was a guest this morning on Bloomberg Intelligence.
What we saw bringing the number overall down was for accommodations and food services, and the real estate rental and leasing, although both still in expansion territory, they're not as high or as fast a level of expansion as they were last month.
And you can hear more of that conversation on the Bloomberg Intelligence podcast. You can download it wherever you get your podcasts. Dollar Tree shares are plunging right now, down 10.1% after warning investors that its second quarter profit could be down as much as 50% from a year ago as it deals with tariff-related costs. Now, this outlook pales in comparison to rival Dollar General. Yesterday, its stock surged the most on record after raising its sales and profit guidance. DG, Dollar General, right now down by 2%. But to be sure, we've got Dollar Tree down 10.2%. Recapping, stocks higher, S&P up 16, up by about 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we are live here at National Harbor, Maryland, BNY Insight Conference, talking to a lot of smart people here, learning a lot of good things about this wealth management business. Let's take a look right now at some of the stocks on the move today. I'm Paul Sweeney with Alex Steele, and we're joined by Bloomberg's Norma Linda. Nora, what do you got for us?
Well, I've got eyes on a few stocks this morning. I'm looking at CrowdStrike, that's ticker CRWD. Now, we're seeing shares that are lower. The company did beat expectations for its earnings for the previous quarter, but what the issue is that Wall Street is looking at right now is the fact that they missed expectations for the projected revenue for the current quarter. So we're really seeing shares falling. They fell as much as 9% today, but we are seeing that decline pairing a little bit, down about 4% right now as we speak. Another company that I'm keeping an eye on is Wells Fargo. That's ticker WFC. Of course, this is something that you all have been talking about quite a bit as people have been really looking at the fact that the Fed actually lifted that asset cap that we've been seeing that's been prolonged for 7 years here. This will actually allow the company to be able to compete with a lot of the other bigger banks there across Wall Street. So we're seeing shares of the company a bit higher, about 0.7% higher right now. But of course, this is really good news as it was monumentous for the company. It was expected, but of course, Wall Street is celebrating as it should give the company a little bit more wiggle room as it pertains to really just scaling and competing with its counterparts. And lastly, also keeping an eye on Hewlett-Packard Enterprise. Of course, we know that there's different sides of HP. This is ticker HPE here, and they focus more so on servers. We're seeing the company posting revenue growth that was strong, and they also said that they see a reduced impact for tariffs. We're seeing shares of the company pairing some of their earlier gains. They were up as much as 8.5%, now up about 0.8%. But the company did have a full year profit projection of about 1.78 to 1.90 per share, and they did raise the lower end of their estimate. So they expect revenue to increase by about 7 to 9%. So this is obviously great news for the company here, but lots that I'm keeping an eye on in the space right now.
All right, Nora, thanks a lot. Really appreciate it. Nora Melinda joining us from Bloomberg. And for more conversations just like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports and the biggest winners and losers in the market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else that you listen. All right, let's pick up with one of the stocks that Nora was just talking about, and that is Wells Fargo. Taking a look at that asset cap finally being removed. And what does it then mean after the 7-year-old cap is removed for CEO Charlie Scharf? Joining us now is Hannah Levitt, senior finance reporter from Bloomberg News. Now, Hannah, Wells Fargo has been working at this for a very, very long time. How are they then positioned for this next stage of growth?
Yeah, so this has truly been such a long saga for them. Like, I started covering Wells Fargo more than 7 years ago. They had just gotten put under this cap at the time. I was still enjoying my mid-20s, and, you know, now we are no longer there. For Charlie Scharf, this means that he can finally play offense. He can, you know, they're not capped in size to their level at the end of 2017 anymore. And remember, that's been a huge deal for them along the way. I mean, some of the businesses that he's marked for growth, like the trading business, most notably, that's been constrained because it's more balance sheet heavy, and they haven't been able to allocate that balance sheet because they're restricted. And like, just for context, JP Morgan, the biggest U.S. bank, has grown almost an entire Wells Fargo in terms of assets in the time that Wells has been capped.
Wow. All right, Hannah, full disclosure, I have my checking account with Wells Fargo, but I'm guessing the CEO and the management team there, they want to do something more than that. They think they can do a little bit bigger and better than Paul Sweeney's checking account. So what are some of the businesses, you mentioned trading, are there other areas where they think they can really grow by allocating more capital there?
Yeah, absolutely. So the businesses that Charlie Scharf marked for growth, in this time while he was running the firm, but it was still under the cap, were investment banking and trading and wealth management and credit card. But he was saying on CNBC today that virtually every business, aside from mortgage, which they've said they're shrinking, and remember, Wells Fargo used to be huge in mortgage at one point. They were churning out 1 in every 3 home loans in the country. Every business other than that should grow now, and they have room to do that. But I think those businesses where they've already said that they're targeting growth, that may be where the earliest moves are. We've reported that they're working on a high-end credit card, so that could be something that people see. But yeah, so it really it goes across all of those and beyond now because they don't have this constraint anymore.
So how quickly can they scale in the other parts of their business?
Yeah, well, it's an interesting question, right? Because we've seen, the tales of banks trying to grow too fast and then having, a calamitous blow up. And so that's something that they definitely want to avoid. And Charlie Scharf has talked about that it's not like an on switch day one, but it does give them more flexibility so they can, the most immediate thing is the trading business where they just have capacity today that they didn't have yesterday. But besides that, it's more being able to lean into more enthusiastically those growth initiatives that they've already kind of outlined.
Right. So, Hannah, they now have the regulatory capability to maybe do more, to maybe grow a little bit more quickly. Do they have the balance sheet to do that? Do they have the capital to do that?
Yeah, they have a ton of excess capital, and that's been a theme throughout. I mean, even in the earliest days of the asset cap, like they couldn't deploy that capital, so they gave investors a bigger dividend and more buybacks than they were expecting. It was sort of like a you wouldn't think that would be the outcome, but it was at the time. So they've had excess capital, and also because the banks in general were preparing for the possibility of tougher capital rules that have not panned out. So a lot of them been hoarding capital anyway, sitting on a bunch of extra.
What we're seeing in Wall Street is definitely a competition for talent, particularly if you wrap in hedge funds as well as huge asset managers or private equity. Can Wells Fargo play in that game?
Yeah, they already have been. I mean, they hired Fernando Rivas, who is the head of the corporate investment bank there. He was a major hire from JP Morgan, so that was huge for them. And, they've made other hires over the years. Doug Braunstein is there, another former JPM executive, and he's vice chair. They have Barry Summers running wealth. So they have, they've been able to get talent at the highest level and then, even further down as well.
All right, I think the street kind of like it. The stock's up about 0.7% today. It's up 8.5% year to date, up 30% over the trailing 12 months. So it looks like the street is kind of warming up to a story which has been kind of middle of the road, given some of the regulatory constraints. We'll stay on top of that. Hannah Levitt, thanks so much for joining us, a Bloomberg senior finance reporter on Wells Fargo. Let's get back to the BNY conference here. We're at National Harbor outside in Maryland, right across the river from the district. Jennifer Barker joins us, Global Head of Treasury Services and Depository Receipts at BNY. Jennifer, thanks so much for joining us. First of all, what do you do? I just read that title and I'm not sure, so I need to hear from the expert.
Depository, right?
Right. So first of all, Alex, Paul, thanks so much for having me. So what do? I run two businesses for BNY. The first is our Treasury Services business. So think payments, investments, trade finance.
Okay.
And the second is depository receipts, which helps clients list outside of their home market as a second option through depository receipts.
Oh, okay. Now I got that. Okay.
Yes.
So what's your business like right now? Like, what's on your radar? What are you most thinking about? What are your clients thinking about?
Yeah, so I'll focus on the Treasury Services business for purposes of discussion today at Insight. Three things: artificial intelligence, adjusting to the trade, the supply chains and how they're adjusting, and finally is payment efficiency. There's a lot of options in the industry, but they're also expensive. So how do you modernize payments while also reducing expenses?
So, I mean, just in the last 30, 40 years, global trade has become really global trade, and the money's sloshing all over the world. I don't know how it works, but that's your job.
Exactly.
So what are the big changes in your business over the last 5 to 10 years?
The big changes in that space over the last 5 to 10 years are around really modernizing the infrastructure. Trade finance has historically been extremely manual, like looking at the letters of credits, confirming what's actually in the boxes, did it get shipped, and then sending the payment. That process has historically been quite manual. So through operational efficiency and particularly AI, we've been able to automate and scale a lot of that for ourselves and for our clients. So that gives them faster payment, and that gives them greater comfort in terms of the import and export. The other thing we're seeing, and more recently, probably in the last 12 months, is the adjusting supply chains, right? Particularly since the beginning of this year. Right. So more, less U.S.-China trade, more China, Southeast Asia, and Europe trade. So a lot of what we do is we have that global infrastructure to help our clients no matter where that trade is processed.
I actually didn't know you guys really did that in terms of all the other million things that you guys do as well. How quickly can you guys pivot? How quickly can your clients pivot at this point?
We have one of the largest networks in the industry for trade and partner banks, and so we can pivot very quickly. And so really the question around pivoting is, are you working with a new bank that you haven't worked with before? And because we have the largest network, we can help our clients with that immediately.
How did tariffs and the actual implementation of tariffs, I mean, literally charging that tariff, how does that work, and how does that impact your business? Is there just some dude sitting at the port in L.A. stamping something? I don't know how that works.
So in terms of how tariffs are processed, there's a number of different ways, whether it's directly or through the government. And so we help our clients do that a number of different ways. But typically, the majority of the activity is more around the physical movement of the good and the financing of that.
Okay.
What other things are you guys working on right now? And that's the trade part, but in terms of delivering technology for Treasury Services, for example, what are the new things?
Artificial intelligence is really important, and I know you had my colleague.
Well, you guys have that beaten into you. I'm telling you, because we had on before. Leanne.
Leanne Russell.
Oh yeah,
yes.
she says.
And then Ben too. Ben was talking about it.
And like 93% of our people are trained on AI. I think she's right about that because everybody who comes up here is talking AI. So how does that impact your biz?
Well, it's important in the payment business for a number of reasons. A is it allows us to spend more time with clients. So think about preparing for a client meeting, doing all of the research that you need to do. AI can help us do that. But AI is also an important anomaly detector. So we process $3 trillion of payments, or equivalent every day, U.S. dollar. Wow. So imagine the power of AI to help us see anomalies, so help us with fraud detection. It also helps us process things on a more, what I'd call, smart routing basis. So what is the most optimal path to clear that payment that is the most cost effective, the least amount of risk, et cetera?
How are treasurers changing how they manage risk? And how are they using you to do that? Cash positions, even treasury positions, etc.
That's right, and certainly artificial intelligence helps with that. But the role of the treasurer has become so much more strategic over the last 5 years. It's not just about managing cash flow, it's about a broader risk management strategy. And so using the cash flow forecasting techniques across everything that they do globally and really being able to concentrate that cash globally into whatever currency or into whatever location they want, that helps reduce fraud risk. That also optimizes the interest income and the use of those balances. And that's why things like real-time payments are such an important link to that, because if you can optimize your cash on a real-time basis and then deploy it on a real-time basis, you're optimizing the liquidity in the ecosystem.
Everything can be done with just the phone. I can move cash all around the world, but so can criminals and fraudsters and all that kind of stuff. How do people like you in the system, the backbones of the system, deal with that?
I'm going to say AI.
Yeah, okay.
AI is certainly one tool, but we do that a number of different ways. We spend a lot of time building those solutions and continuing to monitor the effectiveness of those. We also spend a lot of time with regulators, with industry partners to help build out that ecosystem on a broad basis, because it's not just about what we see at BNY, it's about what we see in the ecosystem. So how can we work together to really control that? And so we feel it's important that we take a leadership position there as well.
All right, Jennifer, thank you so much. Really appreciate it, Jennifer Barker, Global Head of Treasury Services and Depository Receipts over at BNY. All right, much more coming up on the program. We're going to go to D.C. while we're in D.C. So we're in Maryland. So we're going to go to D.C.
Right, okay.
With Tyler Kendall. She's on Capitol Hill. She'll be telling us the latest on the great, big, beautiful bill that's now sitting in the Senate. We also talked to Mike McKee, Bloomberg National Economics and Policy Correspondent, on the data that we got today from ADP to ISM Services, and sort of are we looking at that stagflationary scenario where you have lower growth and higher inflation. This is Bloomberg Intelligence. Happy Wednesday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We got the S&P 500 index edging higher. Healthcare and communication services companies leading the charge. Dollar slip. Bond yields declined across the curve. Right now, the S&P up 12. Gain there of 0.2%. The Dow up 56, up 0.1%. NASDAQ up 57, up 0.3%. To be sure, we are off session highs on the S&P again, up 11 now, up 0.2%. The Bloomberg Mag 7 index a little changed, up under 0.1%, with the 10-year at 4.37%, the 2-year 3.88%. Spot gold up $20 the ounce, $33.73, now up 0.6%. A retreat for West Texas Intermediate crude down 1.1%, $62.71 a barrel on WTI, and Bitcoin down 0.4%, $105,381 on Bitcoin. Earnings news: Hewlett-Packard Enterprise reporting quarterly revenue that topped estimates. HPE up by 1.3%. CrowdStrike lower after the cybersecurity company projected revenue for the current quarter that trailed estimates. Right now, CrowdStrike down 4.4%. Snowflake higher. Analysts positive on the software company in the wake of its summit event. Snowflake up by 0.4%. After the close of trading today, we'll be hearing from MongoDB. That stock up by 2.5%. Recapping, S&P up 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, live here in the BNY Insight 2025 Investor Conference. We are in here, National Harbor, Maryland, at the beautiful facility here. Good stuff happening. The big, beautiful bill, President Trump, his tax bill, made it through the House. It's now with the Senate. We're hearing from some senators that some changes may need to be made, including perhaps SALT tax. Hopefully they're in consultation with Matt Miller. That is near and dear to his heart. But let's go to Tyler Kendall, Bloomberg Television Washington correspondent. Tyler, where are we with the Senate and its review of this tax legislation?
Yeah, hey, Paul. Well, currently, President Trump is trying to ramp up the pressure on senators to ultimately advance this legislation, because we know that a lot of them have some pretty conflicting demands at the moment when it comes to what they ultimately want to change in this House bill. And a lot of them are starting to dig in their heels. Now, we should say, by and large, there's agreement about sort of the core pillars of this package when it comes to the tax cuts. There's also agreement that they want to get it done quickly, but in order to reach that self-imposed July 4th deadline, they're going to have to come to some sort of agreement and quickly to get this out the door. Now, perhaps the loudest group emerging here is a group of Republicans really pitching themselves as fiscal hawks, as a new CBO analysis out basically in the last hour predicts that the House version of this bill will add $2.4 trillion to the deficit over the next decade. I had the chance to catch up with some of those members, including Rick Scott and Ron Johnson, who told me that the White House is willing to work with them, but at this point they're not sure just how much deeper spending cuts they're really going to see in this bill.
What are the deeper sticking points? I guess a better question is, we heard sticking points in the House as well, and then President Trump worked the phone and got it done. Is the same thing going to work this time?
Well, we're going to have to see. Likely, we know he's going to start ramping up the pressure, but we should put into context that perhaps senators might have a little bit more leverage here compared to House members because they serve longer terms. They're there for 6 years, so the threats of primaries don't really stick as much as they do in the upper chamber as they do when it comes to the lower chamber. But there's a whole lot here that potentially could be up for changes. We know that these fiscal hawks want to see some deeper spending cuts. They're also raising concerns about what some of those sweetener tax priorities ultimately mean for incentivizing growth. They're like no taxes on tips or overtime pay, something that this White House says they do not want these senators to cut, but then square those concerns with concerns from Republicans about changes to benefit programs like Medicaid. As we know, one analysis that we cite here at Bloomberg News predicts that 7.7 million people could lose their coverage through 2034 if there is a shifting in eligibility requirements. So there really is a tricky needle to thread here for both the White House and these senators as they try to move this legislation along.
So it's really interesting, Tyler. I'm going to be the voice of maybe the aggrieved American taxpayer when we say nobody really cares about the deficit, and they're going to pass whatever tax law they need, and deficit be damned, if you will. Is that a school of thought down there in D.C. these days?
Well, it's hard because, Paul, the issue with doing this as one big, beautiful bill is that they need to get done all these other priorities. And it is clear that prioritizing these tax cuts really did come ahead of perhaps deeper spending cuts down the line. They really front-loaded the tax cuts in the House version. And you do have these Republicans trying to say that they are trying to limit deficit spending here. But at the end of the day, they need to accomplish these other tax priorities. And you often hear from the White House, perhaps, yes, this will contribute to long-term debt, but they are more focused on trying to stabilize that debt to GDP ratio. And they say that will happen if they're able to implement what they think will be pro-growth policies. But you really are starting to see some of these senators dig in, like Senator Ron Johnson, who's trying to challenge the White House when it comes to those numbers. Very quickly, I will also add one of those important tax sweeteners that we saw, since you mentioned it before, of course, was the SALT cap. And we are learning that that could likely see some changes when it comes to what the Senate ends up doing with the version of this legislation. Now, we did have Senator Kevin Cramer, a Republican from North Dakota, on Bloomberg television the other day, who said potentially the sweet spot could be a number around $20,000 or $30,000. Of course, that is lower than the $40,000 cap that the House bill plans to lift that number ultimately to. I did have a chance to quickly ask Senate Majority Leader John Thune what he thinks that sweet spot could be, and he told me that they are currently working out the details.
Working it out, the countdown clock. All right,
Yep.
Tyler, thanks a lot. Tyler Kendall, Bloomberg Television, Washington correspondent, joining us there. So the economic data we keep hearing is going to be a few months off till we see any negativity hit the hard data. But let's just go over some of the data we got today. We got the ADP employment number disappointing, coming in at just 37,000 jobs. Then you had the ISM services number, and it was pretty rough. You had the overall index below 50. That's contraction territory. But the big thing was new orders coming in at the lowest level, like we saw back in April 2020. No one likes April of 2020. Also back in 2008, 2009. No one liked 2008 and 2009. Joining us now for more, Michael McKee, Bloomberg International Economics and Policy Correspondent. Mike, is this a stagflation kind of thing?
Well, if you took it at face value, it is, in the sense that we're looking at prices going up and activity going down. What we haven't seen is, as you note, the hard data completely reflecting this. We're starting to get numbers that do. Remember, we saw a big drop in imports during the last month, and that was largely because so much was pulled forward because of the impending tariffs. And so that will have an impact on second quarter growth. But we're not at this point able to say exactly where we go from there. It looks like services are bad, and I know you had the director of the ISM services on earlier, and he said that the new orders really are looking bad right now, and that's kind of a scary thought.
Hey, Mike, in our group chat here, I dropped in a note earlier that I said, maybe in a few months' time, we're going to look back on today as the beginning of something, whether it's stagflation or whether it's a recession, or whether it's inflation really rearing its head. Am I being overdramatic there?
I don't know if I would say today, but it could be this week. Let's see what happens on Friday with the jobs report. This may be sort of the last hurrah week where we see numbers that are okay in terms of those things. The big question is going to be whether ADP reflects reality or not, because any number like that for Friday's payrolls figures would really scare the pants off Wall Street and get everybody excited about Fed rate cuts, even if they're not going to happen right away. So, yes, this could be
not mincing those
a time
words
to remember.
Nice.
Nevertheless, then how do we think about ADP versus the jolts that we got yesterday? I was thinking, is it the companies just aren't hiring, but they're not necessarily laying off either? How do we square those two together in the broader economic jobs picture?
Well, it's not easy to square the two, except that you note that that the JOLTS rather is 2 months old, so it is past data, and things could certainly have changed, which ADP suggests might be the case. Now, with ADP, what we're not seeing is whether companies were letting anybody go. and whether they have openings that they want to fill. It just tells you they didn't hire very many people or add to payrolls. Now, it has historically been that ADP is usually way off from what the private sector hiring is in the non-farm payrolls figure. So we'll have to see how that proves out on Friday. Last month, ADP said there were only 60,000 private sector jobs created, and the government found 167,000. So I don't know whether ADP or JOLTS gives us a better idea of what's going on, but I don't think people are going to pay a whole lot of attention to either one once we get the Friday figures.
Tariffs, Mike. We have so many tariffs, they're very hard to kind of keep them, keep them in focus here. There's so many out there. Do we have any idea kind of what percentage of the tariffs have found their way into the economy at this stage, or is it just too early to tell here?
Well, there have been some rough back-of-the-envelope calculations that about what Bloomberg Economics has done one. About 6% of U.S. imports have been affected by tariffs because we're looking at autos and we're looking at steel and aluminum, basically. More tariffs likely coming. The Congressional Budget Office just a short time ago put out a couple of new reports, one suggesting that the big, beautiful bill is going to add something like $10 trillion on to the overall deficits over a period of years, and then that the tariffs would reduce that by about $3 trillion. If all the tariffs were carried through, and that's the caveat that the CBO puts on their numbers today, that they don't know what tariffs are actually going to be imposed. So that's the hard part for everybody at the moment is how much are we going to tariff people and who are we going to tariff?
Mike, what's that nerdy chart that you have on your desktop right now?
Actually, I was looking at steel today, and because of you, of course, Alex Steele.
Obviously,
the fact that when Trump put on his tariffs in 2017, we saw a short-term rise in employment at steel mills, but then that rolled over, and the number of jobs in the downstream, people who use steel in their industries, fabricated metal producers, really fell significantly, lost about 75,000 jobs there. So it'll be something we're going to have to watch those two numbers in Friday and the following month's reports on how the steel tariffs are affecting the economy.
Yeah, I love that.
So I think I better come in on Friday. It's going to be a big day.
Oh, are you going to be off Friday?
No, I think I'll be in. It's jobs day.
The thing is from what we've been learning, like maybe we'll get little cracks, but it's really going to be in the next 2 months maybe that we'll get hard data. So I feel like you could still get that on the Jersey Shore, but
it's going to be rainy.
TBD. Well, then definitely come in for that. All right. Thanks, Mike. Really appreciate it. Michael McKee, Bloomberg National Economics and Policy Correspondent. All right, coming up, we'll be talking to Ainsley Simmons, Executive Platform Owner, Wealth Service Platform for BNY. We'll talk about the technology changes in wealth management right here at BNY Insight 2025. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. Weaker than expected economic data has led to speculation that the Fed will cut rates at least twice this year to prevent a recession. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. S&P right now up 0.2%, higher by 10. The Dow up 30, up less than 0.1%. NASDAQ up 60. That is a gain of 0.3%. 10-year 4.38%. The 2-year 3.88%. Gold up 0.5%, 33.71 the ounce. And West Texas Intermediate crude down 1%, 62.78 a barrel on WTI. Industry data suggests there could be cracks forming in America's labor market. And with that story, here's Bloomberg's Vinny Del Giudice.
The payroll processor, ADP, says businesses added workers at the slowest pace in 2 years in May, a gain of 37,000, well below last year's monthly average. The slowdown in hiring points to high anxiety about erratic White House economic policies. On Friday, the government issues its monthly employment report, and economists are forecasting slower payroll growth in the official data, too. Vinny Del Giudice, Bloomberg Radio.
Tesla shares now down 3.2%. Tesla's vehicle shipments from its China factory fell for an 8th straight month. Meanwhile, a ship carrying about 3,000 cars to Mexico was abandoned in the middle of the Pacific Ocean after catching fire. Smoke was first seen coming from a deck on the morning Midas that was carrying electric vehicles. Again, we've got stocks higher. S&P right now up 11, gain there of 0.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele, Paul Sweeney. We are live here at the BNY Insight Conference, National Harbor, Maryland, at the Gaylord Convention Center. Fantastic facility. We're meeting a lot of really smart people. And I would say the theme across these 2 days, speaking to the BNY folks, is AI and how it's impacting global financial services. And I think that's going to be part of our next guest as well.
I think so.
Ainsley Simmons, executive platform owner, wealth service platform for BNY. The one guest we didn't get that we have to get is the person who gives titles and designs the titles. The wording is phenomenal. Ainsley, thanks so much for joining us here. Again, a common theme, your colleagues, all parts of the business of BNY, is how AI is, in fact, impacting the business. How's it impacting your business in the wealth platform?
Yeah, so the wealth management industry is facing a bit of a crisis, right? There are not enough advisors to service all the demand that's out there. More people need advice than the industry is really able to give. So that means unless we can manufacture new advisors from thin air, there's a productivity issue. We need to make the advisors we have more productive so they can spend more time with clients. And there's an incredible opportunity for AI there. AI at its core is helping us be more productive. It helps us research faster. It helps us get tasks done faster. And there's an incredible opportunity in wealth management. There are so many tasks that advisors do that they really don't need to do.
So let's say that I entered the private wealth management business 20 years ago. Yeah. How does it look now versus then? Like, what would my experience now look like?
Yeah, so 20 years ago, you probably would have sat down with someone, in an office. It would have been pads of paper, and then they would have gone off for a couple weeks and come back with, a plan. Today, you're probably doing that on a laptop, and, in a couple days, you're probably settling in on what's the right strategy for you. I think in the next 5 to 10 years, you'll be doing that real time. You'll be doing it with the advisor right in front of them. They'll be trying on different strategies. You'll be making decisions together. And when you walk out, you're going to feel fully confident that you're headed in the right direction, having explored all the options. And I think that really is where the industry needs to go to get to where I think we all need to be, which is to offer more individuals the opportunity to have that kind of terrific experience with an advisor.
My number 3 offspring, as Alex well knows, is in the wealth management business. He's recently out of college a couple of years, and he's with a really good firm, and I think that's a great opportunity. Why aren't there more people? Because when I was in school, if BNY came to my campus, we'd jump all over that.
Yeah, I mean, I think there's so many great job opportunities for young graduates these days. I think there's a lot of headlines about how tough job markets are, but they still are faced with a lot of opportunities. They can, they can be influencers. There's lots of things these young kids can do. I think wealth management needs to continue to work on, selling the profession as really the noble profession that it is, that you get to serve your community, that you get to help other people. And I think somewhere in the 80s and 90s, it got a little tainted with,
my generation.
Yeah, Wall Street, the greed is good kind of things.
Yeah.
It's not that at all. Every advisor here that I know is really focused on serving their communities, serving, really close relationships, friends, that they feel very responsible for and really attuned to. So I think it is a terrific profession. I think, the industry needs to continue to move it forward. But yeah, there still is a little bit of a halo, I think, from some things in the past.
I just think it would be really amazing if you could sit down with an advisor or even like online and real time be like, well, here's what this product is.
Yeah, and
if you invest in this is the return. Like, that's amazing.
Yeah,
that's where we're going.
Well, so the talk I gave yesterday about the platform of tomorrow really highlighted that interplay. That true interplay between advisors and investors.
Usually what happens is you say, I have this goal, I need to change this goal, and then it takes like a couple weeks to get back with the product.
I'll get back to you, exactly.
And then it takes like, let me understand the product more, which is fine.
Yeah. It's just not real time, and you're not making decisions together. And that's where I really think the platform of tomorrow that really connects investors and advisors in a seamless experience is the future. And that is what we're focused on here at BNY. We are focused on Wolf Platform, which is the platform that connects advisors and investors in one singular infrastructure and uses the same common data set and operating system to run those two sides of the equation. And that makes that interplay possible. So I really see that future as not only possible, but likely.
I even think just being the apps I have on my phone now, including, my bigger accounts at investment banks and stuff, it's every month I'll pop it open. Oh, there's that feature. That's new. That's new.
Yeah.
So it's constant innovation, I think, on the part of financial services writ large. What's the biggest, aside from attracting talented wealth advisors, what's the big challenge for you? Is it going to your CFO and saying, I need more money to invest more in the technology of my platform?
Well, thankfully, that's not my challenge because BNY is fully committed to investing in this wealth platform that we call Wolf Platform. So that's not my challenge. I think the challenge is really, we have so many clients onboarding and there's so many interesting things that people want to do. It's really just prioritizing and staying really focused on delivering what's going to work for most clients first, and then sort of go from there. So we just launched our new fixed income trading product here. We launched our new UMA product. Those were like top of the list for a lot of our clients that we're onboarding, and just keeping that sort of prioritization going and being really tight-fisted on trying not to do too much. That really is my biggest challenge, to be honest.
Really interesting. It was really great to chat with you. Thank you so much.
Thank you.
Ainsley Simmons, Executive Platform Owner, Wealth Services Platform for BNY Pershing. Does your third offspring like the private wealth management?
He does. It's not. It wasn't a natural fit. Like for me, it was just preordained. I was going to Wall Street back in the day. This was a little bit of a, oh, this is interesting. And he's been in it for 3 years. And I say, just keep grinding, keep learning. And I sent him your CEO's talking points to him yesterday because your talking points was to say to the industry, and it's like, boy, we need more people. We need more smart people. There's huge dollars involved. I said, just keep plugging away, dude.
Is it? He's enjoying it. It's just sort of you're grinding, like you're getting used to it.
Yeah, I mean it's hard work. They work them hard, and I said, you're making good money. And there's a lot of money out there. You're actually, I don't know if you care about that That's
But you
all I
should.
cared back in the day, you know.
Anyway, really interesting stuff. And we will continue the conversation as we wrap up here at the conference. We're going to have one more segment before Paul and I run to Union Station. Stephanie Pierce is Deputy Head of BNY Investments. She'll be joining us on market and all the economic uncertainty that we are seeing. Just look at the economic data that we saw this morning for any indication. This is Bloomberg.
Listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Wednesday. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from BNY Insight 2025. We are at the Gaylord National Convention Center right here in Maryland. Beautiful view of the Potomac as we sit right here on National Harbor. So as we round out our time here at BNY Invest Insight 2025, how do you take a look at the broader landscape? We have a bit into the Treasury market. We have a little bit mixed in the equity market. What do you do? Well, joining us now is Stephanie Pierce, a Deputy Head of BNY Investments. Your job can't be easy right now, right? Because at one hand, you have so much uncertainty, and some of that uncertainty could wind up to be structural in some ways. But your clients are going to be looking for long-term advice next, 10, 20, 30 years. How do you square those two?
It's a really interesting time. If you just took one look at the markets this morning with the economic data that we saw and what's likely to happen tomorrow, as you said, there could not be more urgency to be solving clients' needs for solutions, not products, but solutions. Because this is a time where if growth is going to slow and inflation is going to heat up, right, they're nervous, they're concerned. Nobody knows what's going to happen. That's the headline, is uncertainty. So we're very focused on providing solutions, and we've launched some really exciting ones at this conference.
What are you hearing from your clients these days? Are they do they react to the news like the markets tend to react to the news? Are they successful at taking that long-term view? Hand-holding? What are you hearing from your advisors?
Yeah, so advisors are definitely hand-holding clients, and our job is to empower them to do that. So one of the things, Paul, that we introduced just yesterday at this conference is our Portfolio Flex solution, which does exactly that. This is an opportunity for advisors to hold the hands of clients and create customized solutions at scale. So it's essentially an integrated managed account solution built into the Wove platform. And I like to liken it to the bowling with bumpers. So if you think about a bowling experience with a kid who you don't want their bowling ball to go into the gutter, right? These portfolio solutions effectively do that. They keep you in the middle, making sure you hit the pins and don't go to the side. And we do that all for the advisor, which allows them more time with their clients to have those conversations and hold their hand in this environment.
Can you give me an example of what that actually means in practicality?
Sure. So the Portfolio Flex solution is embedded in Wove. We do turnkey portfolio rebalancing, trading, and we give them a standard set of 5 asset allocations, depending on the client's risk profile. We also curate a set of investment products within each asset class, in each asset allocation, that are buy-rated solutions by our investment team. So for the advisor, they still have lots of choice and customization, but then within that, we're doing all the rebalancing. So markets go up or down, we make sure that they rebalance back to the targeted asset allocation, and all of the products underneath are curated by our team and embedded in our research process. So it gives them a lot of hand-holding to be able to then in turn customize for the client, knowing that they're backstopped and powered by the horsepower that we have at BNY.
I think one of the things that probably surprised Alex and I a little bit is the talk about alternatives and how prevalent alternative investments are for your clients here. And again, I was just speaking for myself, I was surprised that it was more than a token 5 or 10%, that for a lot of clients, a lot of portfolios, it's materially more than that. Talk to us about how you think about alternatives.
Absolutely. So we have a whole team that, again, curates alternative investments for our advisors and for their clients. So it's essentially a manager researcher due diligence team. And we actually, have part of that is embedded in our research. And so what we like to do is make sure that we're utilizing best-of-breed managers for our clients. And also that, we really do the homework, right? If they say there's a building, we want to make sure there's a building. If they say that there's a team in the building, we want to make sure there's a team in the building. And in alternatives where the transparency and liquidity is not quite the same as it is in traditional markets, that's where that kind of homework is really important. And as you said, it's a newer asset class, Paul, for advisors. So part of the work we do is also helping them think about how to size that within the overall asset allocation based on the client's risk profile and return target.
How hard is it for the knowledge base to continue to evolve and move? The alt space is moving really fast. So how hard is it for you guys, and how hard is it for your clients?
It's a lot to keep up with. At BNY, because of the ecosystem that we live in, where we are a very large custodian to many of these managers, as well as doing the investment pieces, as well as doing trading and all the other things we do, we tend to know a little bit more about this market front to back. And so as trends are evolving, like semi-liquid alternatives, with interval funds, right, the public-private partnerships, BNY is involved with those players in not just an investment capacity, but in sort of that surround sound front to back. So we understand the liquidity, we understand, what kind of cash is being held in the portfolio or liquid assets to make sure that if it's a semi-liquid structure, that it works well from a client experience perspective. So that really helps us in helping curate and select those strategies for our clients.
Stephanie, thank you so much for joining us. Really appreciate it. Stephanie Pierce, Deputy Head of BNY Investments, on the board of the U.S. Ski and Snowboard. Awesome. That is very cool. I like that. Yeah, she's on the board of U.S.
Cortina 2026.
Oh, there we go. All right, there we go. I'm all set for that. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by ShipStation. Stay with us. Top stories coming up throughout the day. Alex and I finish up our time here. 2 days has been great in the nation's capital, and the BNY Inside people always take care of us.
Beautiful weather, too,
yes,
by the way.
Fantastic weather.
Side note on that.
Yep.
Markets, gotta say, going absolutely nowhere. You have the NASDAQ up just 0.2%, the S&P up 0.1%, the Dow's now flat. Volume is a little bit mixed, so stocks holding in relative to the data that we got from ADP as well as ISM Services. Paul and I will be back in the studio tomorrow. We will see you there. Good luck trading. Happy Wednesday. This is Bloomberg Intelligence.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. There's been an arrest in connection with last month's bombing at a Palm Springs, California fertility clinic.
Daniel Park of Kent, Washington was arrested last night at New York's JFK Airport. It's not clear what charges he will face or what his role in the bombing was. Investigators believe the car bomber, Guy Edward Barkus, died in the explosion. They said at the time they were investigating whether Barkus had any help. The FBI isn't sure if he intended to die in the blast. Park may have provided material support for the bombing. Michael Wallace, CBS News, New York.
The Trump tariffs on steel and aluminum imports doubled today to 50%. CBS's Kelly O'Grady.
Think about a car. What goes into a big portion of the car? Steel and aluminum. You're a soda drinker, your aluminum and steel cans, right? There's a big portion of that.
The Congressional Budget Office estimates over 10 years on the Trump budget bill will cut taxes by $3.7 trillion.
The nonpartisan CBO's estimate says in addition to a deficit increase of $2.4 trillion, the tax cut and spending proposal will increase the number of people without health insurance by 10.9 million. Some Republicans, including Kentucky Senator Rand Paul, have opposed an increase in the nation's debt. President Trump wants to sign the bill into law by July 4th. Allison Keyes, CBS News, Washington.
Well, now to New York and the Sean Combs sex trafficking trial.
We're hearing from Frank Piazza. He's a forensic video expert who's testifying about technical aspects of this footage that the jury has seen. It goes towards underlying allegations of bribery and obstruction of justice that are part of the racketeering conspiracy charge against Combs. We're also expecting to hear from Brianna Bongolan. She's a friend of Cassie Ventura's who's filed her own civil lawsuit against Combs. She's accused him of dangling her off of a balcony and also of violently abusing her. Katrina Kaufman, CBS News, New York.
Tulsa's Mayor Monroe Nichols applauds the $105 million reparations plan 100 years after the race massacre that left about 300 black residents dead.
My goal is to make sure that we take all the steps we possibly can to mitigate the harms of the 1921 race massacre.
Well, CBS's Jim Krasula has more on labor unrest at FedEx.
We are fed up with management. That was the message from FedEx pilots, including Jose Nieves, who rallied outside the company's headquarters in Memphis, Tennessee.
We are concerned about the future of the company. We are concerned and frustrated with the progress in our negotiations that has been over 4 years.
The FedEx pilots say the company is putting profits over people.
The Dow is up 22 points. This is CBS News. A new report looks at how we feel about tipping.
Bankrate.com's annual survey finds Americans are tipping more often after years of decline, but 63% are just plain turned off by being constantly asked to reward retail workers. Analyst Ted Rossman.
Common negative views are that businesses should pay their staff better rather than relying so much on tips, and 38% say they're annoyed with those pre-entered tip screens.
Older generations are more likely to tip, with 20% being the sweet spot.
One thing's for sure, I don't see tipping going
going away anytime soon.
Brad Gibson for CBS News.
The New York Times reports the Washington Post is considering a plan which has been named Ripple to have non-professional writers contribute to its opinion columns. The writers would get help from an AI writing coach, and human editors would review the pieces before publication outside the paper's paywall. I'm Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
President Trump leans on Senate Republicans to pass his tax and spending bill just as Elon Musk tries to kill it. Welcome to the Wednesday edition with moving parts on both ends of Pennsylvania Avenue. We'll be joined ahead with breaking news from Bloomberg's Laura Davison with the latest. It's debate night in New York, 9 on stage, and we're going to look at the mayor's race along with some major gubernatorial primaries set for next week that no one's talking about. New Jersey, Virginia, we see you, and we'll discuss with Matthew Klein at the Cook Political Report. And we'll spend some time today with Nathan Dean at Bloomberg Intelligence after the big breaker, the Fed taking the shackles off Wells Fargo, lifting the asset cap that the bank has enjoyed for the past 7 years. We start, as always, on Wall Street with much to talk about this hour. Charlie Pellet has the latest on the markets in New York to get us rolling here. Charlie, what do you see?
Right now, looking at a market that's a little changed. You mentioned Wells Fargo. That stock up by 1%. Putting that in context right now, we have got the S&P 500 index up 0.1%, higher by 6, well off session highs. Dow Industrial is up by 10. That is a gain of just under 0.1%. The Nasdaq Composite Index up 37 now, up by about 0.2%. The Bloomberg Mag 7 Index, which had been higher for much of the morning, trading lower now. Little change, down under 0.1%. 10-year at 4.35%, with a 2-year currently yielding 3.87%. Spot gold is up $20 the ounce, higher by about 0.6%. The precious metal at $33.73. Right now, we have got West Texas Intermediate crude down 1.1%, $62.71 a barrel. On trade, President Trump says Chinese President Xi Jinping is, quote, extremely hard to make a deal with. Sarah Hunt, his chief market strategist at Alpine Woods Capital Investors, interviewed on Bloomberg Daybreak. She told us she is optimistic that despite those Trump comments, the U.S. and China will reach a trade deal.
I think that there has been enough trade exhaustion over the last several days or several months and weeks that there is some feeling that there will be a conclusion that will be positive for markets because it would be devastating to both economies. So I think that there is a little bit of people starting to look through some of the rhetoric and expect that something will get done.
Sarah Hunt of Alpine Woods Capital Investors. Dollar Tree plunging after warning investors its second quarter profit could be down as much as 50% from a year ago as it deals with tariff-related costs. Dollar Tree right now down 6.8%. Yesterday we heard from Dollar General. That stock lower today as well, down by 1.3%. Bottom line here, stocks are fading, still in the green, little change. The key takeaway at midday, S&P up 5, up 0.1%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you, my friend. Good to see Charlie Pellet every day live from Washington. I am Joe Matthew, and it's great to have you with us here on Bloomberg Radio, satellite radio channel 121, and on YouTube, where you can always watch us live, along with all of our programs from Washington and New York. Search Bloomberg Business News Live, and you'll find our live stream. Bloomberg Originals taking the program as well. You can't hide from us. I'll tell you about the podcast later, because you might have some stuff to catch up on today. The tariffs have taken effect. It happened while you were sleeping, presumably. 12:01 a.m. Tariffs on steel and aluminum doubling to 50% today. I haven't seen too many ripples in the markets because, of course, the president told us about this on Friday night in the big rally. This is something that we're going to be talking about throughout the day, the economic impacts, the tariffs, the CBO, by the way, talking about them actually scoring the tariff program. We'll discuss with Laura Davison in a moment, but we've got a big, beautiful bill to wrangle here, and the president's going to have another opportunity with Senate Republicans. They've been meeting and talking every day so far this week. Interesting to note, President Trump has not been, right? Another day here with at least so far no public events scheduled for a man who tends to spend a lot of time on camera on a day that ends in Y. Senate Republicans today holding an afternoon confab, talk about plans for the bill. Then the Senate Finance Committee, Republicans will go to the White House for a party. You're right, producer James reminding me, big soiree at the White House tonight. This is for the new staffers, presumably. They're going to party under the stars in Washington. John Thune, I don't know, maybe he'll be there. He's going to be leading this delegation across town to the White House a little bit later on today to talk with President Trump. Getting into the idea of changes on the tax bill. Here's what he said earlier when Bloomberg's Tyler Kendall caught up with him.
It is a concern, which is why we need to do something about it, and that's what this whole effort is all about. So, yes, we're paying attention to the markets. I think the markets in the end are going to react very favorably to the spending reductions we're going to do and the pro-growth policies you're going to see in this legislation.
If you were with us on YouTube, you saw she almost had to follow him into the elevator. Bond market reaction she's asking about on the, were we calling it the OBA? Is that still, BBB? I'm getting confused.
You know, Trump has shortened it from the One Big Beautiful Bill to just the Big Beautiful Bill, BBB, which is, of course, the same thing as Biden's signature and then failed legislation. So
it's a loop tape, but in my mind, I can't. So it's Wednesday. We got a couple new wrinkles here. Laura Davison is with us, Bloomberg's Washington Deputy Bureau Chief, who has to grind through this coverage on every story that comes out of Washington having to do with politics. So, all right, let's get into this. The meeting today, John Thune and company go to the White House. All they're going to talk about is Elon Musk, right?
You know, we'll see where Trump lands on that. But of course, they're getting very anxious about the One Big Beautiful Bill. Trump has, started already this week calling up senators, sort of strong-arming them, blasting some of them. Rand Paul, for example, for his opposition of the bill. So this is probably going to be a little bit of a tense meeting in that you've got Trump, who is really at this point does not care so much about the details, just wants to get it done, where you've got a lot of Republican senators who have, somewhat more Medicaid cuts, somewhat less Medicaid cuts. Obviously, that's in direct opposition. You have folks that are, trying to address this revenge tax issue in the bill. That this really has markets worried. This Section 899. This would be a huge thing for Wall Street and investors.
Take notes while she's talking. This is all of a sudden we're hearing about this in the last 24 hours.
Tucked into the House bill, really didn't get a lot of attention, and then bond traders started looking through it and said, "Look, this could be a huge tax on basically anyone who owns U.S. Treasuries or have other interests that are non-U.S. people investing in the U.S." So a huge issue that they've got to address. Thune also last night said SALT could also change. This was a very hard-fought negotiation in the House, but the senators, Republican senators, they don't care about SALT, and they want to use some of that revenue, some of that money that the New York and California House members were able to get to pay for some of the other priorities they have. We do know one thing is out. There had been some speculation by John Thune himself about the estate tax, repealing that in this legislation. This is a political fight that Republicans have had, going back for decades. You remember they branded it the death tax. Thune has been at the forefront of that fight and came out and said earlier today that he thinks it's not likely. This is really sort of a frank concession and admission that Republicans are not going to get everything they want in this bill. This is going to have to be a negotiation, and even some of the Senate Majority Leader's priorities are already off the table.
Wow. Well, this is moving quickly all of a sudden. Everybody's shrugging off Elon Musk. That seemed like a big moment yesterday. He's fired off, 15 different posts on X, I think, that we counted over a 6-hour period, 13 overnight, following the big one in which he said, "Shame on those who voted for it. You know you did wrong." This isn't making waves in Washington. Democrats are talking about it more, as you'd suspect, but now Republicans say, well, he didn't want to repeal the EV tax credits. What do you expect?
It's becoming more and more clear that Musk made a lot of enemies during his time in Washington, and I think Republicans are very happy that he's no longer in his official position and can, in many cases, just ignore him. You have a lot of, Mike Johnson had a press conference this morning, said he's really disappointed in Musk. He also noted, interestingly, that he had a phone call with Musk on Monday night where Musk told him, "Hey, I'm going to make sure that you are able to keep the House. I'm going to spend on some of these races so that Republicans can keep their majority." Mike Johnson called him back last night just to sort of check in, and especially after the barrage of critical comments. Musk did not pick up the phone.
He didn't pick up the phone. You're screening my calls? I'm the Speaker of the House. Well, it does make you wonder if he ever comes back, because there was supposed to be this, you're not done with me yet kind of thing. Sounds like Washington might be done with Elon Musk. You made a really interesting remark there. This tax on Treasury holders is something that emerged late in the game after the House passed it because people are just reading the bill now. Marjorie Taylor Greene. Hey, I haven't read a section banning states from passing their own AI regulations. I'm a no now. Mike Flood. Hadn't read the section, would make it harder for judges to hold officials in contempt. Going to have to be a no now unless that comes out. We're moving too fast.
The House moved incredibly fast, way faster than anyone thought they were able to. You remember there was basically 2 overnights that Mike Johnson pulled to just jam this bill through before the Memorial Day holiday. So no one read it. No one was able to read it, including reporters, including anyone. We didn't actually have the final text of the bill until just a couple of hours before the bill actually passed on the House floor. The Senate's going to move a bit slower, though they are talking about this very ambitious timeline, passing it before July 4th. Yeah. Of course, we may actually get a first cut of the bill text as soon as next weekend is looking like when that might come out. But still, that's only a couple of weeks from seeing the first work product to actually passing something into law that is a huge, momentous, very expensive piece of legislation.
Incredible. I haven't even mentioned the word tariff yet, and I just find it incredible that we're hearing so much criticism of the CBO from Republicans who say this is some sort of partisan exercise and they're not looking at the right numbers, no dynamic scoring. They've been wrong for years. CBO today had pretty nice things to say about the president's tariff program.
They did. They said that the tariffs would cut the deficit over the next decade by $2.8 trillion. I'll note that's more than what CBO in a report just an hour before said the tax bill would cost. That would be $2.4 trillion
so it's paid
added.
For?
So if you net all of those, then yes, it would be paid for. That's not the way it works kind of for legislative scoring, but in the big picture, yes. The other thing that's important here is this CBO report on tariffs just goes through what was in effect as of May 13th, at mid-May. Obviously, things have been changing drastically. So if Trump were to dial down the tariffs or have things off and on, or have certain tariffs that really shrunk the economy, that could all play into how much money those tariffs bring in. So it's very much it's a data point that is imperfect, but gives us a sense of this is going on $3 trillion worth in tariffs.
This is a big development. So now you're going to have the same Republicans who have been questioning the intentions and ability of the CBO they're going to say, look, the CBO says it's paid for, right? That's the next 24-hour news cycle.
That's the next 24-hour news cycle. You and I have both been in Washington long enough to know that lawmakers love to cherry pick certain data points to prove their point. But this is going to be an awkward position for them while they're on, in the same breath criticizing CBO for what it's saying about the tax bill, lauding what it said on tariffs.
Unbelievable. Great to spend time with Laura Davison, as always. Just wait. There'll be 5 more stories waiting for you when you get back into the newsroom. Our deputy bureau chief here in Washington and a dear friend of the program, Laura Davison, walking us through the weeds here on a Wednesday with much more to follow. By the way, in our second hour, we're going to talk to 2 lawmakers with stakes in the game here. Republican Senator Bill Hagerty of Tennessee and Democratic Senator Elizabeth Warren of Massachusetts, both teed up for the second hour of Balance of Power. Straight ahead, though, we turn to elections. Big debate tonight in New York, gubernatorial elections for the primaries next week. It's ahead on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got U.S. stocks now trading a little changed after a brief dip in the red for the Dow Jones Industrial Average. And a few minutes ago, we did have the S&P 500 index turning negative. But right now, we are looking at gains barely, with the S&P up 2 points, 59.72, up under 0.1%. Dow Industrials will call that unchanged right now on the day, with NASDAQ up 28 for NASDAQ. The composite index up 0.1%. NASDAQ 100 index up 0.1%. But the Bloomberg Mag 7 index lower now by 0.1%. The 10-year at 4.35%, with the 2-year currently yielding 3.86%. Spot gold up $19 the ounce, up 0.6%, 33.72. And West Texas Intermediate crude down 1.2%, 62.66 for a barrel of WTI. A contraction in U.S. service providers and a deceleration in hiring drove bond yields down across the U.S. curve. Again, the 10-year 4.35%. Tesla shares are down 3.4%. Tesla's vehicle sales from its China factory fell for an 8th straight month. This is a ship carrying about 3,000 cars to Mexico. Was abandoned in the middle of the Pacific Ocean after catching fire. The ship's manager, Zodiac Maritime, said smoke was first seen coming from a deck on the Morning Midas that was carrying electric vehicles. Again, recapping, the Dow now negative, down 13, down less than 0.1%. The S&P little changed on the day, higher by under 0.1%. Balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, my friend, the great Charlie Pellet with his eyes on Wall Street for us every day here on the fastest show in politics. It's Balance of Power on Bloomberg Radio. Thanks for coming along. Satellite radio channel 121, YouTube, and Bloomberg Originals. You can't hide from the program as we gear up for a big night in the big city, the New York mayoral race. And the debate tonight, 9 candidates, how about it, on stage for the first televised debate of the Democratic primary. We'll be watching Andrew Cuomo, of course, among others. This is 10 days, by the way, before early voting begins, and I'll probably be sitting here tomorrow talking to you about some of the highlights or lowlights that come out of this debate. With that in mind, they're going to be voting even earlier in New Jersey. This is a story that, for some reason, isn't getting enough attention. We've got 2 major gubernatorial primaries coming up here this month, okay? June 10, New Jersey. By the way, they're already voting in person, early voting. Then on June 17, Virginia has its primaries for governor and beyond. It's getting real in New Jersey. The president of the United States actually held a tele-town hall, or whatever they call them, a tele-rally for Jack Ciattarelli last evening, now that voting is actually taking place. And we wanted to lay down a marker on this because it's going to be a big deal next week. So let's get ready. With Matthew Klein, we bring in an expert from the Cook Political Report. He's U.S. House and Governor's analyst, and looking at these 2 states leaning Democratic, according to Cook. Matthew, welcome to Balance of Power. It's great to have you join the conversation here on Bloomberg. Let's start with New Jersey. What are you watching?
Yeah, well, New Jersey is interesting because it shifted so much toward Donald Trump last cycle. I mean, Kamala Harris only won the state by about 6 points. And so ordinarily we think of New Jersey as being a fairly solidly Democratic state. But there have been a couple of trends, including the last governor's race there, that was much closer than expected. So we're going to be keeping a very close eye on this race. But with regard to the primaries that are happening, the Republican side seems pretty much sewn up. Donald Trump has endorsed Jack Ciattarelli, who was the nominee 4 years ago, came remarkably close to unseating Governor Phil Murphy. But the Democratic side has been sort of a chaotic brawl, like a 6-way challenge between Congresswoman Mikey Sherrill, who is the front runner at this point, and there seem to be a couple of other candidates who are potentially in the hunt. That would be Jersey City Mayor Stephen Fulop, Newark Mayor Ross Baraka, and then a couple of the other contenders, including Congressman Josh Gottheimer, have struggled to catch fire in this primary. That's not for lack of spending. It's already seen millions of dollars in spending, but this race right now seems to be Mikey Sherrill's to lose, although with 6 days to go, there is still a decent amount of intrigue with regard to who will come out on top.
Well, that's interesting. What are polls telling you about Mikey Sherrill? The Congresswoman joined us here on the program just a couple of weeks ago. She spoke passionately about this race. Is there any issue that could change the trajectory here as we head for the primary?
Well, the polls are saying that Mikey Sherrill is the front runner, but it's a tentative front runner, right? This is a six-way race, and so we have the leader with 30-something% of the vote. That's hardly a commanding lead, and so it won't take much in the way of a slip-up or a gaffe in the last couple of days to kind of shake things up a little bit. Mikey Sherrill benefits a lot from being the only woman in a six-way field. Of course, this is a Democratic primary, so women make up the majority of voters typically, and we wouldn't expect that to be any different this time around. So, a lot of this is going to come down to who the candidates are all positioning themselves basically as who is the most capable of being a fighter back against Donald Trump and his administration. And so you see this in all the ads. There are boxing motifs and candidates talking about who's the fighter. You got Mikey Sherrill in her military garb talking about that. Trump is looming very, very large in this gubernatorial primary because the Democratic base is just so hungry for a fighter right now and somebody who can push back against the president.
Really interesting. You laid that out nicely for us. And yeah, the campaign ads, Mikey Sherrill in the jumpsuit standing in front of a helicopter. You find some parallels with that campaign and that of Congresswoman Spanberger, who's, of course, running for governor in Virginia. Another national security-minded, I guess, former member here with a real tie to the military community. It's hard to discount the relationship between the two. What's got your attention in Virginia as we head for that primary a couple of weeks later?
I think what's so interesting about these races is that exactly what you mentioned, Abigail Spanberger and Mikey Sherrill, both the front runners for the Democratic nomination. In Spanberger's case, she's already sewn it up. They have such similarities. They were actually roommates on Capitol Hill. They both came into the class of 2018 here, which was that blue wave. There are national security-oriented women who flipped Republican-held seats that cycle. And so they've been leaning into their moderate profiles a little bit. But I think the general consensus is that Spanberger has done a slightly better job, both coalescing the Democratic base, and she also seems to have done a very, very good job with regard to fundraising. And the Republican in that race, Winsome Earl Sears, who's the lieutenant governor, has struggled a little bit in the fundraising department. She's also struggled to kind of match the moderate profile that Governor Glenn Youngkin has. Even though she's his, number two, she has made a couple of comments about particularly some of these federal layoffs that are happening, Virginia being a very, very important, a lot of federal workers in Northern Virginia and down in the Hampton Roads region. She has made some comments about laying off the federal workers being laid off, and it's sort of just like everybody gets laid off. That's a very, very tough sell of a message, and so you already see Democrats touting that on billboards and in ads throughout the state.
But you see it as Spanberger's to lose, yeah?
I think that's the general consensus at this point. It certainly sounds like from the conversations that we've had with Republicans that New Jersey has the president's interest and a lot of the more of the attention, even though the states voted about the same in 2024.
Great to have you on board, Matthew. Come see us again. He's at the Cook Political Report, where he covers House and governor's races. Matthew Klein, great pleasure to meet you here on Bloomberg and Balance of Power. You saw the headline this morning about Wells Fargo. By the way, we'll keep you posted. Next Tuesday, we'll be talking a lot about this stuff, especially with regard to New Jersey. Wells Fargo's asset cap was lifted today by the Federal Reserve. It's been in place for 7 years. You saw them popping corks this morning, effectively at the New York Stock Exchange. Wells Fargo has been released from this cap that, as I mentioned, is 7 years old, having met the conditions, according to the Fed, required by an enforcement action imposed back in 2018 to remove the restriction. We wanted to talk about this, particularly ahead of our conversation with Senator Elizabeth Warren next hour, who is, by the way, not happy about this move, with Nathan Dean, who is an expert on the banking industry and, in fact, U.S. policy analyst at Bloomberg Intelligence. Nathan, it's great to have you here. I don't know if you saw this coming today, but a lot of folks thought this would be lifted a long time ago. It was a unanimous decision, and it's being seen as very good news for Wells Fargo. What's your reaction?
Yeah, so I think there was some anticipation that with the Trump victory, this was going to come in 2025. The stock's up 20% since November, and that's compared to around 4 to 6% for the KBW index. So a lot of this was priced in. But I would say is that, Wells Fargo for the last 7 years has been having this hang where they can't grow beyond 1.95 trillion in terms of assets. And now there's a lot of operational flexibility. That's the word that our chief banks analyst, Allison Williams, used in her note on this, is operational flexibility. So now that they're no longer under the asset cap, Wells Fargo has the ability to go out there and grow, most likely wholesale deposits. And when you put it in comparison over those 7 years, Citigroup grew around $2 billion, and then Bank of America grew around $1 billion in conjunction.
Pretty wild statement from Senator Elizabeth Warren. As I mentioned, she's demanding 5 years now of exam reports, Nathan, from Wells Fargo. As a member of, and in fact, ranking member here of the banking committee, she says everyone here who made this decision should be embarrassed. Is she going to get those documents?
No, she's not. I'll just say that, for her to get those documents, she's going to have to really try and use every leverage point she can. And part of the frustration here from the Democratic perspective is that, Wells Fargo still had some of its issues that it had to resolve. The reason why it took so long is because for every 2 steps forward, there was another issue that put them 1 step back. But I will say here is that, the decision to lift an asset cap, that's made by Fed staff. That's not exactly a political decision. So I think what happened here is that Fed staff went to their board and said, look, we think that the Wells Fargo has met all of its MRAs and MRIAs and all the other things that they had to do to actually lift this asset cap. And we would also note is that this vote was unanimous, including Michael Barr, who up until February was the Fed vice chair for supervision. So Elizabeth Warren has probably a lot of anger on this, but, I think a lot of it was also directed at the wrong folks.
Well, she's been talking about repeated violations, saying it is stunning in a statement that the Fed could not wait until the company went even a full year without breaking the law before wiping its slate clean. She's talking about violations flagged, Nathan, by the SEC in January, by the CFPB 6 months ago, by the Comptroller of the Currency last September. Is she wrong about that stuff?
So there are violations and there are violations. I mean, the amount of consent orders and enforcement actions they had thrown at the banking industry is actually somewhat common. Obviously it's not good news for the banking industry, but there are violations out there that some banks get. But we would note is that, if you look at how Wells Fargo operated over the last 7 years, there were certainly curtails or things that moved them forward, but then there were also violations that warranted that asset cap remaining in place. But if, according to the Fed staff, it looks like they've met everything that they need to do. And in this order, there's additional steps they have to make, but it looks like this asset cap is gone for good.
Really interesting. Really glad you could join in the clutch here with a breaking story. Nathan Dean, of course, with apologies to Stumpy. If you're with us on YouTube, you know what I'm talking about. Search Bloomberg Business News Live. We'll always save a seat for you here in the studio on our YouTube feed. I'm Joe Matthew in Washington. Glad you came along on the Wednesday edition. Our panel is in place. Jeannie Shanzano and Chapin Fay are on the way in to talk about this and exactly what Elon Musk is trying to do to the president's big, beautiful bill. He didn't say shame on you in the Oval Office on Friday. Surely he knew the math and knew the numbers behind it. Maybe he feels better about this new CBO score. We'll talk about that too, straight ahead, only on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow Industrials lower, little changed right now. The S&P higher, little change. NASDAQ also little changed, up 15 right now, just about up by 0.1%. 2 o'clock Wall Street time, we get the beige book. Again, the S&P higher by 2 points. We'll call that flat on the day. S&P 500 index holding steady in the face of weak data. We got big tech, though, pushing higher. Right now, we have got the NASDAQ Composite Index up 0.1%. NASDAQ 100 Index up 0.1%. The 10-year at 4.35%. The 2-year 3.86%. Gold up $20 the ounce, now up 0.6%. 33.73 the ounce on the precious metal. While West Texas Intermediate crude is down 1%, 62.80 for a barrel of WTI. Lots of economic data today, and there is disheartening news on America's service industries from a leading trade group. With that story, here's Bloomberg's Vinny Del Giudice.
The Institute for Supply Management reports its service industries index signaled contraction in May for the first time in almost a year. Demand slumped and inflation accelerated as higher tariffs slammed American businesses. Combined with today's surprisingly weak ADP report on the labor market, the data suggests White House policy gaffes are rattling confidence. The ISM data also suggests service industries are reconsidering appropriate staffing levels. Vinny Del Giudice, Bloomberg Radio.
After earnings, Hewlett-Packard Enterprise trading higher by 0.8%. CrowdStrike after earnings down 6.4%. And Snowflake shares, they're gaining 1%. Analysts positive on the software company in the wake of its summit event. Again, recapping, S&P up 3, the Dow just turning around, little changed, up now by 6. Balance of power continues right now, and back we go to Washington. Once again, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, many thanks to you. I am Joe Matthew in Washington, where we have breaking news. It happens every day. It sure seems like in the 12 o'clock hour Eastern time. This is straight from the White House. News of a 15-minute call. Donald Trump, Vladimir Putin. The president just posting on Truth Social. That's how we know about this. I just finished speaking by telephone with President Vladimir Putin of Russia. The call lasted approximately 1 hour and 15 minutes. I want to correct that. We discussed the attack on Russia's docked airplanes by Ukraine. This is important. And also various other attacks that have been taking place by both sides. It was a good conversation, Trump says, but not a conversation that will lead to immediate peace. Quite to the contrary, the president writes that Putin did say, and very strongly, that he will have to respond to the recent attack on the airfields, of course, referring to Ukraine's drone strikes deep in Russia that was in response to one of the most blistering missile attacks Russia has ever carried out against civilian targets in Ukraine. Now, apparently, we are leaving space for Vladimir Putin to respond again to the response. This post goes on to talk about a lot more, including Iran. And the fact, as the president says, time is running out in Iran's decision pertaining to nuclear weapons, which must be made quickly. He says he stated to President Putin, Iran cannot have a nuclear weapon, and on this, I believe, we were in agreement. It takes an interesting turn here now, as we leave space again for Vladimir Putin to continue attacking Ukraine. Donald Trump writes, President Putin suggested he will participate in the discussions with Iran, and that he could perhaps be helpful in getting this brought to a rapid conclusion. So we have a collab now, all of a sudden, with Vladimir Putin on Iran. We got to get to the panel on this. They didn't know they'd be talking about it. I didn't either. But that's how things go around here. Jeannie Shanzano, Bloomberg Politics contributor and Democratic analyst, is with us. Senior Democracy Fellow at the Center for the Study of the Presidency and Congress. And glad to say Republican strategist Chapin Fay is along as well, founder of Lighthouse Public Affairs. Great to see you both. Welcome, as ever, to Bloomberg. Jeannie, out of the blue here, an hour, I should say, in 15 minutes. I'm having trouble with time today. What do you make of the timing here and the way that this is being framed? As you've got a couple sections in a very long post, beginning with the fact that peace is not imminent in Ukraine, and apparently the people of Ukraine have some tough days ahead. How do you read this?
Yeah, I haven't gotten to read. I was just listening to you read it out, Joe. So thank you. I haven't gotten to read the post. We didn't know, at least I didn't know this was coming. I am always in favor of communication. I think that's a good thing that the president and Vladimir Putin are talking. I think the real concern here is that we have gone now about 130, 140 days since the president took office, and we have really not seen any movement towards peace in that region. In fact, what we've seen are a series of rejections by Russia, you know, at almost every turn. The latest was when Donald Trump was in the Middle East and said, I'll go to Turkey if you'll meet, and that did not go off. So between that and then, of course, the attacks on both sides, I'm glad the president is sober in terms of the fact that it doesn't look like peace is in the offing anytime soon. I hope they continue to talk, but it doesn't seem to me we're any closer. And so what the Congress and the president are going to have to decide is what do they do to support Ukraine in this battle with Russia, because that is all the U.S. seems to be able to do at this point.
Does this feel like progress, Chapin, and should the president be acknowledging, as he is here, Vladimir Putin's need to respond to the attacks from Ukraine?
I underscore or underline what Jeannie said. I mean, communication is always good, so maybe that's progress, but certainly on the ground, it doesn't feel like a lot of progress has been made yet towards peace. Listen, war is hell. That's why, you know, you see this back and forth about retaliation, right? And it never ends and it constantly escalates. I think it's on President Trump to, I think, be pushing a little bit harder on Russia and maybe even with Ukraine and forcing them to the peace table. I do think Ukrainians have that desire. I'm not sure Putin does. But I do think the communication is good and, you know, a little bit of pushing and prodding. But again, Russia's a bad faith actor, right? They've proven themselves that over and over again. So it's very difficult to force someone like Vladimir Putin to come to a peace summit.
It's really interesting, Chapin, because you have a good sense of what the MAGA community, I think, feels is important here. And you remember Donald Trump talking on the campaign trail almost every day about how he's going to end this war on day one. Does the MAGA base want Donald Trump to just pull out of this, walk away, be done with it?
I'm not sure it's as simple as that. One of the things that we constantly talked about and heard from the president's supporters on the campaign trail was how much money and potentially U.S. resources is being spent in Ukraine on, you know, against a huge adversary like Russia, who simply can, you know, has the resources of the people to just continue this, hopefully not in perpetuity. But I do think he was elected on the promise of trying to end this war. I think the main word is trying, right? You can't run and promise to end a war like this. But I do think Americans in general, including MAGA, are running out of patience. Not necessarily with the president, but with, you know, the constant wars that we've just been so used to. That was really the mandate that the president was elected on, and he does need to figure out, like Jeannie said, how to sort of push, pull, prod, and cajole these two adversaries to the peace table.
Jeannie, there are a couple of chapters inside this post, and if you're just joining us on Bloomberg Radio, we've just heard from President Trump, who met today, spoke by phone with Vladimir Putin for an hour and 15 minutes. The president calling it a good conversation, but not one that will lead to immediate peace. There are a few chapters in this thing, though, Jeannie. He goes on, as I was reading, to talk quite a bit about Iran. It's kind of the second half of the post, having told Vladimir Putin Iran cannot have a nuclear weapon, and now Putin suggests he might participate in discussions with Iran. And we can maybe, you know, work together on this. What do you make of this duality of pushing for a deal with Iran while allowing Vladimir Putin to continue attacking Ukraine?
Yeah, you know, it is a time when you are hearing the president is getting push, speaking of push from Israel, to take a different tactic, certainly with Iran. He's not intent on doing that. He does want this deal. So I think typical Donald Trump, and I think rightly so. He wants to figure out if he can get to a deal on nuclear weapons, and he will take help from Putin or anybody else who can potentially offer it. So I don't have a problem with that. I think the reality, though, is when you look at the situation, either in the Middle East as it pertains to Iran or in Russia and Ukraine, is there is a realism that has to take hold. The reality in Ukraine and Russia is that Vladimir Putin has zero incentive to stop. He believes time is on his side. He believes militarily he has the upper hand. He will continue to pursue this path and keep putting the president off for as long as he can. And so the question is, how do you drive him to the table, as Chapin was just talking about? And I think you're going to have to do that by making him realize, number one, time is not on his hands, and number two, he's going to lose. That is going to be really tough to do, but the way the U.S. can do that is more military and intelligence support. And you're facing something similar in a way on the realism issue in Iran. So yes, use Putin to talk to Iran if that's going to help. But the reality is the president needs to be realistic about where Iran and Vladimir Putin are in both of these contexts, and also, of course, Israel.
Well, it draws us to our scoop today at Bloomberg. The U.S. is refusing to provide air defenses to back the so-called reassurance force that the U.K. and France are planning for post-war Ukraine. But I'll back up a little bit here, Chapin, to something that you said, because this does bring us back to the discourse again on the campaign trail. They said, you know what about, you can say all you want about Donald Trump, but no new wars was a hallmark of his first administration. And you can argue with the way that was said, but the fact is there is a great allergy to foreign entanglements and getting involved in situations like we have right now in Ukraine. When you ask members of the MAGA community, Chapin, what are they saying about the idea of the U.S. bombing Iran, as the president has recently threatened?
I mean, again, these issues are very complicated, right? MAGA is definitely more isolationist than any of the other recent political movements. It's America first, right? We don't want to be in a position where American men and women are put in harm's way for these other countries. But I think the MAGA folks who care about foreign policy and conservatives who care about foreign policy understand these are complicated, right? I think it was very smart for the president to link to mention these different factors in his truth comment, because he wants to make Putin a deal partner. Right. That's one of the reasons I think he mentioned Iran and potentially working there together. We don't want to bomb Iran. I don't think the president wants to bomb Iran, but we do need to stop them for various reasons, for the region, for the world. And again, like you both had said, if Vladimir Putin can help Trump get that deal done, I think that's a good thing. It will also help create, establish this deal-making relationship where maybe the president, and this is how he thinks, right? He's a real estate developer, a deal maker. Maybe if they get a deal done in Iran, they create a relationship where Trump can push and ask for more, or use a different carrot and stick with Putin to help Ukraine. So I do think this is very complicated. I do think he still has the political capital behind MAGA, but if he starts, if we start bombing countries in the Middle East, I think you're going to hear a lot of people expressing a lot of concern.
Well, there you go. And I suspect J.D. Vance might even be one of them, but I'll hold on. I think that Chapin phase onto something there, Jeannie, but I wonder what you make of this interesting moment in the post-first 100 days. Donald Trump has not held a public event again today now for, a third day in a row or second day in a row, I guess, at this point, but there's a lot of news coming out of the White House. Is this an administration that's bearing down on more serious work?
I think they've been doing serious work all along, but of course, the reality is that it is time consuming, for him to be out there speaking, but I suspect we will hear from him soon. I also think he's got a lot on his plate. I mean, not only talking to Vladimir Putin today, dealing with Iran, but he's also got a lot of domestic issues, and you've been talking about many of them, from tariffs to this reconciliation bill, and a fight, or some kind of debate with the wealthiest man in the world who was his supporter. So, he's got a lot on his plate. I think we're all curious to hear what he has to say about the reconciliation bill and Elon Musk's comments yesterday. Certainly, as this bill is going to be his one big chance to get his agenda put into place. And he got some good news from the CBO on the tariff front. So, you know, that is a good sign for the president, but this bill is going to be essential to fulfilling his whole agenda. So I think we'll hear from him pretty soon.
Yeah, well, I'll tell you what, we're definitely going to hear from him tomorrow with the German chancellor in town. This phone call and this readout from the president is going to inform that discussion a lot. We'll be doing that right at this time tomorrow. We have a great panel for you today. Jeannie Shanzano and Chapin Fay. They'll be back with us in our second hour here on Balance of Power as we bring you two important conversations with two senators. Bill Hagerty, the Republican from Tennessee, will join, and Elizabeth Warren, the Democrat from Massachusetts, with very different ideas about the direction of this country. They're next, only on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Another meeting of the minds. President Trump says he just got off the line with Vladimir Putin. Welcome to the Wednesday edition, Balance of Power. As news of this phone call, more than an hour in length, breaks today, and the president now suggesting that peace is not imminent in Ukraine. I'm Joe Matthew alongside Kaylee Lyons in Washington. It's good to have you here on the early edition of Balance of Power on Bloomberg TV and radio. Kaylee, he said a lot more than that, also addressing talks with Iran and a potential collaboration of sorts with Vladimir Putin. Says he may join the discussions.
Yeah, the Russian president suggesting to President Trump that he could be helpful when it comes to Iran and forcing a more rapid conclusion to the discussions the U.S. has been trying to engage in with Tehran. Noteworthy, of course, the president is speaking to President Putin, or did so today, when he has been asking publicly to speak with a completely different president entirely, Xi Jinping of China, as he says Xi is now being tough to deal with. Certainly a busy day for President Trump as he not only seeks that phone call, but also will be meeting later with key members of the Senate Republican Conference, specifically those on the Finance Committee and the Majority Leader John Thune about the One Big Beautiful Bill.
Well, we thought that would be our lead story right now because indeed members of the Senate Finance Committee, Republican members, are on their way to the White House for the next throwdown here. That group will include a number of holdouts, including Ron Johnson, who says he's a no, flat period, unless this changes. But Kaylee, the CBO may be the best thing that happened to Donald Trump today in that conversation.
Yeah, he hasn't expressed too much happiness with the CBO and its scoring of his tax bill, which, according to their report today, says will add $2.42 trillion to the deficit over the next 10 years. But they also say his tax cuts will reduce the deficit by $2.8 trillion, or tariffs, that is.
The tariffs will help pay for this.
Will help pay for it. So maybe the offset conversation is a real one. We'll get into all of that this hour, but we begin, as always, with a check on the markets. And for that, we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. Great reason to keep it locked into Bloomberg Television and Radio. Lots of moving parts to this market today. Bottom line here, we do have the Dow higher by 45 right now, up 0.1%. Stocks have been meandering, but right now we've got the S&P up 10 at 59.80, a gain there of 0.2%. NASDAQ up 49. That's an advance of 0.2%. Bottom line here, S&P 500 holding steady in the face of weak data. We do get the Beige Book coming up in 1 hour from now. The 10-year, 4.35%, the 2-year, 3.86%. Gold up $20 the ounce, up 0.6%, 33.74 right now, while West Texas Intermediate crude is retreating by 1.2%, 62.63 a barrel on WTI. Wells Fargo shares are higher after finally escaping that Federal Reserve asset cap that has restricted its size for more than 7 years, unleashing the firm from the unprecedented punishment in a major win for CEO Charlie Scharf. Today, Wells Fargo up by 0.9%. Again, recapping here, the Dow, the S&P, NASDAQ all advancing. S&P up 11, a gain there of 0.2%. Balance of Power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York checking on the markets for us. Thank you so much. Meantime, here in Washington, we are following breaking news that we just got from President Trump, courtesy of his True Social feed, where he informed us he just spoke to Russian President Vladimir Putin by phone for over an hour. A conversation that the president described as a good one, but not a conversation, he said, that will lead to immediate peace, noting that Putin said very strongly he will have to respond to the recent attack on the airfields, referring, Joe, of course, to the drone strikes we saw across deep into Russian territory last weekend.
This could mean some very difficult days ahead for the Ukrainian people, knowing that Russia has a preference of attacking civilian targets, unlike what we saw from Ukraine. Over the course of the next half hour, we're going to bring you two very important voices in the midst of breaking news today in Washington with all the stories we're talking about. Republican Senator Bill Hagerty of Tennessee will join, along with Democratic Senator Elizabeth Warren of Massachusetts, all in the next 20 minutes here on the fastest show in politics. We do want to start on Capitol Hill, though, Kaylee, with all of the breaking news today, and Bloomberg's Tyler Kendall. First, Tyler, welcome back. On this phone call, lasted over an hour, Trump and Putin. What else do we know?
Yeah, hey, Joe. Well, Kaylee read one of the key lines from President Trump's Truth Social post, which is that he said it was a good conversation, but not one that's going to ultimately lead to immediate peace. Now, of course, this was it was not known that they were going to have this call, but does come after the two leaders did speak by phone last month, and it contributed to what was really mounting frustration from this White House when it comes to really stalled progress towards reaching a ceasefire. Here, we're going to be watching how this really escalates as President Trump does confirm that Vladimir Putin has those plans to retaliate after we really saw that surprise drone attack by Ukraine that went so deep into Russian territory. It hit areas as far as Siberia. Now, we should say that earlier today, Vladimir Putin did come out and he dismissed the idea of meeting face-to-face with his Ukrainian counterpart, something that Ukraine says ultimately needs to happen if there is going to be progress when it comes to these talks. It also comes against a broader backdrop of a Bloomberg News scoop earlier this morning that the U.S. does not have plans to provide air defenses to back a reassurance force that would comprise of the United Kingdom and France that has been trying to convince the United States to give some firmer security guarantees moving forward here that would back any potential deal. So we're going to be watching closely how this ultimately ends up developing because, as you well know, the U.S. has gone to Russia before with a potential plan that could even see freezing the battle lines, the battlefield lines where they were, but that hasn't been enough to move the needle in really a significant way as of yet.
Well, and Tyler, as we consider the implications for what this means in terms of Russia's behavior in negotiations over the war in Ukraine, it seems President Trump is also suggesting that Russia will have a role to play in separate negotiations with Iran.
Right, exactly. And that's going to be a really interesting one to follow here, too. As we know, this really is a priority for this White House to ultimately try to make some kind of progress here. I believe that the fifth round of talks just concluded, and we're seeing Oman really be a mediator in these talks. But details haven't really emerged, including how a potential deal would differ from the JCPOA, which the U.S. pulled out of under the first Trump administration.
Tyler, we thought we'd be talking first with you about reconciliation. This is an important day on the track to make the Trump tax cuts either permanent or extended. You've got Republican members of the Senate Finance Committee headed to the White House to meet with President Trump. Among them, Senator Ron Johnson, who says he's a flat no unless these deficit numbers change. This, of course, follows the missive, several of them overnight again from Elon Musk, and now news from the CBO. How important is this meeting today, Tyler?
Yeah, the stakes are incredibly high, Joe, as the White House really does try to ramp up the pressure on these Republicans, with President Trump picking up the phone and calling them directly. Now, you alluded to this before. Perhaps the most vocal group that's emerging is this group that are pitching themselves as fiscal hawks, and that includes Ron Johnson. And I actually had the chance to catch up with the senator from Wisconsin earlier today. He's pushing for those deeper spending cuts. He says he's in close touch with the White House, and he realizes that it might take some time to get the sort of spending cuts that he's really looking for.
If I'm wrong, challenge me. You know, I want to get in that dialogue. And quite honestly, that is really my discussion with President Trump. And so he had Kevin Hassett call me up right away. I'll be meeting with the secretary. So he wants to engage. Again, he wants to reduce spending. It's just hard to do. I mean, I'm not denying that fact. It was a slender majority in the House, and Democrats had no interest whatsoever at reducing spending. That's our problem.
Now, of course, the other side of this, Joe and Kaylee, is that the White House is dealing with conflicting demands. So you have some senators here that are calling for deeper spending cuts, raising some concerns about how some of the tax sweeteners, whether or not they would really contribute or incentivize growth over the long term. But then you have a group of Republicans that are concerned about what spending cuts ultimately will mean for Medicaid. Now, we should say that there's pretty broad agreement about those core pillars of this plan, including extending the 2017 tax cuts. But at the end of the day, there are really slim margins here in the Senate. They can only afford to lose 3 votes.
Indeed. All right, Bloomberg's Tyler Kendall live on Capitol Hill for us. Thank you so much. And it's on Capitol Hill that we stay here on Balance of Power on Bloomberg TV and radio as we turn to Republican Senator Bill Hagerty of Tennessee, who is back with us on the program. Senator, we appreciate your time. As we just heard our colleague Tyler there outlining that various portions of your body have demands as to what it will take to get them to a yes vote on this legislation. What's yours? What change do you need to see for you to vote for this package?
I think the most critical thing to keep in mind, Kaylee, is the fact that if we don't get this done, Americans are looking at a north of $4 trillion tax increase. I was talking with Kevin Hassett at the White House yesterday. His projections are that that would yield a 6% decrease in our nation's GDP. That would be terrible for America, frankly, be terrible for the world economy. We can't let that happen. The main interest I have is making certain that we stimulate more capital investment in America, because more capital investment will beget more jobs, more economic activity. This will have a very positive impact on the economy, and frankly, it's something that the Congressional Budget Office completely misses in their analysis. They missed it at an incredible level back after the 2017 Tax Cuts and Jobs Act were passed. In fact, they missed it by north of $1 trillion worth of revenues. So I think that my colleagues need to certainly take into account the fact that this is a pro-growth bill. This tax package is going to stimulate more economic activity here in America. We will see growth that's not captured in these CBO estimates, but will have a material impact on our economy, on our well-being, and frankly, in terms of going the right direction to reducing the deficit.
Well, Senator, we've got a lot of questions about what's inside, and it's great to have you back on Bloomberg. You mentioned the CBO, so I do have to ask you about that. Two big headlines today coming out of the Congressional Budget Office. First, the Republican tax bill that cleared the House, they say, would add $2.4 trillion to U.S. deficits. But that same Congressional Budget Office, which I know Republicans criticize a lot, is now projecting that Trump tariffs will cut the budget gap by $2.8 trillion. Do you buy that number? And if so, is this bill paid for?
Well, in the first case, what they do is static analysis. They don't take into account the dynamic of investment in the economy that will yield growth. So I think that's patently wrong. And the second, with regard to tariff revenue, it's possible, but we're not nearly to the end of our trade negotiations. Jamison Greer, our trade rep, working his heart out to try to bring together a significant sea change in the way America's treated on the global stage. I think we're going to make great progress, but it's very hard for me to say right now, and I don't know how the CBO is able to say this, where we're going to land on tariff revenues as well.
Well, yeah, it is worth pointing out the CBO was only scoring tariff revenues through where tariffs stood as of May 13th, and we already know changes have been made since then. There's still some legal questions around whether or not IEEPA is going to stand, Senator, so we have to bear that in mind. We've heard from the Senate Majority Leader John Thune that there's going to have to be some adjustments made to the SALT cap, something that House Republicans from those SALT districts say would essentially mean that the deal dies when it returns back to the House. Knowing that the debt ceiling lift is also attached to this legislation, do you see risk around making changes like that? Could that bring the U.S. closer to the brink of default?
Well, I think there's always risk in any situation like this where you have a complex bill, Kayleigh. We're going to have a conference meeting right after I'm on with you now to begin the process of talking through where the Senate is going to land here. And I do expect that there will be improvements. It will be different. There'll be deeper cuts. And we'll start to see text coming out on Friday. What I don't want to do is try to get ahead of those who are negotiating. As you know, the Finance Committee is going to the White House right now to meet with President Trump. This is a process that's underway, but I can say this at a very high level. My colleagues in the Senate want to see more cuts, more deficit reduction, but at the same time, I've been encouraging everyone to move expeditiously, to make certain that this happens extremely quickly, because the United States economy needs certainty. And with that certainty, we're going to see more capital investment. The longer this takes, again, the less certainty we've got, and that's going to have a negative impact on capital investment here in America.
With that in mind, Senator, I'd love to explore the idea of permanence with you, because we're hearing about this a lot more now. The likes of Steve Daines and others who say, no, we need to make permanent certain business tax breaks, specifically the full research and development deduction, bonus depreciation, and interest expensing. Are you on board with making them permanent?
Certainly I am. I agree with the premise completely. And, you know, Steve Daines is a business person just like me. We understand the importance of being able to make long-term plans with respect to capital investments. That's what's driving Steve's position. I think he's exactly right. And we need to extend these as far as we possibly can. Permanent is the best possible answer we could achieve.
Senator, of course, while you and your colleagues are working on reconciliation, there is also actively underway an effort to advance the stablecoin legislation, the Genius Act. Last time you were on with us, we talked about some of the various amendments that were being put forward, which you said are being worked through. Have you had direct conversations more recently with either the Majority Leader or Senator Roger Marshall about whether or not the Credit Card Competition Act is going to become a real factor here?
Yes, those conversations are underway. I certainly respect the process that we're addressing. But right now, this really isn't about policy, nor is it process. We're just trying to get floor time right now to get this processed. We have broad agreement, Kayleigh, with respect to the content of this stablecoin legislation, my Genius Act. And this is going to, I think, take us into the 21st century in terms of upgrading our payment systems. It's going to have very desirable effects, taking the U.S. economy into the digital assets arena, keeping innovation here, lowering risk here in America, and putting in place guardrails that will protect consumers, because every one of these stablecoins will be backed up dollar for dollar with U.S. Treasuries. Very positive outcome here. We've got very strong support.
So, okay, what's the timeline, Senator, and what does it mean for the Clarity Act coming out of the House?
Joe, the timeline is the key issue right now. The window is closing on us to get this done because we've got to turn our attention to reconciliation. As I mentioned, we're going to a conference meeting, our first broad conference meeting, to talk about the reconciliation bill. We need to get the Genius Act passed. We need to get it on the floor, and that's where my discussions have been with the leader and with my colleagues, is getting that time on the floor as soon as possible. I'd like to start it today, tomorrow, but I'd like to get that time on the floor as soon as possible, so then we can turn our attention to dealing with the Reconciliation Act and getting more confirmations across the floor.
And when will your attention, Senator, turn to market structure? And when the time comes to actually look at a market structure bill, how akin do you expect it will be to the Clarity Act that was just introduced in the House last week?
Well, there's been a great deal of good work that's been done in the House. A lot of questions have come up in the process of building the stablecoin legislation that have been more appropriate to market structure. We're focused on it. We've already begun the process of building it here in the Senate. Again, as I mentioned, a lot of it's a natural outgrowth of the stablecoin legislation that we've been pushing forward. So we're going to turn our attention immediately to that. But I think the most immediate thing that will happen is the reconciliation bill coming to the floor of the Senate. In the meantime, I pledged to President Trump I would get this done in the first 100 days if I possibly could. We've exceeded that by a bit, but President Trump wants to see this legislation on his desk. J.D. Vance was at the Bitcoin conference in Las Vegas just last week saying he wants to see a clean bill in front of him on stablecoin legislation in front of President Trump, and I think we can get there.
Interesting as you bear down on the reconciliation, tax and spend legislation here, Senator. I know it's going to be an important day, and you're walking into this meeting after we're done with our conversation to begin hearing from Republican members of the House who apparently didn't have enough time to read the whole bill. Congresswoman Marjorie Taylor Greene says she's a no, having not read a section banning states from passing their own AI regulations. Mike Flood, Republican from Nebraska, doesn't like this idea of making it harder for judges to hold officials in contempt of court. They both didn't see it in the first pass. Have you had a chance to read that bill?
Having gone through the entirety of the bill, we're in the process of reviewing all the text that just came over in the past couple of days. But again, we're moving on it. The Finance Committee is at the White House negotiating it right now. The text is in process, and it's an item that's in motion. I understand that there may be items here that not everyone is happy with, but at the end of the day, we're going to have to compromise and get it done. I'll come back to the original point. The American economy needs this certainty, and I'm going to be working my heart out to make certain that we deliver the best possible product we can here. But I'll remind you as well, this isn't the last bite at the apple. We'll have the opportunity to have another reconciliation process coming up fairly soon. So we're going to find a number of other opportunities to improve the situation here in the American economy, achieve some of the other objectives of our legislators. And we can, if we don't solve it all here, we'll have another opportunity to do that.
Well, Senator, you will have an opportunity as soon as tonight to vote for the confirmation of Mickey Bowman to be the Fed's new vice chair of supervision after the cloture vote passed earlier today. This comes just a day after the Fed officially lifted the asset cap on Wells Fargo. Starting today, is this a new era of banking regulation in the United States?
I certainly think so. Michael Barr took us in exactly the wrong direction, and I'm very glad to see someone with the sensibilities of Mickey coming into this position. She's going to do a great job. What we need to do is return to the overarching mission of making certain that our capital markets are as competitive and safe as they possibly can be, get out of the business of these extraneous policy issues, whether it regards climate or other sorts of issues that essentially make the U.S. economy less competitive. And the gold plating that Michael Barr attempted to do, making us subject to even more regulations than the Europeans, only hampers American capital formation. Mickey has a very different point of view, and I'm very excited to see her come into this role.
Well, it is interesting seeing this asset cap lifted on Wells Fargo today, Senator. Your colleague, Elizabeth Warren, who's going to be with us a bit later this hour, is asking for 5 years of exam reports from the bank as a member of the banking committee, having suggested that they have not gone a year without breaking the law. Her statement says it's stunning. The Fed could not wait till the company went a full year without breaking the law before wiping its slate clean. Should she get those documents? Should the committee see them?
I'm all for transparency, Joe, and I'm all for having committee members have access to the information that they need, but I'm not about to respond to something that Elizabeth Warren has said just based on what she probably doesn't have. She doesn't have access to the documents at this point, so I don't understand her leveling these accusations, but she's wanting to do that.
Well, I wonder, Senator, if you'd like to respond to something President Trump has just said, as he shared with us on Truth Social, that he spent an hour and 15 minutes on the phone today with Russian President Vladimir Putin. He suggested that phone call will not lead to an immediate peace with Ukraine, but went on to say that Putin believes or suggested he could participate in discussions with Iran. And of course, the U.S. Approach to Iran is something I know you feel quite passionately about. Is it appropriate for Russia to be stepping in here?
Well, I think you understand well the fact that the previous administration removed all of the maximum pressure campaign that we had imposed on Iran. We had Iran to a point where they were ready to deal. Their reserves were below $10 billion. As soon as the Biden administration came in, they stopped enforcing the sanctions. They put Iran in a position to fund terror. We saw what happened with Hamas. We saw what happened with Hezbollah. We saw what happened with the Houthis. We're bringing that situation back under control. We're putting back in place maximum sanctions, and we also have the opportunity to get the world behind us, and I think the world should be behind us to ensure that Iran does not have the capability to threaten the rest of the world as they seem to want to do. President Trump has every right to seek out other world leaders, to find allies wherever he may. But at the end of the day, it's going to be up to us to take the leadership position to deal with Iran and to make certain that they don't have the capability nor the capacity to threaten the rest of the world as they have in the past. And understand this, they're behind all of the terror and all the disruption in the Middle East. It's got to come to an end.
A deep dive with Republican Senator Bill Hagerty of Tennessee. Senator, it's good to see you, and we appreciate all of your time today on Bloomberg TV and radio. We're going to continue our conversation as we cross the aisle coming up to speak with Democratic Senator Elizabeth Warren of Massachusetts about these very same issues on the fastest show in politics. First, watching Wall Street, Charlie Pellet has an update for us on the markets live from New York. Charlie, how's it look?
And right now, solidly higher, Joe Matthew, with the Dow, the S&P, NASDAQ, all gaining right now. Tech stocks leading the way with right now the NASDAQ Composite Index up 34, NASDAQ 100 Index up by 0.3%. To be clear, the NASDAQ Composite up 0.3%. It's higher by 66 points right now on NASDAQ. We've got the S&P up 12, gain there of 0.2%. The Dow up 44. That is an advance of just about 0.1%. So the gain in tech coming offsetting weak economic data on jobs and services. Coming up at 2 o'clock Wall Street time, we'll be getting the latest Beige Book report. Bottom line here, stocks pushing higher. S&P up 0.2. The 10-year 4.35%, with the 2-year 3.86%. Gold now up 0.7%, 33.75 the ounce. West Texas Intermediate crude oil down 1.1%, 62.71 a barrel, and Bitcoin down 0.4%, 105,400 on Bitcoin. Earnings news: Hewlett-Packard Enterprise shares right now they are up 0.4% after earnings. CrowdStrike after earnings down 5.4%, and shares of Snowflake they are higher now by 1.5%. Analysts positive on the software company in the wake of its summit event. UBS upgraded the stock, and again Snowflake up by 1.5%. MongoDB after the close of trading. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Balance of Power continues. Once again, your hosts Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet checking on the markets for us. Thank you so much. Charlie, of course, noting the move we're seeing in Wells Fargo shares today, up just about 0.75% on the day after the Fed lifted the asset cap that has hampered the bank's growth for years now. But I would note, Joe, that Wells Fargo shares are also up about 20% since Election Day. So there was a lot of anticipation that this asset cap would indeed get lifted under this Trump administration.
They're definitely popping corks at Wells Fargo. Elizabeth Warren, on the other hand, is not. As we told you, will be joined here by the Democratic senator from Massachusetts, having issued a blistering statement following this Fed decision. Kaylee, saying the entire Federal Reserve Board, including appointees of both parties, should be embarrassed. She's with us now, the Democrat from Massachusetts, live from Capitol Hill. Senator, it's great to see you back on Bloomberg TV and radio. You are demanding 5 years of exam reports from Wells Fargo. And I wonder what leverage you have here, how far you would go to get them. Would you threaten to hold up the nomination, for instance, of Michelle Bowman as the Fed's vice chair of supervision to get them?
Look, I'm already opposed to having Michelle Bowman as the vice chair for supervision. This is someone who has never seen a regulation for a giant bank that she wasn't willing to cut or undermine. But understand this about Wells Fargo. I think before you decide to lift this big penalty that's been in place for Wells Fargo for 7 years now, you should ask for like maybe 1 year in which they aren't caught breaking the law. Remember that in January of this year, the SEC tagged Wells Fargo for cheating investors. In December, the CFPB tagged Wells Fargo for cheating American consumers, by the way, to the tune of over $800 million. And in September, the OCC tagged Wells Fargo for money laundering. So we have the three big banking regulators all saying Wells Fargo's out there still breaking the law. And then a report just a few weeks ago by former and current Wells Fargo employees saying that the very activities that Wells Fargo engaged in 7 years ago, where they created fake accounts for people and so on because they were pressing their employees to get those numbers in, to get more people signed up for more accounts, that same activity is occurring today. And those are the circumstances under which the Fed unanimously says, hey, Wells Fargo, get on out of here. You don't need any extra regulation. No, that just doesn't wash.
Do you see any potential benefit here, Senator, though, of Wells Fargo being able to better compete with other big banks for the competitive landscape to change in that way?
Look, I'm all for competition, but I don't think that cheaters ought to have a leg up in competing. And that's really the part to remember here about Wells Fargo. The reason we want to have good enforcement of all of the banking laws is that the banks that actually follow the law, the banks that aren't engaged in money laundering or the banks that are not cheating their investors, that those banks ought to be able to play on a level playing field. And Wells Fargo, we know starting 7 years ago, that Wells Fargo was so boosting its profits and, by the way, its CEO compensation based on cheating American customers. And in fact, it was so awful what they did that it wasn't just civil penalties, they were in violation of criminal laws. So the idea that, boy, we want to get them right back out there competing with the other banks at a time when their own employees are saying, hey, they're back to doing the stuff they were doing before. That's not the direction we want to go.
Senator Elizabeth Warren live with us on Bloomberg TV and radio. I'm going to ask you to walk with me here for a second, Senator, because I don't know if Donald Trump is watching us right now, but the president is posting about you right now, just on Truth Social. Donald Trump writes, quote, I am very pleased to announce that after all these years, I agree with Senator Elizabeth Warren on something. The debt limit should be entirely scrapped to prevent an economic catastrophe. He's reposting you here where you suggest as much. This is less than 24 hours after Elon Musk said shame on Republicans who passed the reconciliation bill in the House. You're finding yourself within a 24-hour period agreeing with Donald Trump and Elon Musk. What's going on around here?
Well, look, I think on the debt ceiling, I've been on this for many, many years. The debt ceiling is just something that's been used as leverage in negotiations. The United States should never, never threaten to default on its debt. We should get rid of this debt ceiling altogether. When we pass a bill saying that we're going to do a certain thing, that is our saying, and we're going to pay for it. That's what the United States government does. So I think that Donald Trump and I, hey, listen, I'm ready to join up with him and make that happen. We need to get rid of the debt ceiling altogether, not extend it, not say, ooh, while this is going on, this budget negotiation, let's just roll out a few $1 trillion more in the debt ceiling. Nope. That has gotten us into trouble before. It continues to get us into trouble. Donald Trump is right. Let's get rid of it altogether.
Well, so, Senator, if we are to see if the Senate and House cannot get this reconciliation bill through in time for the mid-July request the Treasury Secretary has made to avoid bumping up against the X date, would you support an initiative like that separately, a legislative effort to eliminate the debt ceiling before that X date comes?
Yeah, look, we should do it now. There's no reason to delay. Donald Trump is exactly right on this. It's what I've been arguing for literally for years, and that is get rid of the debt ceiling. It's serving no function except for holdout parties to try to use in negotiations. And that makes no sense. That doesn't serve our nation. But we should do that now. It doesn't need to be tied to anything. It doesn't need any special date on it. Ask the Republicans. They're the ones in control of the floor. Let's bring that to the floor right now. It's a simple piece of legislation. I'm ready to go on it. I think it's the right thing for us to do.
Senator, I want to ask you from your perch on the Armed Services Committee about what else we heard from Donald Trump today. He had an hour and 15-minute long call with Vladimir Putin. At the end of the call, he wrote about it and said that peace is not imminent in Ukraine. He did say, however, that Putin will have to respond to the recent attack on the airfields that Ukraine conducted over the weekend using this wild scheme with drones that had been smuggled into the country. What do you make of this assessment? And what is Ukraine in for in the days ahead?
Right. Look, Vladimir Putin has been playing Donald Trump, and pretty much everybody in the world can see that. That's not just me seeing it, not just people in the United States see it. Leaders around the world see it. And it looks like Donald Trump is beginning to figure that out and starting to push back against Putin. We owe it to Ukraine to do everything we can to support them in their fight. They are on the front lines fighting for democracy, and they are on the front lines against an expansionist Russia. Understand this, if Ukraine falls and Vladimir Putin gets either a big chunk of it or all of it, he's not stopping there. He's coming for more and more and more because that's who Vladimir Putin is. It is important right now to help Ukraine push back. They are on the front lines fighting the war for democracy on behalf of all of Europe, on behalf of the United States, on behalf of freedom-loving countries everywhere in the world. And we should give them all the support we can.
All right, Senator, we appreciate you joining us on Bloomberg TV and radio. The Democratic senator from Massachusetts, also ranking member of the Senate Banking Committee, Elizabeth Warren, with us here on Balance of Power, reacting not just to President Trump's Truth Social post about his conversation with Vladimir Putin, but also his Truth Social post about Senator Elizabeth Warren, who he agrees with when she says the debt ceiling should be eliminated entirely. So on that note, we turn to our political panel today. Jeannie Shanzano is with us, Bloomberg Politics contributor, senior democracy fellow at the Center for the Study of the Presidency in Congress, and Democratic analyst, alongside Republican strategist Chapin Fay, founder of Lighthouse Public Affairs. Chapin, as we hear Senator Warren say, I agree with Trump, let's do this, get rid of the debt ceiling right now. Is this the potential off-ramp for if the Republicans cannot get through this partisan reconciliation bill with a debt ceiling hike attached in time?
Well, what wild times we're living in, right? Cats and dogs are living together. Elizabeth Warren and Donald Trump are almost praising each other publicly in agreement. But yes, to answer your question, I do think this is a way maybe to grease the skids there, grease the wheels, so to speak, and get a deal done. By the way, this is how throughout history, American history, this is how big deals get done and how major programs, like some of the programs the Big Beautiful Bill are arguing over right now, get done, right? Compromise and agreement among people on the left and the right. So I think this is good news. I mean, I have always seen, I think MAGA sees Donald Trump as a deal maker on behalf of the American people, and they have faith in him to do that. It will be wild to see them support Elizabeth Warren in the same endeavor, but we'll see.
That was a wild moment. We have to stop down and acknowledge what just happened here. The president's posting about Elizabeth Warren while she's live on the air with us. Jeannie, is that how this ends? With the debt limit?
He's your biggest fan, Joe and Kaylee, so I love it.
You can't help but to watch.
He can. Who can help but watch you guys? The reality is that I love his post too, which is strange because it seems to me he's calling for some bipartisan movement forward. He ends the post by saying, let's get together, Republicans and Democrats, and do this. I'm not sure if that is just limited to the debt ceiling, which absolutely needs to be scrapped, but it should also pertain to this issue of the reconciliation bill overall. So I don't know if it's a bad sign for the president that the Republicans aren't moving on the bill, so he's reaching across the aisle, or a good sign that he's just found religion that he needs to work across the aisle. But I'm in favor of you two bringing the parties together like this. I love this.
Getting a lot done here.
Balance of power. That's what we aim to do here. Chief, and finally, we just have a minute left, but President Trump and Republicans overall have had a lot of words about the CBO in recent days that they've shared, specifically poo-pooing essentially their estimates on the tax bill. But now the CBO says tariffs could reduce the deficit by $2.8 trillion over the next 10 years. Is that argument now nullified?
I don't think so. I mean, this is sort of some of the sausage being made that always spills out into the public. And if the CBO says something you like, you support it, you use it as a proof point. And when the CBO, goes the other way, you can do what the Republicans are doing recently. But it is helpful to have the CBO give some numbers that can help an argument and push things forward for sure.
Jeannie, what's your thought on this when it comes to the CBO? I think I know your answer, but I think Republicans are suggesting that the broken clock is right once a day when it comes to CBO's take on tariffs, but CBO is broken when it comes to scoring the tax cut bill because it doesn't use dynamic scoring. Am I warm on this?
You are hot, Joe. Let's say you're hot. The reality is that the CBO, I think, is a good day for the CBO because they giveth and they taketh away. You know, as you guys have been talking about on the tariffs, they are, supporting what the president is doing. I mean, not partisan wise, but in terms of the impact on the deficit. And yet, when it comes to the issue of the reconciliation bill, they are underscoring the fact that this is going to increase the deficit an awful lot. So I think it's a good day for the CBO because it shows that they are indeed bipartisan, or nonpartisan is probably a better term. But the reality is that the president and the Republicans are going to have to really get their head around what Elon Musk, what so many people have been talking about. You simply have a math issue when it comes to the reconciliation bill. You cannot add 2.5 trillion plus to the deficit and call yourself economically or fiscally responsible. I know Russ Vought and others are out there saying about this static scoring and all of this. The reality is the CBO is running the numbers right. Elon Musk and others know how to run the numbers. This doesn't add up. So you either have to cut spending or you have to increase taxes. It's pretty basic.
We just heard that from Bill Haggerty. Broken clock is right twice a day, by the way.
I do want to follow up on your point on Elon Musk, though, Jeannie. To what extent is he actually credible in his contentions that the budget deficit is a problem and Congress is making the wrong choices here, knowing that A, his companies benefit from massive government contracts, and B, as the Speaker of the House was quick to point out, he also wanted those EV credits that this bill rolls back to stick around. So maybe there's a bit of a personal issue here.
Yeah, I mean, certainly as it pertains to the NASA administrator, as you mentioned, to the EV mandate, to Starlink, he apparently wanted to maintain his special status as a special government employee. All of that is true, but the reality is Elon Musk knows how to do this math. And anybody who looks at this objectively, there is no way that you can make the claim that it doesn't add an enormous amount to the deficit. And we will be strapping our children and grandchildren with a government and really a country that is economically and fiscally in a horrible position, not just as a result of the Republicans, Democrats as well. We all own this and we have to get out of it. So he's right on the math here, regardless of his reasons for being frustrated.
How are you looking at this Elon Musk thing? Chapin, obviously a MAGA darling until, I don't know, a few hours ago when this post hit. He hasn't always seen eye to eye with the president, but are you looking at this as a disgruntled government contractor or a guy who saw too much when he was in Washington?
No, I think Elon Musk is an honest broker here, and he's giving his input, right? And it's important input. While I don't know the level of influence he'll retain after leaving, the president's side, after seeing him at the president's side almost on a daily basis. But there's no question that he has input, and like Jeannie and you all said, he knows the math, he knows the numbers, and he's he's trying to shape the legislation just like the president and every other special interest. I mean, I wouldn't call them special interests in the negative way, but that's what happens right now when you're in this precarious situation while they're reconciling the two bills and trying to get this passed without destroying the economy and the budget. And Elon Musk has always been an honest broker in my mind on the numbers, on the math. So that's what he's doing. I don't see him as a disgruntled employee. I think he's doing his part to continue doing his part.
Chapin, you and frankly, Jeannie are both joining us from New York. So I want to ask you about the contention the majority leader has made that there's going to have to be adjustments made to the SALT cap deal that was struck in the House, lifting it from $10,000 to $40,000. Chapin, if that adjustment is material, do you see any way in which those SALT caucus Republicans are going to be able to vote for this package when it returns to the other chamber?
It's going to be interesting to see. They have sort of boxed themselves into a corner, fighting for this, some of them, and some of them sort of are going to go along. So it'll be interesting to see what the final outcome is. But this is a huge deal in New York and in their districts, and in some of these Republican members' districts in particular, in the suburbs, like Congressman Lawler, right? Sort of the northern suburbs of New York City. And this is a critical issue to them and their reelection in some cases. So I think you're going to see some of them fighting for it really hard, and I think some of them are going to, go along quietly and hope for the best.
Great conversation with our panel. That's Chapin Fay, Republican strategist, Lighthouse Public Affairs, and Jeannie Shanzano, Bloomberg Politics contributor. Great to see both of you, and we do appreciate the analysis. We've got a lot ahead, including a conversation with the Premier of Alberta, Canada. Kaylee, one thing we have not mentioned over the course of an hour and 40 minutes here on the air is that at 12:01 a.m., the 50% tariffs on steel and aluminum took effect.
Yep, a doubling from 25%. Of course, Alberta, not as much of a steel producer as other parts of Canada, but they are a big oil producer, which has been a factor in these ongoing trade conversations as well. And we're going to get into all of it with her in just a moment.
Important trade talk ahead right here on Bloomberg. First, we look at Wall Street with the help of Charlie Pellet. He's got an update on the markets for us live from New York. Charlie?
And good day, Joe Matthew. With the Dow, the S&P, NASDAQ all pushing higher. We are about to get the Beige Book report coming up 2 o'clock Wall Street time with the S&P right now higher by 11. That is a gain of 0.2%. The Dow up 40 right now, up 0.1%. S&P, as I mentioned, holding steady in the face of weak economic data. NASDAQ up 56 now. That is a gain of 0.3%. The 10-year at 4.35%. The 2-year 3.86%. Spot gold up $26 the ounce, 33.79, up 0.8%. And West Texas Intermediate crude down 1.2%, 62.62 for a barrel of WTI. Tesla's vehicle shipments from its China factory fell for an 8th straight month. Tesla shares today down by 3.2%. Meanwhile, a ship carrying about 3,000 cars to Mexico, electric vehicles, I might add, abandoned in the middle of the Pacific Ocean after catching fire. Just getting word that Reddit is suing Anthropic, alleging wrongful use of Reddit data. This, according to the Wall Street Journal. Reddit shares are up now by 6.1%. And finally, Jane Buffett, the widow of singer Jimmy Buffett, is seeking to remove the co-trustee of her husband's estate, saying he has failed to act in her best interest. The singer died in 2023 and left an estate with $275 million in assets. Recapping, S&P up 13 right now, a gain of 0.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your hosts. Here they are, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet tracking the markets for us. Thank you so much. Meantime, here in Washington, Joe Matthew and myself are tracking a lot of different stories, a lot of moving parts in politics and geopolitics today as we watch the reconciliation fight on Capitol Hill, which is, of course, going to the White House today with a meeting between Senate Finance Committee members and President Trump. Also, President Trump focusing on other areas of the world, including, of course, the ongoing war with Russia and Ukraine, having spoken with the Russian President Vladimir Putin for an hour and 15 minutes earlier today. And then there's another story, which, as Joe rightly pointed out a few minutes ago, we haven't even had time to touch on with all of this other news, and that is the fact that effective today, steel and aluminum tariffs have doubled. They've officially gone up from 25% to 50%. And Joe, we've seen the impact on futures in markets.
That's right. Our brave new world is here. And so is Mike McGlone. Always a pleasure to spend time with the senior commodities analyst at Bloomberg Intelligence. Mike, the United States imports more steel than any other country. What does this next leg of the tariff story mean for our economy?
Well, I think you nailed it with the question, Joe. It's not going to be good to raise those prices. It's going to be somewhat akin to, remember when crude oil spiked in 2008 to $4 a gallon, and then the kind of recession followed? It's not going to be similar, but it is similar, where there'll be higher costs for the producers who use that steel. The key thing from my standpoint that really matters is what it means for globally and U.S. traded copper, because steel is mostly traded over in futures outside of the U.S., but it really boosted up the price of copper. And U.S. price of copper there is up 20% on the anticipation of tariffs, potentially on the back of those other tariffs. But that's kind of an odd situation with crude oil collapsing. So I'm worried that that's kind of an area where we might have some issues where the price in the rest of the world is not up nearly as much as in the U.S.
Well, you refer to crude oil, Mike. We are seeing downward pressure on oil once again today. WTI down about 1%, even as we get news that the Saudis want OPEC Plus to continue accelerated supply hikes. Is this going to happen? What does this mean for supply and demand dynamics?
It's an impressive part of the crude oil cycle. It's in a clear bear market. Sentiment is very bearish. And now it has a significant reason to keep going lower. What you hear from the Saudis is very impressive, that they want to increase that supply, help reduce that backwardation. There's a bit of a glut of forward of supplies, and into the summer driving season, which is the time to do it. So my base case, what happened yesterday with crude oil, it bumped up a little bit. It's trying to get above last year's low, about $65 a barrel, and it can't do it. Every time it gets there, we need to see responsive sellers, so we see people like the Saudis coming in there. So I think that's the issue. Crude oil's heading towards probably $50 a barrel or lower. That's the average cost of production in the U.S., and that's what I think OPEC and Saudis know. To really shut off that shale, you need to get that price to go lower.
All right, Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, joining us from Miami. Thank you so much. We appreciate it. Of course, oil, big export of Alberta, Canada specifically, as Canada is also contending with what we were just discussing with Mike as well, higher steel and aluminum tariffs. And we want to get into all of it now here on Balance of Power on Bloomberg TV and radio, where we're joined live in our Washington, D.C. studio by Danielle Smith, the Premier of Alberta, while she's here in D.C. Premier, thank you so much for being with us. As we consider that today, as you're in Washington, steel and aluminum tariffs have now gone up to 50%. I know this is a bigger problem for the eastern part of your country than the western part, but do you still view this as something that warrants a response? What response to it would you advocate for?
I have always felt that tariffs are their own punishment, and I still don't understand why Americans want to punish the consumers of aluminum when you get 60% of it from Canada. It's also a product that Americans can't produce themselves. You don't have bauxite, so there is no way to have a homegrown aluminum industry. So we're kind of scratching our heads in Canada saying, why is this on the list? In fact, I think aluminum really should be in the same category as critical minerals and elements that we have a special relationship over. I understand why every country wants to have its own steel development. I understand that the Americans don't want the Chinese using Canada as a backdoor to dump product into the market. But some of the decisions are a bit of a head scratcher for us. And I hope it's the beginning of what will result in a new renegotiation of the USMCA so that we can get back to enjoying the virtually tariff-free relationship that benefits both of us.
Well, you're clearly ready to have a conversation. Is that how this ends? What are you hearing as you're in Washington? What are the prospects of a trade deal to get around this?
I know in Canada there's optimism. I just this week met with my counterparts, the 13 premiers, as well as the federal prime minister. And because we've got G7 taking place in the coming weeks in my home province of Alberta in Kananaskis, I think that everybody's hopeful that it would be really nice either just before or during or just after to announce that there has been some kind of détente or interim step towards getting to a comprehensive renegotiation of trade. I know that Dominic LeBlanc, who is our counterpart to Howard Lutnick, is in Washington as well, having some of those conversations. I don't want to prejudge what the outcome would be, but at the moment we have a virtually tariff-free relationship with the United States. For all of the threat of tariffs, all of the USMCA compliant goods don't have tariffs on them right now. We've got a problem with steel, cars, aluminum and timber. But I think that I think we're beginning to see a realization on both sides that we are stronger together, and it's better to maintain the relationship as it is.
Well, as you mentioned, all of the premiers getting together, what are you asking of Prime Minister Carney? Are there things you're pushing for him to do in terms of action?
I think what you're seeing is that the sentiment is that if the Americans truly do want us to find other trading partners, then we should be serious about that. We should be trading more with each other. Maybe rather than sourcing some of our steel beams and other products from America, maybe we source it from Ontario and Quebec. Maybe rather than talking about new pipelines to the Gulf Coast, maybe we talk about pipelines to British Columbia and the Hudson Bay in Manitoba, so that we can go to both Asian and European markets. So I think the conversation in Canada has maybe shifted in a way that Americans weren't anticipating. America remains our strongest and most important trading partner. Most of the provinces trade north-south, but it's really initiated another conversation about how do we trade more with each other to counteract the effects perhaps of America buying less from us, as well as how do we find new markets. And I'm hopeful that we'll be able to do that as complementary to Americans' interest in especially energy dominance. But at the moment, is when you've got a friction in your relationship, that's one of the things that we're trying to sort out. Are there new markets that we can be that we can go into?
A lot of conversations about pipeline in Alberta. You currently have excess capacity, TMX, Enbridge. Why would oil companies sign up for a new line if that remains the case?
I think that there's been some misinformation.
Yeah.
I know that the environment minister, who wants to keep it in the ground, has been suggesting that somehow TMX is only at 40% capacity. It's simply not true.
What is it?
It's at 85 to 90%. One of the things we have to do is dredge the channel that it goes through so that we can have heavier boats going so they can be filled up. But we also just recently saw a new auction that went through, and there were 400,000 barrels of demand for what was only going to be 100,000 new barrels of supply. So I have no question in my mind that if we build a new pipeline, it will be filled, especially as we look towards the Asian markets. We have been able to build a pipeline to our west coast with Trans Mountain. Initially, we thought that most of that product was destined for refineries on your west coast. But in fact, more than half of it is now going to Asian countries. Korea just announced that they're going to buy an additional $1 billion per year. They want to receive their 3 refineries an extra tanker. They've tried our heavy oil. They like it. And there are other heavy oil refineries around the world that realize that now that it's on Tidewater, we can get there directly. Yeah. And so we're going to continue looking at those opportunities. But I think that there is an incredible growth opportunity for Canada. We have a different kind of oil than America does. America has light sweet. So you've got certain markets. You've got the heavy stuff. So I always look at it as more like cooperation as opposed to competition, because we can fuel and feed different markets than America can, and it doesn't diminish at all the American aspiration for dominance. I think, in fact, Canada and U.S. together are going to be the ones that can achieve that energy dominance for all of North America.
Well, when we consider the prospects of a new pipeline that would allow you to ship, as you were describing, more oil to foreign markets, it seems Mark Carney is behind this idea, as long as there are kind of offsetting factors in terms of green investments. You described this earlier this week as a grand bargain. As you think about that bargain, how should that kind of effort be paid for, and what do you think is the most realistic route to actually get where that pipeline should go?
Our biggest oil sands producers have been proposing something called the Pathways Project. So with a combination of carbon capture, utilization, and storage, maybe small modular nuclear, direct air capture for the last mile, we believe that it can be carbon neutral by 2050, at which point that would make it the lowest carbon barrel in the world. And we also know with heavy oil, you can make 6,000 different products out of a barrel of oil. And so it can be used not only for gas and diesel and aviation fuel, but also for asphalt and other types of petrochemical products. So we're really excited about the potential for that to occur. I think our best option is another pipeline to the west coast, northwest coast, probably around the Prince Rupert area. It's only about 8 to 10 days to get to the Asian markets of Japan and South Korea by going that way, and then on into, of course, China and India as new markets as well. So if we can have decarbonized bitumen going through that pipeline, not only does the pipeline project through Pathways would cost about $10 to $20 billion. It's a big hit. But if we build that pipeline, we would get about $20 billion a year in revenue for the foreseeable future. So that's the reason why I think it's a pretty good bargain. Everyone benefits from that.
I know your oil industry is dealing with wildfires right now in Alberta at last check, affecting 7% of output. Is that roughly still the case? Can you update us on what's happening?
Yeah. When we have fires in Alberta, it's normally northern Alberta. We've got a lot of boreal forest up there. It's aged, and so once you get forestry that's about 100 years old, you either have to clear it or nature clears it for you. Yeah. And so we work very closely with our energy industry. When we hear that there's a problem, we help them. We give them clearance to do fire breaks, but we also have heavy equipment to assist with that, water bombers. We do infrared drones as well as nighttime vision helicopters, and a large number of firefighters who can help that. We've also prioritized that we want to make sure that those assets are protected when we end up with this kind of terrible fire season. In the past, we've been able to be successful in that, and we're hopeful that we'll be able to get those back online soon.
Well, and the season does seem like it's becoming semi-regular, and we're seeing the impacts of it all the way here on the east coast of the United States in terms of air quality. Is there anything else Alberta is looking at doing in terms of mitigation, trying to make sure that even with the seasonality that these fires are not as severe in the years to come?
I think we have to be realistic about the incredible volume of forestry that we have and how old it is. And so that does require the proactive approach, that you either can do prescribed burns so that you can control it, or you do mechanical removal so that you can take away the fuel, or nature will take its course. And so we've seen that now for the third terrible fire season that we've had. But those are the mechanisms that we're using. We've got to get new green growth going, because that's going to be the way that we have a differential in age in our forests, and hope that we don't end up with these problems. I should also mention we found that 67% of fires are started by human caused. So people being careless. And so we put out campaigns just saying, make sure you douse your fire, make sure that you're not sparking anything with equipment, because those are some of the reasons why we can end up with these terrible wrecks as well.
Well, we hope that everyone is safe and that you get around this.
Thank you for that.
I know you have a lot of experience in that area. Danielle Smith, great conversation. We appreciate your visit. Good luck with the rest of your time in
Thank
Washington.
You. Appreciate it.
Premier of Alberta, Canada.
Wish luck to the Oilers. Stanley Cup.
Okay.
Go Oilers.
There it is. You got it in. That's for producer James. Hey, we'll meet you back on the late edition of Balance of Power at 5 p.m. Eastern Time here on Bloomberg TV and radio, with the latest on reconciliation and the meeting with Republican senators and President Trump at the White House. It's all ahead here, only on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Good afternoon, everybody. This is Bloomberg Business Week live on Bloomberg Television and Bloomberg Radio, streaming on YouTube and Bloomberg Originals. I'm David Gura, alongside Emily Grafeo. Carol Masser and Tim Stenivek are off today. Let's start with the setup this hour on this Tuesday, June the 3rd, where markets are reacting to weaker than expected economic data, a disappointing report from ADP, the latest ISM data showing a contraction in U.S. service providers, that providing the backdrop to the market action today. More on the trade in just a minute.
And ahead this hour, we're going to be talking about the Beige Book, those headlines coming in just a couple seconds right now. The Federal Reserve is going to be releasing this for the month of May. We'll take a look at what stood out in that report from regional Fed banks around the country amid all of the economic uncertainty.
We're also going to look at the oil market after OPEC Plus boosted production again, this time by more than 400,000 barrels, what that decision means for the cartel, for Russia, which was against that decision, along with a handful of other producers, and what it means for oil prices as well.
And the latest estimate from the Congressional Budget Office of what President Trump's big, beautiful bill, as passed by the House of Representatives, would mean for the deficit as the Senate works on its version of that legislation. Henrietta Treyz of Vita Partners is going to join us with the latest state of play.
A lot to come, but first up, a check on the day's trade and top business stories with Bloomberg's Charlie Pellet.
Hi, thank you very much. Here's what's going on. Do want to begin with the developing story. Just getting word, headline right now on the Bloomberg Professional Service. Yale nearing a deal to sell up to $2.5 billion of private equity stakes. That news breaking right now. The Dow, the S&P, NASDAQ all higher right now. A lot of economic data. S&P up 18, up 0.3%. The Dow up 73, up 0.2%. And NASDAQ up 87, up by 0.5%. 10-year at 4.35% with the 2-year 3.86%. Gold up $26 the ounce, up 0.8%. And a retreat for crude down 1.2%, 62.65 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. All right, a lot of news about the U.S. economy on this Tuesday. Hiring slowing in May. Private sector payrolls increased by just 37,000, and that's lower than all of the estimates in a Bloomberg survey of economists. And we're also getting those headlines right now from the Beige Book. The Fed saying U.S. economic activity has declined slightly. Employment little changed since the previous report. As we get all of this, we're going to bring in Katerina Saraiva, Bloomberg News Federal Reserve and economics reporter. She joins us now from Bloomberg's bureau in Houston. Can we get your live reaction to the Beige Book? I mean, it really just came out like 15 seconds ago, Katerina.
Yeah, that's right. But what we're seeing, seems to indicate that it's a pretty similar report to what we've been seeing this year. It's showing that businesses and consumers are kind of waiting to see, not making huge decisions yet, kind of waiting to see how this tariff fight plays out. You can see that activity declined slightly, but nothing major there, and that the labor market and inflation are kind of going along, kind of steady state as they have been.
I did something cumbersome here. I did a Control F, just look to see how much tariff appears here in this document. 122 times in total, and it's a kind of scan just to see what's happening in different regions across the country. So many of them saying here economic activity declining modestly, speaking to that level of uncertainty, maybe some hesitation among businesses as well. Katerina, how does the Fed look at this release in particular? Of course, it has that panoply of data, both hard and survey data it's going to look at when it meets in Washington in just a little over a week. How much credence do they give this kind of anecdotal data that's been collected by the Federal Reserve banks all across the country?
I think right now they give a good amount of credence to this type of data because the hard data, right, the indicators that the government publishes on a monthly or quarterly basis are just that. They're about a month or a quarter behind. So data like this that's showing kind of what's happening on the ground can be really valuable for Fed officials, especially right now when there is all this uncertainty.
I feel like we've been talking for so long about weakening consumer sentiment, and you see it cropping up in corporate earnings. You see it just in terms of the data that we're getting. If you look here in the Beige Book, it does say that consumer spending increased slightly in recent weeks. Retailers reported steady to increasing sales. They noted a decline in big ticket purchases. As someone who studies the economy closely, what's your current take of the state of the consumer in the U.S.?
Yeah, I mean, it's really interesting, right? Because we heard a lot of concern when tariffs were first announced that this was really going to hit consumption. And the consumer, of course, has been a massive driver of the economy. I mean, it's like 70% of our economy. So it's very important. But we haven't seen that weakness materialize. Consumer sentiment was very negative in April, but that turned around in May. And people are attributing that to, you know, some of these pauses on tariffs and just kind of more optimism that deals are going to be reached. So it's been a really interesting story because the consumer has stayed strong. And I think a big part of that is the labor market, right? People still have jobs, so they can spend.
You look at all of the sections herein, there's trade and services, there's manufacturing, there's a portion on prices as well, and that's where I'd love to go next. There's a line here. When asked about anticipated changes to their industry's costs over the next 6 months and how they expect their competitors to respond, more than 2/3 of those firms surveyed, anticipated increasing costs and expected their competitors to increase prices in as little as 2 months. That, of course, is such a huge part of the narrative surrounding this trade war and the underlying uncertainty. Could you dovetail that with what we've heard from Fed policymakers, presidents, and others here in recent weeks, just about what concerns exist about the kind of unanchoring of or kind of dissolution of inflation expectations?
Yeah, I mean, that is of paramount importance to them. If inflation expectations, especially in the long run, like how people think about inflation in 5 years, if that becomes unanchored, if that basically goes higher than around that 2% level where the Fed likes inflation to be, then that completely takes away the Fed's ability to control prices even in the near term. And then that's where the trouble really starts. That's where you have to see either rates stay at these levels for longer or potentially move higher because they are really going to want to get that under control. But so far, we haven't seen that in most of the measures. We've seen that a little bit in the University of Michigan data, but other measures, including market measures, are showing pretty stable inflation expectations.
Katerina, I want to get to your story that you published today with Katanga Johnson about Trump's pick for the Fed's top bank cop, Michelle Baumann. Tell us about who she is, how important this is for Wall Street to have her as the vice chair for supervision.
Yeah, so she has been a Fed governor since 2018. So she's been at the Fed, you know, for a while. She speaks a lot. So she's made a lot of speeches, detailed speeches on bank policy, you know, where she thinks that should go, and on monetary policy. So her views are very widely known. There's, you know, not really going to be any surprises here, probably. And she is a supporter of a lighter approach to bank regulation. She was came out against Barr's proposal for increased capital. She's kind of aligned with kind of the industry when it comes to that. But she is also someone who is pretty outspoken about, you know, good supervision and kind of staying strong on that front. She wants to do an independent review of what happened with SVB, with the SVB collapse. So she is, while she has a kind of a lighter approach in terms of regulation, she is, pretty dedicated to still like supervising the industry in a rigorous way.
I was so interested reading this profile that you wrote with Katanga Johnson, and something that really stood out as you wrote about Mickey Bowman's rise is the way in which she kind of paved her own way here to get to this position. Talk a bit about that, and I know that we've seen some quiet here when it comes to the president bad-mouthing Fed Chair Jerome Powell, but does she represent the kind of prospective Fed chairman that this president might like to see in that seat going forward?
You mean for the chairmanship or for the vice?
Yeah, for the chairmanship, just in terms of leadership of the Fed, sort of what does she represent? I know that she's sort of out of mode with the terms of kind of traditional academic economists that have been on the board in recent years.
Yeah, but I think, if that were, once, I think they're going to start looking to replace Chair Powell in the fall. His term ends next year, so they will start looking around for a replacement for him. And I think her name will probably, be in contention for that. She is already on the board. She's kind of proven herself to be, a dedicated policymaker. But I think that her name could be in the mix. But I do think they want her for this supervision post because she is, I think, quite aligned with how the administration thinks that bank regulation and supervision should be approached. So for that position, I think that there's, we've seen, obviously the administration felt confident in nominating her, and she's expected to pass through the Republican-controlled Senate, perhaps even this week still. So I think that is something that where those folks are supportive of her.
And someone who stands in such stark contrast to Michael Barr, who had the position beforehand. Katerina, thank you very much for the time. Thanks for going with the flow here on that 54-page beige book and getting through the details so much as we could here in real time. Again, the takeaway from that seems to be uncertainty kind of pervading all of the Fed's districts around the country, but so much economic news today. Katerina Saraiva is the Federal Reserve and economics reporter for Bloomberg News, and she's based in our bureau in Houston. Want to switch now to the energy market and what rising stockpiles mean for the global economy. We saw OPEC Plus, that group of oil-producing countries, decide to add 411,000 barrels a day in August, maybe the same amount in September as well. And there was some dissent in the cartel this time around. Russia, Algeria, and Oman all pushing back on that decision, which was strongly advocated for by Saudi Arabia. Fortunate to have with us today Ellen Wald, author of the book Saudi Inc. She's the president of Transversal Consulting and a senior fellow at the Atlantic Council. She joins us now from Boca Raton in Florida. Dr. Wald, let me ask you first of all just about the motivations for this decision. We've seen Saudi Arabia pushing for this over the last couple of meetings here. What's motivating them to do it? I recall last time there was a lot of talk of them wanting to punish producers who weren't upholding their end of the bargain. Is it as simple as that?
No, I think that there's much more going on here, especially a very kind of comprehensive look both at the markets, but also at where supply is going and where supply is going to be coming from in 2026. They're talking about some very small incremental increases in production that had been voluntarily kept off the market by certain producers. So they're not even really talking here about amending the overall quotas, which would require, a consensus from the entire group. So this is oil that certain producers have been keeping off the market in order to kind of help prop up prices. And I think what they're seeing is that their efforts aren't necessarily propping up prices all that much at this point. So, why are they keeping this oil off the market? The more oil they can sell, even at slightly more depressed prices, is still more money in their pocketbooks. And then they're also, as I said, looking forward to 2026. And they're looking at reports that shale oil production is potentially peaking, is not necessarily going to be growing as much or at as nearly as fast a rate as it has been. And so they'd like to be the ones that are kind of filling those gaps potentially in the market and get ahead of that. And so I think that that's really where this is coming from, more than kind of an idea to punish over producers.
How long can Saudi Arabia tolerate prices as low as they are, and if they drift even lower still? So I look at Brent here at about $62.60 a barrel. That's low, and I know that it must be causing some modicum of pain, at least on the Saudi Arabian economy. How long can they continue to push for this and deal with prices being at that level?
Well, Saudi Arabia can tolerate it longer than any other country or company. Aramco, the national oil company in Saudi Arabia, has the lowest cost of production of any producer in the entire world. We're talking between $2 and $6 a barrel is their cost of production. So no matter what, they're making more money per barrel of oil that they sell than any other producer out there in the entire world. So they can tolerate it. The company Aramco can absolutely tolerate this. Would they like oil prices to be higher? Sure. most producers would like oil prices to be higher. They don't want them to be too high because they feel that can kind of start to crimp demand. But from their perspective, they definitely like it. They're fine. I don't think that they're in any rush to have oil prices higher right now. I do think that they're aware of how things are going. Aramco did just issue another bond. That doesn't mean that the company is in trouble. That doesn't mean Saudi Arabia is in trouble. Would the Kingdom of Saudi Arabia love to have more money to play with? Sure, who wouldn't love to have more money to play with? Does it mean that their economy is about to fall apart? Not at all.
Dr. Wald, bring Russia into this. How do the falling prices of oil and these rising global stockpiles impact Russia, especially when it's still in the middle of a war?
Yeah, this is a really interesting issue for Russia because reports are that Russian oil revenues, or at least the money that they're getting just on selling crude oil, are at their lowest point, at least in the last month, than they have been for 2 years. And that's basically reflective of the price of oil because they're still shipping essentially the same volumes. And so, when you look at this fact off the bat, you might think, oh, well, that might actually affect the Kremlin. That might affect their decision making when it comes to their war and their country and their economy overall. But that number and that statistic doesn't really speak to Russia's revenues from its oil trade because while revenues per barrel may have dropped, it has started selling shipping services and insurance, and it's been making quite a bit of money on that. And we don't really have a good measure of how much money it is making on that. They're also making quite a bit of money selling LNG. Their LNG, sales have gone up. They're actually selling quite a bit to Europe, believe it or not. And so that's also making money for them. So I would say that yes, it's an interesting fact, but it doesn't mean that they're suddenly, not going to have enough ammunition to continue their war. I think, this is a very long, drawn-out issue, and oil is not necessarily the key to the solution here.
We're going to talk in a few minutes here with our colleague Nick Wadhams in Washington about a phone call that took place today between President Putin and President Trump. So we'll get more into the relationship, the dialogue between these two countries. But in the minute that we have left, I'd like to ask you about another delicate dance of diplomacy that's taking place here when it comes to some sort of deal with Iran. So again, with just a minute here, how does that stand to change the kind of energy calculus as those talks continue, and if there's to be some sort of agreement maybe in line with what there was in place during the Obama administration?
Yeah, I think the most important thing to remember about this Iran deal or negotiations for oil markets is that Iran's oil output on the market is much higher than it used to be. It's over 3 million barrels a day. And so if sanctions suddenly disappeared tomorrow, Iran is not holding on to a huge amount of oil it can suddenly flood the market with. It's basically where its oil production is at. And if sanctions were to disappear, there would be some impacts, but it wouldn't really impact the amount of crude that Iran can put on the market. So those kind of ideas that suddenly we're going to have a lot more supply if there is a deal, that's really unfounded.
Ellen Wald, thank you very much for the time, for that perspective on what's happening with OPEC Plus, with that cartel, its decision to boost production, and also insight into one member of that cartel, of course, Russia, which was pushing back on that decision to boost production here in August and looking ahead to September as well. And as I mentioned, we're going to talk in just a few minutes with Nick Wadhams about the status of negotiations, talks between the U.S. and Russia. President Trump having a phone call today with President Putin in which they talked about some sort of deal for peace in Ukraine, but also about Russia's intention to retaliate in response to the attack that Ukraine made on a Russian airfield just a few days ago with drones. Ellen Wald is the author of the book Saudi Inc. She's the president of Transversal Consulting and a senior fellow at the Atlantic Council. On this Wednesday, with a new beige book from the Federal Reserve, looking back at the month of May. David Gura here with Emily Griffeo on Bloomberg Business Week, on Bloomberg Radio and YouTube, Bloomberg Television as well. Much more to come. We're in for Carol Masser and Tim Stenevec, who are off today. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The latest beige book is out. Economic activity in the U.S. declining slightly in recent weeks. Tariffs and uncertainty affecting the economy. Right now, we have got the S&P, the Dow, NASDAQ all advancing. S&P 500 index up 17. Gain now of 0.3%. The Dow up 55, up 0.1%. The NASDAQ Composite Index higher by 84, up by 0.4%. Our Mag 7 index up 0.3%. The 10-year, 4.35%. Busy day for economic data. The 2-year, 3.86%. Spot gold currently trading higher by 0.8%, 33.80 right now, while West Texas Intermediate crude down 1.1%, 62.74 a barrel. Tesla's vehicle shipments from its China factory fell for an 8th straight month, extending a global sales slump for CEO Elon Musk. Right now, we've got Tesla down 2.9%. This is a ship carrying about 3,000 cars to Mexico was abandoned in the middle of the Pacific Ocean after catching fire. Many of those vehicles on board EVs. President Nicolas Maduro's government is cracking down on Monitor Dollar. That's a social media account that provided exchange rates for the Venezuelan bolivar on the black market, arresting nearly 24 people associated with it. Recapping, stocks higher. S&P right now up by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. Well, let's get back to the big, beautiful bill. On Capitol Hill, Republicans in the Senate are working on their version of what President Trump calls this big, beautiful bill. And as they do that, we're getting new details from the nonpartisan Congressional Budget Office about what the House version as passed would do to the federal deficit. The CBO estimates it would add $2.4 trillion to U.S. budget deficits over the next decade. The CBO also says it expects it would leave almost 11 million people in the United States without health insurance in 2024. Henrietta Treyz is the co-founder of Veda Partners, where she is director of economic policy with a particular expertise in how the Senate works. So she joins us now. Talk about these numbers. What exactly do they tell us, Henrietta?
These are big numbers. 2.4 trillion is a record breaker. The last highest reconciliation bill was 1.9 trillion. So this will be winning some awards for sheer deficit increases on that account, which is exciting. The bill is going to change a lot from here. And my base case expectation, knowing the Senate, is that it's going to become more deficit financed. I think for bond investors, there's something to watch for here, in that the senators are going to use a current policy baseline where the House does not. And this is a big differential between the two chambers. The House assumes that passing an extension of the 2017 tax cuts plus some of the other components of the bill will generate $2.5 trillion of economic activity, dynamic growth. On the Senate side, they're not going to use that formula to wipe away some of the budget costs. They're going to instead assume that extending the existing rates costs nothing. $3.8 trillion or $1.3 trillion more will be deficit financed. So the scale of the Senate bill is going to be quite a bit more substantial. They're going to try to make some of the business provisions more permanent than the House bill. The SALT cap is going to have to come down. The IRA cuts are going to have to come down. The Medicaid cuts are going to have to come down. The deficit is going to grow, is the bottom line, as the Senate spends the next 4 weeks crafting their version of this bill.
Henrietta, I'm curious, as I'm sure you are, about how a Senator Rand Paul is looking at the numbers from CBO today, maybe a Rick Scott, maybe a Ron Johnson as well, as they kind of make the argument for deeper cuts in the Senate version of this bill. I heard Senator Paul talking about the power that he thinks he and these other holdouts have here in these negotiations, and I'm curious if you think that he's right about that these holdouts are going to be able to exert some real sway here as the Senate gets down to brass tacks and reshapes this bill.
Great question. I actually think this is some of the most interesting change that we've seen since the Senate has taken up this bill and gotten back from recess. Rand Paul's material objection is to the $5 trillion increase to the debt ceiling that the Senate bill is going to include. And so there's already discussion of trying to get him back into the fold as a potential yes vote in changing the debt ceiling numbers associated with the Senate package. So right now, the sort of whisper around the senators in the Republican conference is that, hey, maybe we just cut that in half and get Rand Paul over to our side again. Because right now, if Rand Paul is a no, just on the debt ceiling alone, then Senator Thune only has 2 votes to lose from there. So cutting the debt ceiling hike, which is not the same as the deficit, but a really important part for Rand Paul, down to $2.5 trillion, which would get the Senate and Congress functionality through about March of 2026 instead of November of 2026, is, I'm told, a part of the conversation. So we're really trying to move the parameters of what might get Rand Paul, which to me really underscores the trouble that Leader Thune is going to face when we get back to what you were just mentioning, the 10.9 million individuals who will be kicked off Medicaid, 9.5 million of whom are not in the undocumented migrant space that Republicans talk about a lot. These are just regular, everyday Americans who will be kicked off of the Medicaid program. So there's going to be a lot of loss from West Virginia, Susan Collins in Maine, the Alaska senators, that's Sullivan, who's up for re-election next year, and Murkowski. So there's a lot of moving parts that Thune needs to walk through here. Getting Rand Paul on board by cutting the debt ceiling hike in half might be very helpful.
So how then do you anticipate the timeline of this bill eventually making its way to President Trump, maybe assuming that we do get those holdouts, the Rand Pauls, signing off on it? Is the timeline really realistic that this does get on Trump's desk by July 4th?
No, it's going to go through the Senate by July 4th. That's the strategy that Senator Thune is working with right now. There are 3 committees who are rolling out their bill this week. There will be another next week. And then the Senate Finance Committee, which is responsible for almost all the package, all the tax provisions and the Medicaid cuts, they're going to go last. And that'll come either the week of the 16th, right before Juneteenth, or it'll come the following week, the week of June 23rd. This bill is going to get very messy, very complicated. They have a lot of changes that they need to make with the House Republican package. As I mentioned, the SALT caucus alone is going to raise holy hell with them, and they're going to be in a meeting at some point. They haven't been given an audience yet, but they will have to do that. And then what that creates is a scenario where the House and the Senate actually go to conference. First and foremost, for investors, what you should hear when I say that is this is a time suck. It can be 1, 2, 3 weeks even. So that paints the picture for passages of this legislation at the end of July. July 24th is when the House is scheduled to go on recess. August 1st is when the Senate is scheduled to go on recess. The X date for the debt ceiling is in mid-August. That's the time horizon folks should work with.
Very quickly here, just what is happening at this moment, drawing on your experience working in the Senate, what's happening at this moment in time? I know committees are releasing their legislation sort of one by one, but in the minute that we have left, sort of what's the actual state of play? What's happening on the ground in Senate office buildings today?
Lobbyists are fanned out everywhere. They're trying to get their IRA tax credit back in. They're trying to tweak the I-899 provision that gives the Treasury Secretary the authority to tax unfair tax countries, foreign entities and such. There's a lot of behind the scenes work going on before that bill gets released. The rule of thumb in DC is you want to get your provision out before the bill gets released. Get it out before it's in. Once it's in, you can't get it out. So the aggressive lobbying happening behind the scenes right now.
Henrietta, always good to talk to you, get your update. That's Henrietta Trey. She's the co-founder of Veda Partners, where she's the director of economic policy. I want to turn now to another story we've been following this afternoon. That is another phone call today taking place between President Trump and President Putin. Trump said his Russian counterpart had a warning for Ukraine that he plans to retaliate for a recent drone strike on Russian airfields. Joining us now with the latest on this is Nick Wadhams. He's the leader of Bloomberg's national security team in Washington. And Nick, I'll start with a basic question here. We've been watching as President Trump has aspired to get on the phone with President Xi. He's had more success talking to President Putin. What precipitated the call, and what do we know of what they talked about?
A couple of things. I mean, obviously, the big one was the drone strikes over the weekend where Ukraine launched strikes on Russia's strategic air forces deep within Russian territory. It was a shocking development over the weekend. And then, obviously, the U.S. has really been pushing Russia to agree to an unconditional ceasefire in Ukraine. It's a pretty extraordinary post on social media by the president in one way, because he seems to be granting credence to the Russian argument that they can't agree to a ceasefire at the moment and will have to respond to the Ukrainian attacks. And then he also goes on to say that Russia has offered its help on the Iran nuclear issue. So the president is speaking to Putin very much as an equal, seems like almost as a partner. So really underscores and will fuel a lot of criticism from some of the president's critics, certainly on the left, who say that he's willing to give President Putin essentially the benefit of the doubt over Ukraine.
Right. I'm just kind of reading this social media post and quoting here from Trump. President Putin did say, and very strongly, he will have to respond to the recent attack on the airfields. What exactly is Trump kind of insinuating here? What would that kind of response look like, or do we not know?
Well, I mean, one of the big dynamic, the context here is that the president has said previously that he wants a ceasefire immediately in Ukraine. He wants to stop the fighting, and he wants a ceasefire to pave the way for a peace deal. Ukraine has said repeatedly, okay, it's on board with that idea. And then at the same time, the president has criticized Russia in the past for launching continued strikes on Ukraine. So the president has, in the background, gotten a little bit more impatient with Russia for not agreeing to that ceasefire. But then what you see him doing here is saying essentially green lighting the idea that Russia has every right to respond and that there will be no ceasefire. I think he also says in that tweet that it's not looking good for peace at the moment. So you have a very contradictory statement from the president, where on the one hand he's pushing for a ceasefire, but then essentially standing out of the way as a major U.S. adversary. Russia says it's going to launch new strikes on a putative U.S. ally, Ukraine.
Nick, in the minute we have left, I'd love to ask you about dialogue between two other parties, the United States and Ukraine. I'm curious, was the U.S. caught unawares by this attack by Ukraine on Russia? And how much conversation is there among those two nations about the path forward here?
Well, I mean, that's certainly been strained. As far as we understand from the administration, they were not tipped off by the Ukrainians about this attack. I mean, I don't think that would necessarily be a huge surprise. It's not clear to me that the Biden administration would have been tipped off on it. I think regardless who the U.S. president was, Ukraine has shown an occasional willingness to seek forgiveness rather than permission in some of its strikes on Russian territory. Joe Biden also came out against some of those and said that they would lead to an escalatory spiral. So not a huge surprise there, but it does raise bigger questions, because while the U.S. has not been re-upping its military aid to Ukraine, it has been willing to continue to supply Ukraine with a lot of intelligence, satellite data, and things like that to help it fight the Russians. So when you see a tweet like this from the president, it really does open up the possibility that sort of everything's on the table. And, the real question is what President Trump does with Ukraine right now. There are Ukrainian officials in D.C. at this moment meeting with Marco Rubio and other administration officials. So really trying to figure out at this moment what they're telling them.
Nick, appreciate it. That's Nick Wadhams. He's the leader of Bloomberg's national security team, joining us from Washington, giving us detail on that latest phone call between President Trump and President Putin.
And still to come, today's Bloomberg Big Take, an investigation into Tesla's full self-driving function, how it's led to fatal car crashes, and how regulators have responded. And just looking quickly at markets, we do see S&P 500 in the green. We're up over 0.2%. Yields much lower as that economic data came out weaker today. NASDAQ 100 higher, though, outperforming those tech stocks.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks in the green right now. The Dow, the S&P, NASDAQ all advancing. S&P currently higher by 14 points. That is a gain of just about 0.2%. Dow Jones Industrial Average up 19 on the Dow. That is a gain of just under 0.1%. Little change there. NASDAQ, meanwhile, up 88 points for the NASDAQ Composite Index, a gain of just about 0.5%. Weaker than expected economic data, leading to speculation that the Fed will cut interest rates at least twice this year. The 10-year, 4.36%. The 2-year, 3.87%. Gold is now higher by $25 the ounce, up 0.7%, 33.78. And West Texas Intermediate crude oil down 0.7%, 62.99 for a barrel of WTI. Wells Fargo shares up 0.1% after finally escaping a Federal Reserve asset cap that has restricted its size for more than 7 years, unleashing the firm from the unprecedented punishment and a major win for CEO Charlie Scharf. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you very much. And one of the most read stories on the terminal today is the Bloomberg Big Take, a harrowing account of a fatal 2023 car crash involving a Tesla Model Y that was using full self-driving, a crash that took place in Arizona on Interstate 17 between Flagstaff and Phoenix. Bloomberg News senior technology reporter and contributor to the Elon Inc. podcast, Dana Hull, writes that as Elon Musk touts robo-taxis in Austin, federal regulators are investigating whether the system in the Tesla is dangerous even with a human behind the wheel. Dana joins us now from the Bloomberg San Francisco Bureau, and I should commend this piece to everybody. It's sobering and includes very dramatic video captured by this car as it goes at highway speed and crashes into someone next to her Toyota RAV4. Dana, talk a bit about the video that you were able to obtain, that Bloomberg News was able to obtain here. It was through a public records request. But what it shows, what it reveals about what seems to be a huge flaw here in this feature that Elon Musk has touted.
Yeah, so thanks, David. To back up for a little bit, in October, NHTSA announced that it was investigating what Tesla calls FSD because of 4 crashes where the system seemed to struggle with fog, glare, dust storms, things like that. And they mentioned one of the crashes was a fatality involving a pedestrian. And I read the NHTSA report and was like, wait, what, a pedestrian was killed? Like, what was this? What happened? And there weren't any other details. So I filed a records request and got the crash report, over 250 photographs, and some pretty harrowing footage, some of which we shared with everyone today. And it just really shows this vehicle not slowing down despite the glare on the screen, and not seeing parked cars with their hazard lights on, not seeing another human being like desperately kind of signaling to them to slow down, and then hitting this one. We stopped before the impact, but then obviously this woman is sort of hit straight on, and it just raises a lot of questions. And Tesla fans will say that the software and the hardware since then has been upgraded, and I'm sure that it has. But at the time, the driver was using what was likely the most up-to-date version of that FSD that existed, and it's just a really tragic case that a lot of people don't know about.
So, talk a little bit about full self-driving, and in the case of this crash, what we know about what the driver was doing, what drivers of Teslas with FSD are told. Are they supposed to keep their hands on the wheel? Do they have full control over the brakes and wheel? How does that work?
So that's been a big issue in terms of how Tesla has marketed this. It is marketed as FSD, but Tesla makes very clear in all of its literature to its owners that the owner of the car is responsible for the car at all times and should be ready to take over. So we don't really know. All we have is what the driver said in the crash report, which was, "I'm sorry, it all happened so fast. All of a sudden, there were cars in front of me, and I couldn't stop." So we don't know more than what he told police right in the aftermath of the crash. I do think it's significant that Tesla ultimately reported this crash to NHTSA, and the investigation NHTSA's investigation is ongoing.
Dana, you could step outside our bureau in San Francisco and you could hail a Waymo, a self-driving taxi. And I think it's useful to explain the difference in the way these self-driving systems work. So we're talking about a Tesla system here that relies predominantly, if not exclusively, on cameras. How does that differ from what Waymo is doing from its competitor?
Yeah, so if you live in a city like San Francisco or Austin, where Waymo is ubiquitous now, they have a lot of sensors. They use cameras, they use radar, they use LiDAR. LiDAR is the thing that kind of spins around on the top. A lot of people complain that it looks very clunky, but they have a very robust sensor suite so that the vehicle is not reliant on one input. They are kind of actively gathering data from around the car using multiple sensors. And that is one approach. That is the approach that Waymo has taken. It's the approach that, others like Aurora and Zoox have also taken. Elon Musk has taken a very different approach. And his idea is that a vision-based system or a camera-based system with a lot of machine learning and these incredible neural nets can basically do the same job for much cheaper. And part of the argument is that Tesla has so many cars on the road that they have a lot of data that they have trained their systems on. And so, there's a big debate in autonomous vehicle development about whether you can truly be self-driving without LiDAR or not. I just think what this crash shows is that a camera-based system struggles sometimes with glare, and this was one of those very tragic edge cases.
What have the regulators said, if anything, about these systems that just use cameras?
I mean, they have not, they are investigating 4 crashes where they seem to struggle in these certain conditions like glare, but they have not they're not ordering a recall or anything like that. And just note that investigations do take quite a lot of time. There's typically a lot of back and forth between NHTSA and automakers. They ask for a lot of engineering details, and they often do take several months.
I'm curious here sort of about the way that this administration and the Department of Transportation in particular see the advent of and the adoption of self-driving vehicles like the one that's featured in this story. Do they see it as the future? Do they see it as kind of a complement to the way that we drive today? Sort of how are they looking at the prospect of these cars being on the road?
I think they very much see it as the future. And, we have to remind everyone that roughly 40,000 people die in traffic accidents in the United States every year. A lot of traffics are because of speeding, because of drug and alcohol use. And if there is anything that we could do to really drive that number down, that would be terrific. And that has always been the promise of autonomous vehicles, that autonomous vehicles can drive when you're tired, and they can do long-haul freight runs, that kind of thing. But as we're seeing these vehicles, being deployed either in testing situations or, starting to become commercialized, there have been accidents. And I think that the industry needs to be very upfront about what those accidents have been.
We only have about a minute left, but I'm wondering if you could compare, where Tesla currently is in this race for autonomous driving versus other U.S. automakers.
I mean, I think the big competitor to Tesla is Waymo. As David mentioned, I can, step outside of my San Francisco office and hail a Waymo, and it will show up, and there is not a driver there. Tesla does not yet have a functioning robotaxi, customer service-based system yet. They are talking about kind of launching one in Austin this month. We'll see whether that's a big event or like a soft launch, but they are definitely, they don't have a commercial business doing a robotaxi yet. However, that's been the big promise of the company for quite some time now, that we're going to see robotaxis everywhere, and eventually if you own a Tesla, will be able to add your vehicle to this growing fleet.
Dana, thank you very much, and thanks for the reporting as well. The piece is "A Fatal Tesla Crash Shows the Limits of Full Self-Driving" by Dana Hull. She wrote it with Craig Trudell and features, again, this very sobering video. We didn't show any of it to our audience on television and YouTube, but you can see up until the moment that self-driving Tesla hits a pedestrian in Arizona just a couple of years back, and it's well worth reading just to hear about the limitations of that software, of that feature in the Tesla. You can read the full story and more from the Bloomberg Big Take on the Bloomberg Terminal and at bloomberg.com/Big Take. Again, that piece there by Dana Hull with Craig Trudell. Look at markets here on this afternoon. We see stocks up slightly. S&P 500 up about 0.25% on the heels of all that economic data, the ISM report that we got this morning, data from ADP as well about job openings. As we look ahead to Friday, of course, Jobs Day, when we'll get the latest read on the U.S. labor market, about a week plus away from the next time the Federal Reserve sits down. We'll be talking about how markets are viewing that meeting and future ones coming up here on Bloomberg Business Week on Bloomberg Radio and television and YouTube. David Gura and Emily Grafeo in for Tim Stenevec and Carol Masser. This is Bloomberg.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stenevec on Bloomberg Radio and Television.
And this is Bloomberg Business Week. Let's take a look at some stocks on the move today. I'm Emily Grafeo with David Gura, and we're joined by Bloomberg News equities reporter Alexandra Semenova for stocks on the move. Alex, what are you looking at?
Hey guys, great to be on with you. I'm taking a look at a really fun one, actually. Is a company focused on K-pop, short for Korean popular music. It is soaring today, up 134% right now after saying it would sell up to $500 million worth of shares to buy Bitcoin. The company at some point was up as much as 236% today. They say that they plan to become the meta planet of Korea. And actually, funny enough, they're following the same strategy as Michael Saylor's company strategy, where they sell shares of the company to buy the cryptocurrency. Really interesting. Investors are really liking this.
This is becoming like a model, I think. Maybe not a widely spread model, but I see other companies
you can
like
make
doing
a lot
that.
of money doing
Fair
it
enough,
when
fair
Bitcoin's at over 100,000.
Yeah, and just a broader testament to like risk investment fully back on. The risk mood is obviously very high with companies like this doing so well. They also went public last month through a blank check company, sounding a little bit like 2021 again.
Here we are. That's KWM. What else are you watching this afternoon?
Also looking at Dollar Tree, just taking a look at the move right now. It's down more than 8%. It warned its second quarter profit may be down 50% from a year ago, citing, of course, tariff-related costs. That also includes the 145% levies on China. The company did say that it expects profits to reaccelerate in the second half of the year, but obviously that wasn't enough to please investors. It said that its sale of Family Dollar for about $1 billion earlier this year will allow it to focus on its dollar store chains, but it is navigating what it says is called a rapidly evolving environment. And
still laughing at the fact that, like, I was on surveillance yesterday, and John Tucker posited that Tom Keene had never been in a Dollar Tree store before, which may be in fact true, and he's not here to defend himself. But how much is this like part and parcel of a theme that we're seeing among retailers, just kind of expressing concern about, yes, the uncertainty, but about tariff policy more specifically?
I mean, uncertainty has been the name of the game in all these corporate earnings. One of my colleagues did a story about how mentions of the word uncertainty reached more than 3,000 this earnings season. So investors are really, companies are trying to navigate it, investors are trying to navigate it. But something fascinating is Deutsche Bank actually said that the earnings hit is going to be a third of what initially projected because Trump has been backpedaling on his trade policy so much. So it may not actually be as bad as a lot of companies are saying.
Okay, and so Dollar Tree, ticker DLTR, down as much as 11% today. It's still pretty much holding on to those losses, down about 8% right now.
Taking quite a hit right now.
What else?
Last one I'm looking at is CrowdStrike, also having a bad day today, down about 5% right now. They projected revenue for the current quarter that came in below Wall Street estimates. They expect sales of $1.15 billion, and despite actually beating their earnings, their stock is down. It was down as much as 9% earlier in the day. So they've also been struggling with facing investigations by prosecutors and regulators over a deal with Carasoft Technology. And so they're dealing kind of with a lot of problems right now.
Yeah.
Thank you very much, Alex Semenova, with that update on the movers this afternoon. And we're going to bring you those throughout the afternoon here. For more conversations like this, you can listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere else you get your podcast. David Gura with Emily Grafeo here in for Tim Stenevec and Carol Masser. Just looking at the markets more broadly, you've mentioned this before, but we've seen this most manifest in the bond market on the heels of that economic data this morning. Anything catching your eye as you were looking at stock market today?
I mean, just to go back to CrowdStrike for just one moment, we just got reporting from Bloomberg about like a couple minutes ago. CrowdStrike Holdings said U.S. officials have asked for information related to the accounting of deals it's made with some customers and said the cybersecurity firm is cooperating with the inquiry. So it's interesting that not only was it an earnings miss, but potentially also now these headlines coming late in the afternoon also weighing on the stock. But yeah, the bond market data is kind of taking all my attention. That 30-year, it was almost at 5% like 2 days ago. Now we're back down to 4.8.
How far we've come.
How far we've come. Everyone was talking about duration, and yeah, now we're really seeing people talking about potentially a Fed cutting more than they thought this year.
Yeah, it'll be interesting to see sort of where we go from there. And again, looking ahead to Friday, we have this jobs report, and so much of the narrative, as I've sort of seen it and heard folks talking about it, has to do with the fact that we've seen this jobs market weaken so much. And being on the Federal Reserve Board of Governors, no job that I envy at this point in time, having to deal with all of this, the kind of underlying uncertainty that we were talking about just a few moments ago in the context of these companies, certainly with the president's trade policies, but then having to navigate this kind of collision of sentiment data with hard data like those jobs numbers that we're going to get on Friday as well. Yeah, interesting to see sort of how people are kind of rejiggering or changing their forecasts for cuts over the course of the year.
And yet, S&P 500 is higher, not by much today, but it's not like risk appetite has completely left markets. You also look at like the kind of more animal spirit type stocks. The ARK Innovation ETF is higher. A basket of most shorted stocks from Goldman Sachs is up almost 2% right now. So that kind of like bid for speculation is still here, David.
I'm going to use the Fed here as a segue to say that it was yesterday that Wells Fargo emerged from that cap that had been put in place by the Fed when Janet Yellen was the Fed chair. Just a couple of minutes here, we're going to hear from our Bloomberg TV colleagues. They're going to sit down, Romaine Bostick and Katie Greifeld, with Wells Fargo's CFO, that's Mike Santomassimo, to talk about where the bank goes from here. I should say investors very excited at the prospect of that cap being gone. This is Bloomberg Business Week on Bloomberg Radio, television, and YouTube.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
David Gura here with Emily Grafeo in for Tim Stenovec and Carol Massar. They are off today. This is Bloomberg Business Week, live from the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. A lot coming up here in the course of this next hour. Waiting for an interview here with Wells Fargo's CFO. Our colleagues, Katie Greifeld and Romaine Bostick, are going to sit down with the CFO to talk about the bank and its path forward here after the Fed removed a cap that had been in place for several years. Also, President Trump holding out hope he'll be able to get his Chinese counterpart on the phone as talks between the world's two largest economies are at a real standstill. Emily, this is a story that has kind of been fueling conversations over the course of the week. We heard from members, of his economic team, the president's economic team, so confident that this phone call is going to happen, yet no indication that there's any plan in place by folks on the Chinese side.
I'm imagining Trump just waiting for
Waiting
his
by
phone
the
to ring. We're also going to be talking about the latest advances in robotics with the Director of Applied Science at Amazon Robotics. The company has created a robot that has a sense of touch. So
sense of touch.
Like, does it feel? Does it touch? Maybe it can't feel yet like a human can, but potentially it can touch just like you can with your own hands. We're going to talk about what that means.
Of another kind. That's wild. What it means and sort of what they're doing with it. I'm very curious about that. And then, of course, we're looking at the markets here. It's kind of a mixed day. The S&P 500 and NASDAQ both up slightly here. Brent Schutte is going to join us. He's the Chief Investment Officer at Northwestern Mutual Wealth Management. Curious how he's sort of processing all the economic uncertainty, how he's positioning amidst all of that, and what he expects from the Federal Reserve in the months ahead. But first, let's get a check on the day's trade, the top business stories with our friend and colleague, Charlie Pellet. Charlie?
Very kind to say that, David Gura. We've got just under an hour to go ahead of the closing bell right now. The Dow lower, the S&P, NASDAQ, they are both advancing right now. And yes, we got that big Wells Fargo interview coming up in just a moment. Ahead of the interview, Wells Fargo shares, they're gaining now up by about 0.1%. Right to the equity numbers. S&P trading higher by 11, up by 0.2%. The Dow, though, in the red, down 14 points. little change there. NASDAQ up 87, up 0.5. Your 10-year 4.36%, the 2-year 3.87%. Gold up $21 the ounce, up by 0.6%. And a retreat for crude. West Texas Intermediate down 0.8%, 62.92 a barrel. Weaker than expected economic data is reinforcing speculation that the Fed will cut rates at least twice this year to prevent a recession. Sarah Hunt of Alpine Woods Capital Investors was on Bloomberg Radio earlier this morning. She told us the foundation is there for a further move higher for equities.
I think that there has been enough trade exhaustion over the last several days or several months and weeks that there is some feeling that there will be a conclusion that will be positive for markets because it would be devastating to both economies. So I think that there is a little bit of people starting to look through some of the rhetoric and expect that something will get done.
Sarah Hunt of Alpine Woods Capital Investors, and that is a Bloomberg Business Flash.
Charlie, thank you very much. David Gura here with Emily Raffeo on Bloomberg Business Week on Bloomberg Radio and YouTube. And as I mentioned, Wells Fargo coming out from under a cap that had been in place for about 7 years, put in place by the Federal Reserve on sort of the assets that it had to hold. That has now been lifted. Wells Fargo is out from under it. We see the stock up about 1.3% today. Now, turn out to an interview already in progress here between our colleague Romaine Bostick and Katie Greifeld with Mike Santamassimo. He's the CFO of Wells Fargo on the path forward.
Talking about now for the last number of years in terms of all the investments we've been making across the consumer and the wholesale businesses, and that's really what's going to drive growth over a long period of time.
Is there a sense now, I mean, with these constraints removed, and I know this has been a long evolution, so no one's expecting sort of a switch to flip and you're just going to be a totally different bank. But I am curious about what is needed, particularly from your end as CFO, to sort of chart a course of growth rather than just kind of making things better as they are.
Well, that course was charted years ago, right? And while we were fixing all of the risk and control work and building out that infrastructure, that was always the top priority. But along with that, there was we set out 5 years ago to really start to take a lot of the efficiency savings that we were generating and reinvest those back in the businesses. You can look at our credit card business as an example where we've replatformed, all of the products and have launched 11 new products since 2019. We've been investing in our branch system by refurbishing those branches, investing in the people in there, changing what they do, and providing more advice across the investment side of the business. We've been investing in our wealth management business more broadly to continue to improve the productivity and the capabilities they have. And then on the commercial side, it's adding hundreds of commercial bankers across the country. It's adding senior investment bankers across a number of different areas in the investment bank. And then within the markets business, it's continuing to just methodically invest in technology and people to see growth over a very long period of time. This is not something, as you say, that's like all of a sudden, you start to see the growth like this morning. This is something that'll be over the next 5, 10, 15 years where we'll see, good sustainable growth across all of those businesses as we make the investments.
Well, Mike, let's talk about what's still left to do, because my understanding of the situation is that, okay, the Fed lifted the asset cap that had been in place since 2018, but the rest of the consent order remains in place. So what work is still left to do? And do you have a timeline for when we might see the rest of the consent order lifted as well?
Yeah, no, sure. It's a good question. And, as you look at, where we are, we've completed phase 1, and that's what you see when the asset cap's released. And what that is really adopting and implementing all of the changes that we need to do. And phase 2 is just seeing those sustain themselves for a longer period of time, and that'll get revalidated as we go. No time frame. That's really up to the Fed ultimately. I'm sure that's a familiar answer, Romaine. Sorry, but ultimately, we'll see that through like we have all of the other consent orders that have gone away over the last number of years.
And one of the things that you mentioned that the bank has been doing has been refurbishing branches, for example. And when it comes to the actual customers of Wells Fargo, 2018, it feels like a lifetime ago, but in actuality, it wasn't all that long ago. Do you think that you truly have won the trust back of those customers, or is there still more work to do there as well?
Well, it's certainly something you do every day as you serve customers. And I think when you look through and see, the engagement that we had throughout the years, the engagement was still quite good across many of the businesses with our customers. What you didn't see happening, though, over those years was growth, for all the reasons that we've talked about over time. But look, you're always working to ensure you're providing the right experience, the right products, the right capabilities with customers, and that just builds and builds over time by execution. And so that's something you try to never lose sight of.
Hey, Mike, I do want to get your thoughts, since we have you here, just on kind of broader economic conditions, kind of the state of consumer spending. And I know we got some flavor out of that on your last earnings report and earnings call here. But given all that's transpired and given all the volatility, of course, it seems to be associated with Washington policy and, of course, economic conditions, are you still confident in the forecast that you've given? And are you confident here in the consumer business, particularly when it comes to making sure that the folks that you've lent to are going to be able to pay their bills?
Yeah, no, there's certainly a lot to look through when you think about headlines or a lot of what's been reported. But when you do that, the trends have been actually quite consistent now for the last couple quarters, where we see the consumer still very much actively spending and out in the supporting the overall economy. Those categories, and I think you talked a little bit about this in your intro, the categories move around a lot. They could be spending on travel in one month and other categories in other months, and so, but in aggregate, you're still seeing some growth year on year, and that spend that people are having both on the debit side and the credit side. And so they've been very, very, very consistent now for a while, and you still don't see any real signs of real systematic stress coming through in the credit side. You certainly see that lower end consumer in terms of lower wage earner being more stressed than others, but that's been pretty consistent now for a while, and you're not seeing things deteriorate in any significant way at this point. So I'd say so far probably better than people would have expected coming into the beginning of April or post the announcements in the beginning of April. But so far I think it's been a pretty consistent trend, and so hopefully that continues and should continue to support the broader economy.
That's Mike Santomassimo. He is the CFO of Wells Fargo. Again, Wells Fargo emerging from that cap the Federal Reserve had put in place and kind of using that as an opportunity to try to turn the page after, let's just say, a decade of a series of scandals and missteps on the part of that bank. Charlie Scharf, the CEO of that bank, really trying to make strides to turn it around. And you heard there from the CFO about the company's plans to do that. I want to read a headline here, crossing the Bloomberg terminal here. Columbia University no longer meeting accreditation standards, the U.S. says. We'll have more detail on that as we get it. But of course, the university here in the city of New York has been dealing with no shortage of controversy and leadership turmoil and change. Again, the U.S. government saying Columbia no longer meets accreditation standards. We'll have updates on that here throughout the afternoon on Bloomberg Business Week. Still no phone call that we know of here between the presidents of the United States and China, although President Trump says he wants to have one, and his team of economic advisors seem confident there will be one soon. Tom Orlick is the chief economist at Bloomberg Economics, based in our Washington bureau. He joins us now. He is on phone watch, as we all are here. Tom, how essential is this conversation, as we've seen kind of the deterioration in real time here of the deal that Scott Bessent and his counterpart reached there in Geneva just a couple of weeks ago?
Well, it's a great question, David, and I think that opinions on the answer diverge sharply between Washington, D.C. and Beijing. In Washington, D.C., the view from the White House, I think, is that the best way to get to a deal is to have the top guys in the room hammering it out. Let's get Trump and Xi on the phone. Let's get them in the same room. Let's get to a deal. In Beijing, that's absolutely not the way they operate. There's a horror in Beijing of putting President Xi at risk of embarrassment. They've seen what happened to Zelensky. They've seen what happened to South Africa's leader on a visit to the White House. They absolutely don't want that happening to their president. The preference in Beijing is to hammer out all of the details at a working level, get absolute assurance that the deal is in place, then perhaps that Xi-Trump meeting can take place. And that divergence in views between DC and Beijing on the right process here is another reason to think that this tenuous truce is a little bit fragile.
So Trump had planned to have the call this week. Do we know anything new about just the timeline here, if that actually could get done before the end of the week?
Well, never say never, but my guess is that it's extremely unlikely, right? For the reasons that I just set out, the Chinese side are allergic to risk, and particularly to risk when it comes to the public standing and stature of their president. It's not something that I think they're going to want to roll the dice on.
Tom, I'm curious for your read on who of each side has broken what parts of this deal, this agreement that was come to in Geneva. So you have the U.S. saying that China is going back on what it said it would do with magnets and rare metals, for instance. You have China miffed, I gather, over what the president's done here when it comes to student visas in the U.S. I guess the basic question is, do we know in broad terms or detail what was in that agreement, and what's your sense of who's broken what parts of it?
So it's a really big question, David, and I think it depends a little bit how far you draw back the dial, right? From the US perspective, China started this, right? They joined the WTO, but then they didn't live up to their WTO obligations. From the Chinese perspective, the US started this. Trump came back into office and jacked up tariffs to a really high level. In more recent days, as you note, one of the US frustrations is around rare earths and the perception that China is slow-walking agreements on ensuring US companies get access to those rare earths for their manufacturing processes. On the Chinese side, as you mentioned, I'm sure Beijing is less than delighted that the US is promising to aggressively revoke student visas.
Scott Bessent said in a speech yesterday about China, they either want to be a reliable partner to the rest of the world or they don't. What is the Treasury Secretary's role in all of these negotiations between China and the U.S.?
So it's a great question. If we think about the way U.S. administrations typically work, the Treasury is normally the voice of economic orthodoxy and market pragmatism, right? And that means that historically, the Treasury has been the voice which says, actually, we don't think tariffs are the right way to go. Now, in the current Trump administration, I think my guess is, and I'm of course not in the room for these discussions, that the Treasury continues to be the voice for economic reason, market pragmatism. Clearly, it's not winning the debate.
Tom, a few weeks back, I sat down with the U.S.'s former ambassador to China, Nicholas Burns, and we talked about the difficulties and the difficult road ahead that David Perdue, the former senator, now current U.S. ambassador to China, faces. I gather Ambassador Perdue is on the ground in Beijing now. He is our representative there, and I'd love to get your read on sort of what his role here is going forward. And suffice to say, Ambassador Burns had a tough time there engaging with the administration in China, making his way around the country. That was in part due to the fact that it was a country coming out of COVID. But how do you see David Perdue sort of advancing or trying to move forward the relationship here between the U.S. and China?
So I think ambassadors are powerful if they are empowered, right? If the administration here in Washington, D.C. says, this is our point person, you deal with them, and when you get to a deal, we'll sign off on it, that's when the ambassador has power to get to an agreement, right? I think one of the concerns which the Chinese side and indeed other U.S. trade partners have is, well, in fact, does anyone have power to make a deal in this current U.S. administration apart from the president himself? Or is anything we agree with Bessent or Lutnick or Greer or Perdue just potentially going to be ripped up when it gets onto the Resolute desk?
A huge question here, and one we'll be continuing to watch sort of what manifests itself here in terms of a conversation, a phone call between the two leaders of these countries, President Xi and President Trump. Still no phone call that we can report here. Tom Orlik, our chief economist at Bloomberg Economics, joining us today from our bureau in Washington, D.C. And I should note he spent a significant amount of time in Asia, in China, and has given us valuable perspective there on how both sides view this dialogue, so much as there is one between these two countries as this trade war not only intensifies, but seems this particular deal in that trade war, Emily, seems to be kind of at a standoff. We had that meeting that took place in Switzerland, a good deal of optimism, I think, from both sides that at the very least a dialogue was going to come out of that. The two sides were going to continue to talk. So far, President Trump's aspirations of having a phone call unrequited by the Chinese.
And in other White House news, the Education Department said Columbia University no longer appeared to meet accreditation standards. This after concluding that the school is in violation of anti-discrimination laws, the latest effort by the Trump admin to target elite schools over their handling of pro-Palestine protests.
More difficulties there for that university here in New York City. This is Bloomberg Business Week on Bloomberg Radio and YouTube from the Interactive Broker Studios. David Gura, Emily Grafeo, and for Tim Stenevec and Carol Masser.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. Right now we got the Dow lower, little change, down 1 point. S&P, NASDAQ 100 index, all advancing. S&P higher by 10, up 0.2%. The Dow up. The Dow, as I mentioned, lower. We've got NASDAQ up 86 now, up 0.4%. The NASDAQ 100 index also higher by 0.4%. 10-year at 4.36%. The 2-year yielding 3.8%. 0.87%. Spot gold up 0.6%, 33.73 for an ounce of the precious metal. Crude oil down 0.9%. WTI 62.87 a barrel on West Texas Intermediate crude. Given recent gains for stocks, Kate Moore is Chief Investment Officer at Citi Wealth, and on surveillance this morning, she was asked if she'd be selling this rally.
I would not be adding a lot of equity risk to this rally, but again, I think large caps are going to be the better place within the U.S. market.
Kate Moore of Citigroup interviewed this morning on surveillance. The U.S. Department of Education says Colombia is in violation of federal anti-discrimination law and, quote, therefore fails to meet the standards for accreditation. And Elon Musk is urging Americans to contact their lawmakers to, quote, kill the tax bill, calling it bankrupting America and a disgusting abomination. And this update is brought to you by ShipStation. Calm the chaos with the shipping software that delivers. Use code Bloomberg for a free trial at ShipStation.com. That's ShipStation.com with the code Bloomberg. Recapping S&P higher up 0.2. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you very much. David Gura here with Emily Griffeo on Bloomberg Business Week on Bloomberg Radio and YouTube from the Interactive Broker Studio in New York City, where there's some news about a university just up the street from us. That is Columbia University, no longer meeting the accreditation standards set by the Department of Education. Some breaking news here in the last few minutes. Of course, this is one of a handful of schools that have been in the crosshairs of the Trump administration. The Secretary of Education, Linda McMahon, saying in a statement the school's leadership, quote, acted with deliberate indifference toward the harassment of Jewish students on its campus after the October 7th attack by Hamas on Israel. I'm reading there from a piece by Kayla Gardner, who covers the White House for us here at Bloomberg News and joins us now from Washington. Kayla, let's just start with the basic facts of this here. We've seen the government go after Columbia's finances, threaten to withhold funding for research and the like. This seems to be ratcheting up its fight even more. What does it mean, in effect, that the government taking away this accreditation for Columbia?
So we should clarify that the Education Department is notifying the entity that has given Columbia University its accreditation, which basically gives them the power to issue degrees. Basically is the definition for why they are a university. They're notifying here Middle States Commission on Higher Education that they believe that the university is in violation of anti-discrimination laws. That is, of course, tied to anti-Semitism that they say is happening on campus and the protests that we've seen on the war in Gaza here. And this is really a turn in narrative when it comes to the relationship between the administration and Columbia, because there had been signals from President Trump, from Secretary McMahon, that conversations were in the right direction between her and the university's president. And of course, Harvard took a big step with lawsuits against the administration. Now, Columbia has not been doing that. So this certainly suggests that conversations perhaps are not going in the direction that certainly Columbia hopes that they are.
Kayla, you write from a quote here from Linda McMahon that accreditors have an enormous public responsibility as gatekeepers of federal student aid. They determine which institutions are eligible for federal student loans and Pell Grants. So just talk about, they're notifying Columbia, but actually, like in practice, is anything changing for the university or its students yet?
So the responsibility is really on the accreditor here to take these findings and assess them and assess Columbia's accreditation going forward here. But this is really a concept or a theme, if you will, that the president has been talking about on the campaign trail. He has long believed that the accreditation system is unfair, and he has talked about alternatives from traditional universities, and a huge part of that is they believe that there is bias on a lot of these private campuses, a lot of these Ivy League campuses, that they believe is not a welcoming place for conservatives, and certainly the ideals that are driving his movement.
I want to go back to something that you mentioned just a moment ago, and that is the kind of status of dialogue or the relationship between Columbia and the Trump administration. So we saw it really deteriorate under the leadership of Anu Shafiq, who was the president of the school for a very short period of time. She was succeeded by Katrina Armstrong, who was president for an even shorter period of time. On an interim basis, she was heading the medical school and moved over to the presidency, stepped down. And now Claire Shipman, who had been heading Columbia's board of trustees, is the interim president, the new interim president. Get us up to speed on sort of how much the two entities are talking, the administration and Columbia, and sort of what the university has done in recent weeks to kind of comport or talk with the administration about a path forward here.
Well, Secretary McMahon has been very public that she has had conversations with the president. She has spoke somewhat admiringly of the current president, but she says these negotiations are ongoing, both with Columbia and Harvard. And we saw Columbia put out a statement where they said that they were not open to some of these demands that the administration has when it comes to, quote, viewpoint discrimination, where they really asked Columbia and Harvard to make these sort of changes to their faculty and their students to sort of represent more viewpoints when it comes to political or ideological beliefs, because, again, they believe that these institutions have a bias, particularly a liberal bias, on campus.
This is obviously a breaking news situation, and you're right that Columbia did not yet respond to requests for comments, but how do you think the university is going to respond?
Well, I can't tell you exactly what they will respond until they actually do, but Columbia has been very measured as opposed to Harvard, who has taken now 2 lawsuits against the administration, one on student visas and one to get their federal funding back. So they have been measured up until this point, really trying to strike a deal with the administration through negotiation. So I'm certainly interested to see if they go the route that we've seen Harvard go, or they continue to try to have these negotiations behind closed doors to potentially get their funding back. And of course here also to defend their accreditation as a university.
Kayla, great to talk to you. As always, Kayla Gardner covers the White House for us here at Bloomberg News with that breaking news story here that the Trump administration is targeting Columbia's accreditation over protests. And Kayla, bringing up that nuance, which is so important here, the Education Department notifying the Middle States Commission, that is the accreditor, that they do not think that Columbia meets the qualifications for accreditation, and that can have all kinds of ramifications, I'm sure, for the university itself, but certainly students who are attending the school or intending to go there. And just picking up on one more thing that she mentioned, that is the role of Harvard University and all of that. Alan Garber, the president of Harvard, has been adamant that the way in which the administration has dealt with that school is a warning sign, as he put it, for what might happen with other schools. So picking up on your question, your very good question, Emily, sort of how they might respond. I'm curious if they kind of follow in the mold of what Harvard's done recently, which is to really stand up against the administration.
Well, let's switch gears a little bit to robots, because robots are doing a lot these days. They're driving cars, they're composing music, but for all these technological feats, they're still fairly ungraceful and a bit awkward. If you've ever had to pick up your Roomba because it was stuck in a corner, you know what I'm talking about. But Amazon is trying to make robots a little bit more, David, aware of their surroundings. Aaron Parnas, director of robotics at Amazon, joins us on Zoom from Seattle to talk about their new system where robots now have a sense of touch. Tell us about this, Aaron, and welcome.
Yeah, thank you. We've just announced the Vulcan robot is its name. It's Amazon's first robot with a sense of touch. It's built to handle high clutter and high contact tasks. So we've had robots in our warehouses for a long time, but they're basically moving things around or only moving themselves through free space to do sort of inspection or other kinds of tasks. This is the first robot that's actually interacting with the products that we sell on the website.
How do you see this having wider applications? So I imagine that you are putting this to good use in one of the many warehouses that Amazon has across this country and around the world. But in terms of this underlying technology, a robot's ability to do this, how does it stand to change the game more widely for robotics?
Yeah, I really believe this is sort of a second wave of robots. The robots you see in industrial settings today, they're doing useful tasks, but they avoid contact. They try not to bump into things. And it turns out most of the world that we live in is full of clutter and contact. I mean, you should see my kid's closet. It is a mess. If you're going to interact in those kinds of environments, you have to have this sense of touch as well as vision to be able to be effective. And so we're using AI tools to fuse those two sensors together. It's actually much more similar to how we as people are interacting with the world. We're using our fingertip sensors as well as our eyes.
Right, so the idea is that the system, the robot, it picks something up and it knows what it's picking up. And so that can advance these factories as opposed to it just picking something up and not knowing or dropping it, right?
Yeah, so we're doing two primary tasks, and these are the first two of many things we think we can use these robots for. And that's to stow inventory onto our bins. They're basically large bookshelves, or to pick items off those bins once they've been ordered by a customer. And so those tasks require you to kind of touch and interact with not only the bookshelf, but the other items that might already be on that bookshelf. And remember, Amazon has over 400 million items. So you're talking about bowling balls to light bulbs to dog toys to, for our family, a lot of baby clothes these days.
Aaron, I want to ask you about the genesis of this. So you go to undergrad at MIT, get a PhD at Stanford, you work in the Jet Propulsion Laboratory. When did you begin to think about this being kind of a novel frontier that you wanted to explore, that this was something that you thought you'd commit yourself to working on, thought had the kind of possibility you've been talking about?
Yeah, I've always been interested in robotic hands and the ability for robots to interact with the world. I think as people, we take that part for granted. We think of the word intelligence and we think of, all the cerebral things and the calculations we're doing in our brains. There's actually a lot of intelligence in the physical interaction with the world and in, picking up the blueberry out of your cereal bowl or, in a warehouse and doing these kind of stowing and picking actions. So that's always been interesting to me. I had a turning point about 4 years ago. We had a recently hired PhD student that had joined, and I was helping him on a project in the corner of the lab, and I basically thought it was too hard. It was this stowing task, trying to push items around that were already on this bookshelf to make room for another item to go there. And he showed me some of the initial results, and this was kind of leveraging some of the early wave of AI and machine learning trends, and it just clicked over for me from this is too hard from robots to, oh my gosh, this is the future. Like, I have to be a part of this.
Just 20 seconds left, but how does this impact the deployment of this new robot that can touch? How does it impact Amazon employees in the factory? Does it displace them?
No, so this is built to stow in the ergonomically unfriendly areas, so it works alongside our employees, actually makes their jobs safer and more productive. So we're taking the overhead and the low rows, which are our highest source of ergonomic stress. So it's an example where the sum of the robot and the employee together is better than either alone. It's just one of many bets in AI that we're making. So we've got, a big foundation model for demand forecasting that's putting the right items close to the customer. We've got some new generative AI tools we announced today that are built for our drivers delivering the packages. And we've got a new agentic AI team that is kind of building a framework to work across all of these different robots in the warehouses and other environments. So
all exciting stuff. We'll have to leave it there. Aaron Parnas, Director of Applied Science at Amazon Robotics. Thank you very much.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Industrials trading lower, the S&P, NASDAQ. They are both advancing right now. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in a choppy session today. The Dow is currently down 11 points. S&Ps are higher by 9, and NASDAQ gains 0.4%. The U.S. 10-year yield falls to 4.36. Gold is in the green, oil is in the red, but Bitcoin, that's down by 0.7%. Among the main 11 S&P sectors, leaders were telecom and real estate. Energy was under pressure, and leaders to the upside in the Dow were Sherwin-Williams and Merck, while Chevron fell 1.3% and led to the downside. After earnings, CrowdStrike fell 5%, Dollar Tree dropped 8%, and in the telecom space, there are reports out there of a big AT&T data breach. Wrapping things up, CoreWeave rose another 8% after yesterday's 25% surge. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, time now for the Drive to the Close. Today we're joined with Brent Schutte, Chief Investment Officer of Northwestern Mutual Wealth Management. They have over $300 billion in assets under management. Brent joins us on Zoom from Milwaukee. I want to get your reaction to the economic data that we got today. The subsequent reaction in the Treasury market, yields are down. Traders betting that maybe we'll get up to 3 rate cuts this year. What's your reaction to the data and those Fed bets right now?
Sure. So I think the question that most have been asking is, does the soft data, so the survey data that has been weak, does it start leaking into the hard data? And that's where I think most people believed that potentially there was hope that it would not. But I think this morning with ADP, you're starting to see that potentially it's leaking into the hard data, which is labor markets and job hiring. And you saw those come down quite a bit. You have the ISM services, which is still soft data, but a good data source historically. That's where the services index, which has held up the economy while manufacturing's been weak the past few years, it faltered. And then last but not least, you had the Beige Book, where it showed weakness, and it had a comment about consumer spending declining slightly in most districts, or even faltering, or even being neutral. And so that's where I think you're starting to see, after yesterday's euphoria about the JOLTS report, kind of we're in this yo-yo economy, to where today the data was weaker. That brought in the belief that the Fed may cut rates. And I think from the fixed income perspective, because I think a lot of people are nervous about yields, to me, it still shows that the long end of the curve will hedge against the potential for economic contraction, which I think the word recession might start coming up a bit more if we have more data like today.
You talk about the nervousness of a lot of people here, and I wonder how you're seeing through all of that, how you're sort of positioning amidst the uncertainty about trade policy, the prospects of maybe there being a recession, as you indicated, that could sort of come into play a little bit more. Are there clients who are nervous and panicking? Sort of what's the counsel that you're giving folks right now?
I think the big antidote for uncertainty is called diversification. And so I think a lot of people want to run and hide in cash and do whatever else. But to me, that always means that you think you know exactly what's going to happen, because that wins only in a few circumstances. And so I think diversification has been a big thing we continue to preach. And that's where I think a lot of people over the past few years have called it diversification, because they've only wanted to own U.S. large cap stocks, which have benefited from the past couple of years. And that's where most people want to only own those. I think there is different leadership going forward. This is a macroeconomic trend change. I think the administration wants a cheaper dollar. I think from a purchasing power parity perspective, the dollar needs to be cheaper. This is where there's going to be repatriation of cash possibly. And that's where I want people to branch out beyond just large cap stocks and look at places that have been underloved and underinvested in, like international stocks. I think about small and mid cap stocks, which are obviously domestic. They've been under the gun a bit the last couple of years because you have had a really narrow economy, pretty much just driven by AI stocks and AI companies. And that's where I think whatever happens on the opposite side of this, whether it's recession or not, you will see the economy broaden back out. And that's where the message, I think, is the same as it always has been, which is essentially to diversify and to make sure that you're tilting towards those things that I just mentioned, which I think offer value for longer term investors.
I know that you had mentioned kind of the longer term, the long end of the Treasury curve. A lot of those bets have not really posted positive returns, over the last couple months. Just walk us through kind of the rationale for really extending out further out onto the curve when, you can pretty much collect a pretty decent yield if you just stay in the 2-year or even a money market fund.
Yeah, if you stay in the 2-year money market fund, what happens if today is 2008, 2009, and the yields on the 2-year are higher than the 10-year, but for the next 15, 20 years, the 10-year, basically yields sub 2, and you have to reinvest that 2-year multiple times because it goes to 0. And so that's where I think at a minimum you should invest across the curve. The thesis is back to diversification, and you look at today's action. I use the R word. And I use the word contraction, and people are now thinking about that just a bit. And you can see on days like today, it does hedge downside risk that would occur if and when we actually do have a recession. And so I do think longer term, higher yields or more normal yields are here to stay. And I think you could possibly see higher inflation as a result of the deglobalization, the desire to actually maybe inflate away a little bit of our debts. But in the here and now, I think despite all the noise that's out there, days like today, days like we've had over the past few years, where you see fears of recession grow, I think it still shows that people will run to U.S. Treasuries, and that's how I think about hedging a portfolio against adverse outcomes. I think the one area that people don't have exposure to that they should, because for the last 15, 20 years, the way that you hedged a portfolio was only through long Treasuries because you really only had one side of the distribution. That was essentially deflation. I think your question probably ties into the other side of the distribution, which now is probably just as likely, which is higher inflation. And that's where we, from a diversification standpoint, still think people should own real assets like commodities as a hedge against a different outcome. Both of those are kind of the outside outliers in the tails. We want to maintain investments, but we want to make sure that we own things that can actually hedge us through downturns.
Brent, I want you to be perspective in the time we have left here. So let's look ahead to Friday. We're going to get this jobs report. Do you see it as just another element of hard data here? Does it take on kind of increased importance in light of what we saw today from the ADP? Is it more important than we saw last month? Or what are you looking for when the Labor Department releases those data on Friday?
I think it's incredibly important because I think you've had a market rally on the belief that we are at max tariff uncertainty, which I'm not for sure that we're at. And I don't think this is just a negotiation. I do believe that if you parse the words of the administration, they want the revenue and they believe in tariffs and they're not going away. The second part is that hard data into soft data or soft data into hard data. I think last week we saw jobless claims spike just a bit. We saw continuing claims rise. We had ADP today. And so I think Friday's jobs report, Friday's labor market report is incredibly important. I think the oddity is that right now people believe that even if the labor market were to weaken or even if the data were to weaken, think about days like today when, as Emily mentioned, Fed bets go up. The market believes that it's a buying opportunity either way and that the Fed can actually cushion the blow. I'm not for sure, at least historically, that the Fed can absolutely cushion the blow. And so to me, that's where I do think the jobs market and the data on Friday will be incredibly important. If it's good, it's probably coast all clear for a while. If it's bad, then we'll see what actually happens. I suppose the reaction will be different than what it is today because ADP is kind of thought of as maybe a secondary type of employment index. But we'll see on Friday.
Just very quickly before we let you go, 20 seconds here. It's interesting then to see kind of these more speculative areas of the market rallying. You look at the NASDAQ 100 is higher. A basket of the most shorted stocks from Goldman Sachs is higher today, and yet you're seeing that this economic data is weaker. Just in 30 seconds, help us understand the difference there between what's going on and animal spirits.
I think there's an insatiable demand from individual investors to buy things that have worked in the past, and that's been the formula for a while. And that's where you've seen most of the buying over the past few months has been through individual investors, not institutional. And we'll see if they continue to follow along those lines. That's where momentum buying has worked, and that's what I'd be cautious of going forward because I do believe that if you did have a downturn, some of those speculative areas might get hit quite a bit.
Brent Schutte, thank you so much. It's always great to talk to you. He's the Chief Investment Officer of Northwestern Mutual Wealth Management. Just taking a look as we finish out the day, 10 minutes left in the trade. The S&P 500 paring back some of those gains. We're just still in positive territory, but only up by about 0.1%. The NASDAQ 100 higher and Treasury yields falling quite a bit across the Treasury curve. This is Bloomberg Business Week Daily. I'm Emily Ruffeo, with David Gura filling in for Tim Stenovic and Carol Masser.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
Welcome to Bloomberg Business Week. David Gura here with Emily Griffeo in for Carol Massar and Tim Stenovec. They are off today. And again, a big story this afternoon has to do with Columbia University, a school that's found itself in the crosshairs of the Trump administration for a while now. The Trump administration expressing a lot of displeasure with the way that school and that school's leadership dealt with protests after the attack on October the 7th. The latest reporting here is that the Education Department has reached out to the organization that accredits colleges and universities, the Middle States Commission on Higher Education, and said it no longer believes, Emily, that Columbia should be accredited, and that could have kind of huge ramifications here for the school and the research it does, but even more importantly, what students go there, what kind of financial aid and grants they can get.
Right. So our very own Akela Gardner writes that some 21% of Columbia College and Columbia Engineering undergraduates receive the Pell Grant, which is a type of federal aid for high-need students, and removing access to federal student loans would also increase borrowing costs for many students financing their education, while federally backed work-study programs could be under threat. All of this, again, coming as the White House goes after not only Columbia, but of course, all of the drama going on with Harvard as well.
Absolutely. So Columbia now has a new interim president. That's Claire Shipman, who was a TV journalist for a long time. She was the chair of the board of trustees at Columbia. She stepped into that role. And I think that what's a bit surprising about this news is, by all indications, there had been a more robust relationship or conversation happening between Columbia University and the Trump administration. Both sides said there'd been progress made on kind of resolving some of the issues surrounding its approach to protests, and in particular student protests. And in particular, we saw a protest that was shut down by the university administration just a couple of weeks ago before commencement at Columbia University. But Claire Shipman now having to navigate this as well as the school is kind of in its summer break. And you bring up Harvard University. I mean, that is, I think, the big variable here is that we saw a number of schools kind of, I don't want to say bend to the White House, but saw their funding taken away or threatened with freezing. And you saw Harvard University really threaten to go in a different direction, filing a number of lawsuits against the Trump administration, most principally here, Emily, on grounds that what's being violated is their First Amendment rights, their rights to decide who's on the faculty, what students they admit to the school, and how they deal with problems on their campuses.
Education Secretary Linda McMahon said that accreditors have an enormous public responsibility as gatekeepers of federal student aid. Again, just kind of bringing in context what we're talking about here with the Education Department saying that Columbia doesn't meet those accreditation standards. McMahon also said that, they determine which institutions are eligible for federal student aid. And again, the Department of Education has an obligation to uphold federal anti-discrimination law. So that's, of course, the stance that the White House is taking right now. We'll see how long this goes on. Like you said, they are in summer break. But
I say that, too. It's not a flippant thing. I don't mean it to be that case. Of course, you have a lot of students here who are planning what they're going to do in the fall, and this has been kind of the underlying issue at Harvard and these other schools, in particular for international students who had made plans to matriculate at those schools and now have this uncertainty about whether or not they're going to be able to get their visas. So, of course, what the Trump administration has threatened with Harvard is that they're not going to allow Harvard to get visas for those students and faculty and researchers who are from other countries. And it just infuses so much uncertainty into the situation. I think you see Columbia having to deal with that over the course of this summer as well. If I'm the parent of a kid who's supposed to matriculate to Columbia, there's going to be scholarship money. Not only do I wonder sort of the immediate consequences of that accreditation being taken away, if in fact that happens, but what that means for the financial aid package. I think it's diffusing a lot of uncertainty into the universities, the colleges and universities themselves, but also families who are just trying to figure out where they're going to be, where their students are going to go, where their kids are going to go, and that's got to be really debilitating for a lot of these schools.
Right, in a time when this is the time to be planning where you're going in the fall and kind of sorting everything out, David.
Yeah, absolutely. Well, coming up next here, obviously we're going to turn our attention back to the markets here as we get ready for the close here in just a couple of seconds. We're going to be joined by our Bloomberg TV team for cross-platform coverage on radio, television, YouTube, and Bloomberg Originals to count you down to the close as we look at the markets today. Not moving a whole lot. Obviously, the big moves have been in bond yields. So paying attention to all of that as we come to the close. Bloomberg's The Closing Bell starts right now.
2 minutes or so we'll have to see below
A full breakdown of all of today's market action starts with our global simulcast right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld, taking you through to the closing bell with a global simulcast. We're joined right now by David Gura and Emily Griffeo in the radio booth, filling in today for Carol Masser and Tim Stenovic, who are on assignment. Alex Steele and Scarlett Fu also on. Is everyone on assignment today?
Everyone but
anyway,
us.
Katie and I, David and Emily are here to break down all of today's market action here. A really interesting day, guys. Fractional gains on the S&P here, but big moves in the bond market.
Yeah, absolutely. And obviously the economic story is so crucial today when we look at the data that we got from ADP and from ISM. I'm also just focused on what we got from the Congressional Budget Office today, indications that the House passed big, beautiful bill, to use the president's term, would add $2.4 trillion to the deficit. Just interested, guys, how that's going to kind of color the job that the Senate has right now as it tries to piece together its version of that legislation, with the president's goal here of getting that bill on his desk by July the 4th, when I think we can call a wildly ambitious goal, but we see the Senate kind of working at it now, and I wonder the effect that's going to have on them as they kind of haggle over it and hash it all out.
Yeah, David, I mean, you mentioned the weaker economic data. It was interesting that for a lot of the trading day, the S&P 500 was able to climb higher, even though it showed that economic data was weaker. But into the close now, you're starting to see the trade reflect that.
Well, it's funny. It feels like the bond market and the stock market have been talking past each other for a while right now. And Romaine, that certainly was the story for the bulk of this trading session today.
Absolutely so. We should point out there are some pretty big gainers, particularly when it comes to the semiconductor space. But you are seeing weakness in other parts of tech, including Tesla and CrowdStrike, Dollar Tree, among one of the biggest decliners here on the day. You add it up all together here, and you basically got a market, let's just say it, guys, really going nowhere on the day. The Dow Jones Industrial Average giving up about 80 points, or about 0.2%, as we wait for these numbers to settle. The S&P 500 right now straddling the line between gains and losses, 59.70.84 on your screen. But once again, that number could adjust just a bit. If it stays where it is, that is basically unchanged on the day. The NASDAQ Composite up about 62 points, or 0.3%. Similar gains for the NASDAQ 100. And to the downside, transports, mid-caps, and the Russell 2000. The Russell 2000 down 0.2%.
Romaine, as you say that, I'm looking to see sort of how much green there is on the screen, how much red there is on the screen. 241 of the S&P 500, 244, higher than they were at the beginning of the day. 257 of those stocks down, one unchanged. So a real mix in keeping with what you've been describing here, the way that the market is kind of muddled through today.
Yeah, and let's put that in sector terms as well and take a look at this circle right here. You can see there's a lot of green. You have information technology, certainly a big proportion of that. What did the best on the day actually was communication services. You can see that green is a little bit brighter than the others. And then you have some sectors you don't necessarily always see leading also in the green. Materials and real estate. Real estate obviously makes sense with that big bond move. On the downside, you do have energy off by about almost 2% as a total sector. Utilities also in the red in a big way, off by about 1.7%, David.
Let me take you through some of the gainers that I've been looking at today, starting with BKNG, Booking Holdings. I love a Delaware-based holding company here. This owns Booking.com, Priceline.com, Kayak, and the rest. Obviously, we're focused on the way the travel companies are dealing with the economic uncertainty and the kind of contours of the trade war. JP Morgan maintaining it with an overweight, raising the price target there from 53.60 to 6,000, so one that I've been following this afternoon.
All right, one other mover here on the day is Five Below. They dropped about 0.8% in the regular cash session. The share is moving even lower now in the after-hours trade after its earnings just crossed the wire. The company said the first quarter EPS did come in at about 75 cents a share. That is a beat, so that is certainly good. But here's your guidance going forward. For the second quarter, the company says it expects a range on EPS of 45 cents to 57 cents a share. The street on average was looking for 58 cents. So the high end of that range is below the average of street estimates. As for sales and revenue here, comp sales, excuse me, let me just go back to the full year here. They are providing a full year sales figure, net sales 4.33 to 4.42 billion. That actually, believe it, is actually above its previous guidance that it had given of 4.2 to 4.33. So you add it up all together, you had a beat in the quarter, but the guidance going forward seems to suggest some weakness on the bottom line, though they do seem to be guiding a little bit higher on the top line.
A lot of interest in those trendy, fun, and affordable finds at Five Below, it seems. Let me turn to another stock I've been watching today, but also over the course of the year. That's Netflix. We saw UBS raise its price target on Netflix to $14.50. UBS citing secular trends and competitive dynamics remaining supportive of Netflix's ability to drive stronger monetization and operating leverage. And just to give a little bit more color here, Netflix up 40%, nearly 40% this year. And I'll stick with companies based on the West Coast. Do Meta as my last gainer here. Saw a price target hike from JP Morgan a day after a company announced a partnership with Constellation Energy. Talked a lot about that yesterday, but that 20-year deal that it brokered for nuclear power going forward, and I think kind of encapsulates this company's interest, doubled down interest here in using AI and using AI for advertising in particular.
Okay, let's get to some of the decliners. CrowdStrike dropping over 5% today. This is a cybersecurity company that projected revenue for the current period that trailed estimates. They see sales for the second quarter will be as much as $1.15 billion, just slightly missing estimates of $1.16 billion. This, of course, was the first financial update since the company announced it would cut about 5% of its global workforce later in the trading day. We also got a headline out of this company that they said the DOJ and the SEC sent inquiries on firm accounting. The firm, though, said that they are cooperating with the inquiry, but that stock, again, down over 5% today. Dollar Tree was another company with a warning out today. They warned investors that their second quarter profit could be down as much as 50% from a year ago as it deals with tariff-related costs. Dollar Tree, not to be confused with Dollar General. Dollar General generates about 80% of sales from food and consumable goods, which are less reliant on imports. Dollar Tree gets almost half of its revenue from those categories. It's more reliant on goods from other countries, so they are more exposed to that hit.
I do want to get to some other earnings. We just got through Five Below. Let's turn our attention to MongoDB coming out with their results. They boosted their full-year adjusted EPS forecast. They also beat estimates. Their first quarter adjusted EPS came in at $1.06. The estimate had been for just 67 cents, so quite a beat there. You take a look at their full-year adjusted EPS. They see it between $2.94 to $3.12. Previously, they had seen $2.44 to $2.62. So quite a big beat there, and you're certainly seeing that in the after-hour movement in the shares, up about 9% at the moment there.
Yeah, this was a much-needed bid for MongoDB. This stock was down 14% year-to-date through today's close, so we'll see how those gains translate into tomorrow's trading session. But just back on the decliners, my last one is not a stock. It's an ETF. Oh. Katie's going to like this.
Go off.
I did this for us. XLE. This is an energy stock ETF. Energy was the worst performing sector in the S&P 500 today. We saw stocks across that sector retreating, along with crude oil prices, after Saudi Arabia is now pushing for more supersized output hikes from the OPEC Plus group of producing countries. Marathon Petroleum, Valero were some of those names that were dropping. And of course, that ETF down, closing the day almost down 2%.
All right, we have to talk, of course, about what we saw in yields, because we came into today, yields were higher, but only fractionally. It looked like we weren't really going to get any real movement in yields, and that changed in a big way right around 8:15 a.m. New York time on the back of that ADP report, and the decline accelerated once we got to 10 a.m. In that ISM services report. We basically went from yields higher to yields lower, down about 8 to 9 basis points between the 2 and your 10-year, and of course you see that 30-year yield dropping about 10 basis points, a big revision. We should also point out in forecasts in the swap market for what the Fed may do next, pricing in the possibility of at least about 3 cuts this year potentially, and now potentially more certainty for a cut by September. I do want to turn our attention to another story that was really just burning up the Bloomberg terminal. Have you been following this ship that's just out, apparently just drifting out there in the Pacific Ocean? It's full of electric vehicles. Apparently it caught on fire, and of course, the crew realized, when you have a fire like that with those lithium batteries, you get the heck out of there. A big incident out there. We don't know exactly which cars are on there, do we? But this seems to be a repeat of what we saw. Remember, a while ago, I think that was, it was a couple years ago, when you had all those ships coming over from Europe, those cars coming over from Europe that sunk.
I will just say, it's important to note that the U.S. Coast Guard did evacuate evacuate all 22 crew members, so now we're allowed to make a little bit of fun of this story. There were 800 EVs on this ship, 3,000 cars in total, and a large proportion of them, you guys, were EVs. So there you go.
You know, there's a metaphor here somewhere, but I was struck as I read that piece and had to kind of imagine the ship bobbing about on flames, this conflagration in the open seas. That EV fires can take up to 8,000 gallons of water to cool. So yes, the folks are gone. We can laugh at the circumstances itself here, but really an indication that this is a difficult thing that these shipping companies are having to deal with going forward.
Yeah, and that other big one, of course, that was off the Dutch coast with those. And back in 2022, of course, we were all wrapped by that incident as well. All right, guys, that does it for us. We'll let you get back to it there in the radio studio as we wrap up our cross-platform coverage on Bloomberg Television, Radio, and YouTube. And a reminder that Bloomberg Business Week is now on Bloomberg Originals. All four of us, or I think some combination of us, will be back same time tomorrow, same place. Thanks for.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
David Gura here with Emily Griffeo on Bloomberg Business Week. Has moved past the closing bell into the last hour of the show here. A lot happening when we look at what's going on in Washington, D.C. Of course, you've got members of the Senate now working on that big, beautiful bill, trying to find their version of it. We're going to talk a bit about that in just a few minutes. Brad Stone is going to join us as well, the editor of Bloomberg Business Week, based out in San Francisco. He has sat down with Dan Gilbert, who started Rocket Mortgage, and having some health issues, is trying to figure out the next course for his life and for his company as well. Obviously, he's been named for himself in philanthropy, owns a couple of sports teams as well. And we're going to continue to dig into the economic data that we got this morning, Emily, focusing on the ISM survey and the ADP data as we look ahead to Jobs Day.
Don't forget, we're also going to talk about cheese.
Yes. Yes. The CEO of Tillamook, which I didn't know until today, is a kind of farmer-led cooperative. I know it only from the cheese and ice cream that I have from time to time. We talk about kind of the data in abstract or at this macro level. Good to hear from somebody who's running a company with a huge national footprint, who's having to figure out business going forward here, as there is such concern about where prices are going to go, what's going to happen with the labor market. So yes, we will sit down and talk cheese on this Wednesday afternoon with the CEO of Tillamook. I want to bring in now Nathan Dean. He's Bloomberg Intelligence's senior policy analyst based in Washington, D.C. I was talking a moment ago about the goings-on Capitol Hill. Nobody better than him to give us a sense of where those conversations are and how they're being colored or affected by the data that we got from the Congressional Budget Office today, the CBO indicating that the House bill, as passed, would add $2.4 trillion, that's with a T, to the deficit. And Nathan, that's right where I want to start, if you wouldn't mind. You've got folks on the Senate side, on the southern side of the Hill, looking at that legislation. How much are those data going to color the conversations that are taking place about what's going to be in that bill, their version of that bill going forward?
So I don't think very much. I mean, obviously $2.4 trillion, that's a large number. And obviously this comes from the Congressional Budget Office, which is a bipartisan office. But I would say is that there's this idea that economic growth is going to pay for a lot of this. And I think the Republicans are just going with this presumption that the deficit is most likely going to have to increase as part of this bill. Now, there was added pressure that's coming from the form of Elon Musk. You know, he was just posting on X just like a half an hour ago, trying to get Americans to try and call their senators and call their congressmen to say, don't go forward with this bill. But as of right now, the still thinking here in Washington is that this bill is still on track to pass, call it in the mid-July timeframe. And according to our estimates, we think this is going to add to the deficit because it's easier to vote for borrowing today for a deficit paying tomorrow than it is to vote to cut things like Medicaid, the Inflation Reduction Act, and SNAP benefits.
Tell us a little bit about just like expectations versus what people who voted for President Trump are now getting. I feel like there was a lot of talk about Republicans wanting the deficit to be reduced, and now obviously this bill asks for a lot of spending.
Yeah, so there's really two aspects to this deficit spending fight. You have the Appropriations Committee process, which DOJ has been working pretty heavily on, but that requires a bipartisan agreement. And it's not really where the bread and butter of the deficit is. That is what's coming through mandatory spending. So things like Medicaid, Medicare, Social Security. And so, yes, the Republicans are going through this reconciliation process. And yes, they want to try and decrease the deficit. And they claim it will decrease the deficit. But to cut things like Medicaid or the Inflation Reduction Act or SNAP benefits, that's almost like the third rail in politics. And, we saw this in the House fight where, originally as designed, the Medicaid work requirements and the Medicaid cuts wouldn't kick in until after the next election. Well, that got pushed up to the end of 2026. And so as these moderate Republicans come and look at this, and they say, are we going to move forward with cuts that impact our constituencies as soon as next year? For all 435 members of the House and 1/3 of the Senate, especially those that are running in purple districts, that's a vote that's very difficult to take. And as such, they'll decide to pull back and say, we're going to increase the deficit instead.
Nathan, I'd love to talk about the X date with you, really nerd out here. It's something that Treasury Secretary Scott Bessent was asked about on Face the Nation with Margaret Brennan this week, and he wouldn't reveal what the X date is. He's keeping it close to his vest. What is your best sense of when that date is by which the U.S. will no longer be able to pay its debt obligations, and how much is this fuel for the Senate and for the House as they try to figure out a way to get this bill passed?
Yeah, so our chief rate strategist, Ira Jersey, just put a note out on the terminal this morning, essentially saying mid to late August is his best estimate of that X date. And the X date is really driving, I think, and this is the ultimate deadline here for when Republicans need to get this done. Yes, Treasury Secretary Scott Bessent says he wants to do 4th of July, but that X date, that August, is really when they're going to drive things forward. Now, there was a little bit of a hiccup today because we do think the debt ceiling is going to get resolved. If you're on the fixed income side, we don't think that there's going to be a debt breach, and we don't even think we'll get close to a debt breach. But there was a little hiccup this morning that came in the form of a Truth Social post from President Trump when he said that he agreed with Senator Elizabeth Warren to just scrap the debt ceiling in its entirety. Now, I don't think that's going to happen. I don't think you're going to see Republicans and Democrats coming together to say, let's get rid of the debt ceiling right now. But maybe if this bill were to struggle, something like, Senator Rand Paul really sticks to his guns and gets other Republicans to go with him in the Senate, potentially something like that can happen. But ultimately, we're still saying an 80% chance of a debt ceiling increase or a debt ceiling resolve, if you will. And that's most likely going to go to 90% in the next week or so.
Nathan, we can't let you go without asking about the newly released Digital Asset Market Clarity Act. This, of course, refers to the crypto industry. Everyone in this industry has been asking for more regulatory clarity, particularly when it comes to what is a security, what is a commodity. It has such wide-ranging implications for the crypto industry and the financial services industry. You write that you give a 70% chance of passage for this act. What exactly would we see if there is a 70% passage? Would we get the answer? Is Bitcoin a commodity or security? Would we get real clarity on that?
Bitcoin's already a commodity. It's been deemed by the courts, but the issue for platforms like Coinbase and Robinhood is what about everything else? And most of the crypto sector wants to go commodity status. The reason being is that under this Clarity Act, the Commodity Futures Trading Commission would get authority over spot markets of crypto. Now, why is that important? Well, the CFTC, what is known as principles-based regulation. So if you're a company like Robinhood or Coinbase, you can go to the CFTC and say, here's your regulation, here's our solution. Do we meet the principle? Are we good? And the CFTC would say, yeah, you're good. It's a lot easier and a lot more innovative than if you were under the jurisdiction of the SEC. Now, this will raise costs, obviously, but if you're a company like Robinhood or Coinbase, you're okay with that. Now, I do say that there's a 70% chance of passage here. The caveat is I don't think it's going to happen until next year because we have a Genius Act. This is a stablecoin bill that's going to potentially get a vote as soon as later this week or next week. And then I think Congress is going to hit pause because it's taken a lot of effort to get Democrats across the line for stablecoins, which is something that I think most members can agree there's a regulatory gap. But a lot of Democrats don't think that regulatory gap exists for the rest of the crypto sphere. I think it's going to take some work. I think it eventually can get there. But I would tell our crypto friends, you're probably looking at the beginning of next year for that.
Beginning of next year. I'm going to give you 30 seconds here just to give us your best sense of the timetable for the tax and spending bill making its way to the president's desk. He's saying July 4th. I'm going to go out on a limb and guess that you're going to say that's a bit too optimistic. But your sense of the timing here as we look ahead to the summer.
Well, I like to joke. I think it'll be late July because that's when I'm going on vacation.
Fair
But
enough.
In all seriousness, I think the Senate gets it probably done by the week after 4th of July. This goes to the president's desk probably the last week of July.
Nathan Dean, great to speak with you. That's Nathan Dean. He is with Bloomberg Intelligence and giving us his valuable perspective there on the state of play when it comes to the tax and spending bill that the Senate is now taking up. He's a senior policy analyst at Bloomberg Intelligence based in Washington, D.C. And Emily, just fascinating to kind of hear two views on that. We heard from Henrietta Trays, her feelings on where this is all headed, and great insight there into the crypto stuff as well for our crypto friends.
Yeah, I mean, they really want that clarity.
They've been wanting it for some time, and I think, another facet of this is just what the regulatory landscape in D.C. looks like now. I mean, the SEC isn't a full 5. What's that going to mean for all of this as well? Much more to come here on Bloomberg Business Week Daily, on Bloomberg Radio and YouTube. David Gura, Emily Graffeo, and for Carol Masser and Tim Stenivek, this is Bloomberg.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Moments ago, we got the latest quarterly numbers out of MongoDB. After hours, that stock surging by 14%. The database software company boosted its adjusted EPS guidance for the full year. The guidance did beat the average analyst estimate. And again, we got MongoDB right now up by 13.7%. Equities eked out a third straight session of gains today. EEK defined as a gain of half a point on the S&P, 5970 where we ended the session. The Dow lower by 91, down 0.2%. NASDAQ up 61, a gain there of 0.3%. We did see a rally in big tech, and that offset weak economic data on jobs and services. The 10-year, 4.35 on the 10-year. The 2-year, 3.86%. Gold up $18 the ounce, 33.72, up 0.6. And West Texas Intermediate crude oil today, WTI down 1.1% at 62.70 a barrel. The U.S. Education Department says Colombia no longer meets accreditation standards due to violating anti-discrimination laws, specifically in its handling of pro-Palestinian protests and harassment of Jewish students. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you very much. David Gura here with Emily Grafeo in for Tim Stenivek and Carol Masser. They're off today. It was a good time to be in the mortgage business back in 2020. That is when Dan Gilbert, billionaire Dan Gilbert, took his Quicken Loans, now Rocket Companies, public. As Brad Stone, the editor of Bloomberg Businessweek, writes, Americans enjoying cheap money and still warm stimulus checks were happily refinancing at a rapid clip, and Dan Gilbert was then one of the richest people on earth. Of course, mortgage rates have gone up since then, and Rocket Company's annual revenue is expected to go down. Its share price down almost 30% since that company went public. Good occasion for Brad Stone to check in with Dan Gilbert to see how he's doing, how the company's doing. We'll talk about both of those things with him. Now, Brad joins us from our bureau in San Francisco. Brad, we're going to talk about Dan Gilbert, the person here, in just a moment, but let's start with the company and the challenges it faces. How different is this company from what it was back in 2020?
Maybe not that different. You know, they are in a cyclical industry. They have seen rates go up and rates go down. You know, Dan is someone who, you know, runs not just a company, but a little bit of a corporate cult. You know, he doesn't like to lay people off. But, you know, as a result, you know, the company has lost about 30% of its market cap since rates started creeping up after the pandemic. And they're getting a little bit of outside pressure. For the first time, there's an activist investor in the stock. And he's really rethinking, well, what is Rocket? And so recently they made two kind of rapid fire acquisitions. One is a brand that most people probably know, Redfin, the home listing company. And then another one's called Mr. Cooper, a Dallas company that does underwriting that they have announced an intent to acquire for about $9 billion. Both of those deals have yet to close, but the idea that Dan relays to me is like, let's not just see our customer once every 7-10 years when they're ready to take out a new mortgage or refinance, but maybe have a relationship with them through the entire lifespan of a mortgage.
I found it interesting that you write that Gilbert, who owns about 70% of Rocket, is responding to a lot of the uncertainty with the most significant changes to his company since 1998. So talk a little bit more. I know you mentioned the acquisitions, but just about what makes the changes that he's undergoing just so significant.
Yeah, I mean, it's really the acquisition. Well, first of all, he's hired a new CEO, Varun Krishna, a former PayPal guy. He ran the TurboTax business at Intuit. You know, Dan hasn't been the CEO for quite some time, but we all know a little bit about founder-led companies. And Dan has really brought in a kind of Silicon Valley guy to sort of run the company and to steer Rocket through the AI revolution. Now, underwriting a loan, servicing a loan, it's an enormously, you know, employee, human-intensive business. And so AI is offering a lot of opportunities for Rocket to get slimmer. So I think the changes are twofold. One, making these these two acquisitions and saying Rocket is not just going to be your refi company, but it's going to hold the customer's hand through the entire home buying process. They want to get into the real estate business, essentially, with Redfin. And then it's this mindset of what can we do with AI to make the process more efficient. And that will be very interesting because, as I said, Dan sees his employees as sort of an extended family. And so the question that ValueAct and some of these other shareholders, and ValueAct is the activist shareholder, they probably want to see steeper cuts. And so I think there's a little bit of tension and suspense building around how Dan will be navigating the next few years.
Brad, pardon. Please excuse the obligatory question about artificial intelligence, but I have to ask it. What does Dan Gilbert think the role of artificial intelligence is going to be here in the mortgage and mortgage servicing industry?
Yeah, and maybe this kind of comes through in the piece, which is I think he's putting a little bit of a happy face on it. He thinks that it can aid the customer in the paperwork of filling out a loan. It can be a help to the company in servicing customer service calls, and yet he doesn't necessarily project like great displacement in his workforce. I don't know about that. I mean, it does seem like, these models are now quite good enough that maybe you could start to replace some of the human labor behind the underwriting process. So, I think the overarching answer is it makes the process more efficient. It simplifies this labyrinth of county by county, state by state paperwork. Rocket is a big company because it's been able to do that. But then the question is, how much does it automate? How much does it mean that Rocket doesn't need its thousands of employees anymore?
Brad, you had the opportunity to actually sit down with the billionaire businessman. How is he staying positive amid all of these changes in his company, amid health issues that he's experienced?
Right. And I think, that is, and Emily and David, you're going to appreciate this. I'll give you a little bit of background. I'm a Cleveland guy, okay? And so Dan Gilbert, he owns the Cavs. He has always loomed very large in the civic life of not just Cleveland, but Detroit, where he's based. I've always wanted to meet him. And in particular, his story's gotten very interesting because he's one of the richest people in the world. But in 2019, he suffered a debilitating stroke. And really, over the past 6 years, he's been just battling back. He lost the entire use of the left side of his body. He really can't walk. He's only now beginning to stand and take a few steps unaided without a cane. And so I think, Emily, the way you phrase the question is a good one. He does remain positive. He doesn't have control over some central things in his life, not only his own physical health, but interest rates, which has a major impact on his business. He is almost single-handedly reviving downtown Detroit by buying and rehabbing buildings. So I think it's just a point of view, despite these massive challenges, despite things that are out of his control, he has an entrepreneurial mindset, and he's kind of continued to battle. And, he has amazing resources, and so it's not just the rehab, but stem cell treatments and testosterone shots, and he's doing everything he can. I think he's really defied the odds, not just in business, but also in his personal life.
Just a wonderful photograph of him made by a photographer. At the end of that piece, you can see him standing up. So despite those difficulties, making the effort to stand up for a photograph there at the end, keeping in mind all that you were talking about. You mentioned his role in Cleveland, his role in Detroit. Talk a bit, if you would, about his aspirations and kind of the civic life of both of those places. You were talking about sports here a moment ago, but he has made a name for himself as someone who's very philanthropically minded, Brad.
Right. I mean, look, you go 10 years ago, you go to downtown Detroit, and, it looks like something out of a 70s dystopian science fiction movie. It was just the central core was totally abandoned. Cleveland, a city I'm more familiar with, pretty similar, lots of sort of development starts and stops. And look, we're very familiar with the tech CEOs who have used their wealth to get to space, to solve global disease on the other side of the world. Dan just decided that he's going to have an impact closer to home. And in downtown Detroit, alongside the Central Woodward Avenue, he's been buying properties. He's building a skyscraper where GM is going to move its headquarters when it's completed. He moved Rocket from a suburb downtown, I think 20 years ago. And the idea is to really rehabilitate these industrial Midwest cities with glorious architecture and amazing flourishes in the buildings. He's taken a building, I think it's called the Library Building in downtown Detroit, completely rehabbed it. There's a hotel there. All the original touches were there, and he's brought life back to these abandoned city cores. And so that is his mission, as well as addressing the disease that took the life of one of his children. He's donated a lot of money to that. So it's really philanthropy around things close to him that is important to him, and that's where he wants to leave a legacy.
And for those just tuning in, we're speaking with Bloomberg Businessweek editor Brad Stone on his story, his feature story about Dan Gilbert. Brad, I want to finish off by going to the headline of your story, that Cavs owner Gilbert wants to donate his billions. You write that he told you he wants to pretty much donate all of his wealth before he passes away. It seems like we're hearing more billionaires do that. Like, there's the billionaires that go into space, but then there's also these businessmen that have these major pledges, right?
Right. I mean, he has signed the Giving Pledge, and that, I think that you guys could check me on this, but I think the goal there is to give away half your wealth during your life, right? But Bill Gates recently said his intention is to spend down his fortune, and Dan Gilbert's very much the same. He told me that he is having more fun giving the money away than he was accumulating it. He's got these causes: the health of downtown Detroit, downtown Cleveland, solving not just the disease that took the life of his son, but addressing the challenges faced by stroke victims. And he wants to leave an impact. And so he's still very much focused on Rocket. He's there 2 days a week, but he's also totally invested in these other causes and wants to see the impact of his philanthropy during the course of his life.
Brad, great to talk to you. It's a great piece as well. Brad Stone interviewing Dan Gilbert, of course, the founder of Rocket Companies, formerly Quicken Loans. A really strong profile looking at him and the personal struggles he's facing on right now, and struggles at the company as well, amidst this environment where interest rates are higher than they were back when it went public. But commend that to everybody. You can read Brad's story on the Bloomberg and at bloomberg.com/businessweek. Brad Stone, the editor of Businessweek magazine. And Emily, I was just struck. He details so well the way that Dan Gilbert has faced these personal challenges himself. And again, I did go back to that photograph, but clearly must have been a very poignant moment when, having taken a number of photographs sitting down, he stood up for a couple shots standing up, as well as he tries to get his ability to walk once again. And Brad alluding to the fact that this is a company now that's facing a bit of activist pressure, talking about Value Act, taking a 9.9% stake in this company. And I think a lot of that has to do with this issue of AI and the degree to which this company embraces it and begins to kind of use it in the mortgage business. It'll be fascinating to watch that going forward.
And let's not forget that he's also the owner of an NBA team.
The Cavaliers.
And Brad Stone pointed out that Gilbert actually persuaded LeBron James to return to the Cavs after he had departed for the Miami Heat. Of course, now LeBron James not in Cleveland, but I'm sure Brad Stone, as a Cleveland guy, a Midwest guy, was happy about that.
A few good seasons and a championship while he was there. No small thing. This is Bloomberg Businessweek Daily on Bloomberg Radio and YouTube. David Gurr with Emily Grafeo for Tim Stenovec and Carol Masser. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with a developing story. A U.S. judge is temporarily blocking the Trump administration from deporting the wife and children of a man charged with firebombing 12 people at a Colorado event in support of Israeli hostages. Turned out today to be an update barely for the S&P 500 index. Today we had the S&P climbing by half a point, now at 5970, eking out a gain. Dow Industrials down 91, drop there of 0.2%. NASDAQ Composite Index up 61 for NASDAQ, a gain of 0.3%. 10-year 4.35%, the 2-year 3.86%. Spot gold up $21 the ounce, 33.74, up 0.6%. And West Texas Intermediate crude oil today, WTI, fell 1.1%, 62.74 a barrel. Brent Schutte is Chief Investment Officer at Northwestern Mutual Wealth Management. And right here on Bloomberg Business Week Daily, he told us he's looking ahead to Jobs Friday.
The jobs market and the data on Friday will be incredibly important. If it's good, it's probably coast all clear for a while. If it's bad, then we'll see what actually happens. I suppose the reaction will be different than what it is today, because ADP is kind of thought of as maybe a secondary type of employment index. But we'll see on Friday.
Brent Schutte, interviewed right here on Bloomberg Business Week Daily. The U.S. Department of Education says Columbia University is in violation of federal anti-discrimination law and therefore fails to meet the standards for accreditation. And DB, after the close of trading, boosted its adjusted EPS guidance for the full year. That guidance did beat the average analyst estimate, also boosting its stock buyback program right now after ours. MongoDB up by 12.5%. Recapping, S&P 500 index up by half a point. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Bellop. That is a Bloomberg Business Flash.
Charlie, thank you very much. This is Bloomberg Business Week Daily. David Gura, Emily Grafeo in for Carol Masser and Tim Stenivek. And as Charlie was just doing there, we're of course following all the economic data. Looking ahead to Jobs Day on Friday, we'll get another read on the health of the U.S. labor market. I want to check in with someone who's navigating the uncertainty of this moment as a business leader. David Booth is the president and CEO of Tillamook. That is shorthand for the Tillamook County Creamery Association, farmer-owned co-op that's been around since 1909. May know of their cheese and their ice cream. He joins us now from Decatur, Illinois, where they've just opened up a new factory. And that's where I want to start, if I could here, David. Great to speak with you. We're at a moment where we're hearing a lot of business leaders say, we're going to hold off on new investment, hold off on CapEx, want to see where things stand. You had a project underway. You're opening it up today. How are you feeling just about the health of this economy right now and business generally?
Overall, I'm feeling very, very good. The food sector, the brand itself is performing extremely well. We've been on a national expansion for the last 4 or 5 years, and it's going really well. And this investment really helps to support that long-term vision that we have.
What about the labor market? Because we are going to be looking at jobs data on Friday here at Bloomberg News. From your view, are you planning on increasing hiring? Are you keeping everything the same? How does labor look for your company?
Yeah, that's a great question. Obviously, here in Decatur, we're bringing in about 70 new jobs into the community. We've had a really nice reception from the local population, and we filled nearly 50 of the 70 jobs up to this point. And as the capacity continues to expand, we'll fill the rest of those roles. And for the rest of the organization, both of our other manufacturing facilities are 95 to 98% fill rate right now from an employment standpoint, and the job market looks pretty good for us.
I'm curious about just the way that the company is structured. I know that you're a B Corp. How big is it? You mentioned you have a national footprint. I think 80% of the country can get Tillamook products. So how is it structured, and what's your sense of how you'd like to grow it or where you'd like to go that you aren't right now?
Yes, you're right. You're dead on the number. So we're in 80% of grocery stores across the country, and we'll do about $1.4 billion in revenue this year. And to put that in perspective, when we went on this national expansion back in 2015, we were about $450 million. So we've nearly tripled the size of the business over the last decade. And we've done that really by pushing distribution and partnering with key retailers. But more importantly, the quality of the product we bring to market. Once we get the product in people's mouths and they try it, our repeat rate is nearly 60%. So that's the magic in this brand, is the quality that we bring to the market.
How is your supply chain looking right now? I guess we can start with ice cream and then maybe go to cheese. I don't know if
It's your preference. It's your order of preference. Let's start with that.
Yeah, well, you know, this factory, I guess, it's an ice cream plant, or is it ice cream and cheese in the plant?
That's a great question. So this is our first manufacturing facility outside of the state of Oregon. So we have 2 cheese production facilities in Oregon. One of those also makes ice cream. But this is our first facility outside of the state of Oregon, and our first facility dedicated solely to production of ice cream. So it's a 60,000 square foot facility that'll make 15.5 million gallons of ice cream when fully at capacity.
I'm just thinking of the supply chain for ice cream. I mean, I don't know. We talk a lot about tariffs a lot, but this seems like a very domestic business where you're sourcing your ingredients domestically. Have you run into any recent issues over the last couple months when it comes to just getting everything you need to build?
Yeah, and I mean, obviously tariffs are in everybody's mind, and we'll wait to see how everything settles out. But at this point, given that milk is our #1 ingredient, and you know, it comes domestically from many of our own members and our owners, as well as some partner farms that we have, we feel fairly isolated right now.
I'm very curious, just sort of, we were talking a little bit about expansion before. Are there any hindrances to that going forward here? So you've built and opened this new factory, but is there anything that's kind of giving you pause at this moment of time? It doesn't have to be with your business itself, but with the economy more broadly. I'm just kind of curious of how you're thinking about the economy and the future of the economy.
Well, you know, what we've seen when we've seen economy downturns is less people eating out and more people eating at home. So quite honestly, for Tillamook, we have a substantial retail business, and our food service business isn't quite as large, it's a little bit underdeveloped. So it actually plays to a benefit for Tillamook right now. And we also see that households are willing to spend a little bit of a premium for that higher quality to feed their family at home. So it could play to our advantage quite nicely.
Is ice cream a seasonal trend? Do you anticipate that sales will pick up in the summer just because it's hotter outside? Or if consumers are pulling back, will that also hit, you know, even these affordable luxuries like ice cream?
Well, it is definitely a seasonal item. We definitely see that kind of that Memorial Day till Labor Day spike in the business. What I can tell you is the early read into this season is it's been very strong. The purchases from customers have been great. Early reads on takeaway through the first few months of the year. Continue to see this brand and this ice cream business continue to expand at nearly double digits. So I would say at this point, it's continuous business as usual.
Could you talk a bit about the relationship that the company has with the farmers who are producing the milk, the dairy products that you use? Is that very much a national footprint as well? Are they kind of confined to the Pacific Northwest, where I know you're headquartered? What does it look like, and how much has it grown in recent years?
Yeah, that's a great question. So the co-op is made up of 55 farmer members, all based in Oregon and primarily on the coast of Oregon. They supply 100% of the milk into our Tillamook cheese manufacturing facility. So over the last decade, while the number of members may have declined, the amount of milk continues to remain relatively constant into that facility. Then we have a secondary facility in Eastern Oregon that we partner with a large farm out in Eastern Oregon who supplies the milk to that facility. And then for this one, we've partnered with Foremost Farms and a couple of key farms that meet all of our milk quality standards to supply the milk here. So we have partners outside, but we also have a large portion of our milk that comes from our members.
David, it was great to catch up with you. Congrats on the new factory, as well as David Booth. He's the president and the CEO of Tillamook, shorthand for the Tillamook County Creamery Association, based out in the Pacific Northwest in Oregon. It's a farmer-owned cooperative that's been around since 1909. That new facility manufacturing ice cream to the tune of, 15 million gallons. I'm still trying to get my head around that.
Yeah, they said that their product is in 1 in 4 U.S. households. Do you have any in your house? Right?
I may have some cheese in the cheese drawer, but I will. Now, as you bring up the seasonality,
yeah,
it's time
to go
replenish the stores.
Go buy some ice cream. It's cheaper than going out and buying ice cream. Like if you get a big tub in bulk.
The half gallon or the gallon. This is Bloomberg Business Week Daily on Bloomberg Radio. David Gura with Emily Griffeo, in for Carol Masser and Tim Stenovac. Stay with us. This is Bloomberg.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
It's Bloomberg Business Week Daily on Bloomberg Radio. David Gura with Emily Grafeo in for Tim Stenovec and Carol Masser, who are out. And we're going to take a look here at stocks that were moving this afternoon. You went through the numbers. This is a market that was rather flat over the course of the day.
Yeah, the S&P 500, it was moving around all day, but then it ended at basically unchanged. We can call it unchanged, 0.01%. I'm Emily Grafeo, here with David Gura. Let's take a look at some stocks on the move today with Bloomberg News earnings reporter Red Brown. Dollar Tree. This is different than Dollar General.
Right.
This is Dollar Tree.
Yeah, I mean, like you said, it was kind of a drab day in the markets at the end, but we were able to find a couple of movers here. Dollar Tree, one of the big decliners today, and actually went from a really positive report in the world of discount retailers yesterday with Dollar General posting one of its strongest results in years, raising their outlook as well. And then Dollar Tree today doing kind of the opposite. They warned that their second quarter profits could fall as much as 50%, and that's really why we're seeing this quite aggressive move here today. And it just really kind of highlights how different these two companies are. I mean, the main thing that we need to pay attention to is that Dollar General, the one that did well yesterday, gets most of their sales from consumables like milk and cheese and ice cream, things like that you guys are just talking about.
It's thematic today.
And, which don't, I wasn't able to hear your whole interview, but I imagine some of those things are maybe less affected by tariffs.
Yes.
You know, that's something that Dollar General has called out, less affected by tariffs. Dollar Tree, on the other hand, is more of this kind of like, knickknacks and tchotchkes and things like that. Huge exposure to China, and that's really why their bottom line's going to get hit a little bit more harder.
What else are you watching today?
Also, we can go to the positive side is on semiconductor. They are leading all stocks, actually. They led all stocks today in the S&P 500, also drug up some of other semiconductor names, NXP Semiconductors and Seagate, both in the top 10 performers. And that's actually coming off of just some commentary from the CEO who was speaking at a conference today, just saying that their markets have finally kind of hit bottom. So outside of AI, semiconductors have been kind of struggling. So like industrial, automotive, places like that have been dealing with some kind of a glut of inventory, a lot of their customers, and we're finally starting to get out of that. So on semiconductors, speaking to that, they're reporting soon, I believe, and if they do report kind of in line, it'll be 2 years of declines, of quarterly declines, but CEO saying that this should be kind of the bottom finally. We've hit rock bottom and we should be able to move on.
So fascinating because we talk so much about the AI chips and the amount of investment and the cost and the difficulty of making more of them, of these foundries. And
right.
You don't often think about the more workaday
And
smaller
what
semis that you need.
Right. It seems like the non-AI chips, there's an inventory glut because maybe a business you're not going to replace your non-AI chip like every year, right? So you're like, I don't need to buy another one, and then the company suffers.
Well, I mean, we have lost so much of the conversation with AI chips, but I think we forget that there was like the supply chain crisis of a few years ago. Companies bought a lot of chips during that. To kind of like make sure that they were able to get their products out, and they bought way too much, obviously. And there's also kind of demand issues in some of the end markets. So like automotive and EVs, people weren't buying as many, so you're not making as many. So there's just a couple of different issues, but it does seem like the ship is turning for ON and some of these other kind of less flashy semiconductor names.
Okay, finally, you're looking at CrowdStrike, the cybersecurity company, CRWD.
Yeah, that's right, CrowdStrike. A couple of bad headlines coming out of the company today. So they're down around 6%, finished around 6%, was as low as 9% at points during the day. They received an inquiry from the DOJ and SEC requesting information for some of their deals. Bloomberg's been doing some really good reporting around this $32 million deal with Carahsoft Technology. Doesn't sound like a big deal, but they are a provider of cybersecurity to the IRS. So, they're obviously getting a little bit more government scrutiny for that deal. And, the company's just been kind of tied up with legal issues. And obviously, they dominated the news last year. So this earnings report they had yesterday, which is the other bad headline coming out of the company, kind of a poor showing. First quarter report missed their forecasts for consensus. So yeah, a couple of compounding things. This was supposed to be their moment to kind of shed the bad news from last year of the outage. This was supposed to be their fourth quarter, set the path forward. Some of these other headlines is kind of taking over of what was supposed to be, a positive report.
Just noting here for the first time, I think they're commenting on these investigations, so it's confirming the fact that they're underway and bound to be a problem for them going forward.
Right, and that they also said that they are cooperating with the inquiry. Right. But yeah, I always think, like, where were you during the CrowdStrike outage? It was very memorable. It was something that not just Wall Street was looking at it, like people, just regular everyday people, also heard about it.
By it.
It's not good for the company's reputation when something like that happens.
Red Brown, thank you very much. That's Bloomberg News earnings reporter Red Brown joining us here in the Interactive Brokerage Studio here in New York. And for more conversations like this, listen to our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere else you get your podcast. Well, Emily, so we come to the end of the show here. I mean, a lot has transpired here over the course of these last 3 hours. Beige Book reinforcing what we've kind of seen in the survey and sentiment data over these last many weeks, this kind of overarching uncertainty and anxiety, if you will, among business owners and consumers about the path of the economy going forward. And we had that interview with the CFO of Wells Fargo as well, just about how that bank plans to kind of chart a path forward here now that that cap has been lifted by the Federal Reserve.
I'm thinking a lot also about Bloomberg News' Dana Hull's story about full self-driving. It's the Bloomberg Big Take today. It's one of the most read stories. Anyone who's listening, go check that out. It's a harrowing recount of a fatal crash involving Tesla's full self-driving. Obviously, we talk a lot about autonomous driving, and that's definitely one story to read on that.
Yeah, and what's so integral to it is this video that Dana and her colleagues were able to obtain through public records requests of that crash happening from the cameras on that Tesla. So do check that out on the Bloomberg and Bloomberg.com. That does it for Bloomberg Business Week Daily. David Gura, along with Emily Griffeo. Balance of Power at Washington, D.C. with Joe Matthew and Kaylee Lyons starts right now.
To the world of business. This is Balance of Power. Live from Washington, D.C.
Welcome to Balance of Power on Bloomberg TV and radio. Alongside Kaylee Lyons, I'm Joe Matthew, coming to you with some developing news tonight from the White House.
Happening as we speak, Republican senators sitting down with President Trump, discussing his one big beautiful bill, capping off a day of whiplash headlines, putting Washington and Wall Street at an inflection point.
Elon Musk tonight doubling down on his opposition to the bill, urging his 220 million Twitter followers to call their senators and congressmen, writing emphatically, kill the bill.
The tweet coming only hours after the Speaker of the House said he flatly disagreed with Musk. And after the Congressional Budget Office projected $2.4 trillion could be added to the deficit as a result of the mega bill.
Now, one by one, lawmakers like Marjorie Taylor Greene are stepping up against the legislation. Why? Because they never read the full bill and its various provisions. Joining us now with the latest as those Republican senators continue to meet with the president as we speak. Bloomberg's Eric Wasson covering things on the other end of Pennsylvania Avenue. Eric, what's the latest?
You know, I think the CBO score really was an interesting mixed bag here. $2.4 trillion in deficit increases. 11 million people would lose health insurance. That's certainly a major talking point for Democrats attacking this bill. On the other hand, CBO released a separate score saying if Trump's tariffs were in place for 10 years, that could raise $2.8 trillion in revenue. Republicans are out there saying that this will help pay for the bill. Of course, that assumes they remain in place for 10 years. Trump himself has said they're a negotiating tactic and would go away. So interesting on that front. On the wider political front, Elon Musk is really doubling down his attacks on this bill. Republican senators are showing a strong, brave face in the wake of that. Kevin Cramer of North Dakota saying if Elon Musk was going to tell me how to go to the moon, I would listen, but he doesn't get a vote. They're basically saying, you know, they are serious policymakers. They're going to make their own decision whether or not Elon Musk issues threats or threatens to spend money to primary them or not.
So let's talk about the decisions that could be being made as we speak inside the White House, Eric, as the majority leader has suggested there may need to be some adjustments to the SALT cap, for example. But the Senate Finance Committee members who are sitting down with the president right now aren't just in charge of changing tax policy, but potentially Medicaid as well. What could realistically emerge here?
You know, the big goal Leader Thune in the Senate is to expand the temporary business tax breaks that expire after 5 years in the House bill. This is, on depreciation, interest expensing. That will cost hundreds of billions of dollars. So they may need to find additional savings in places like Medicaid. There was even talk in Senate lunch about looking at waste, fraud, and abuse, as it's called, in Medicare, which would be, sort of a third rail potential topic. So there's an ongoing conversation about that. But on the SALT cap itself, there's a real sense among Senate Republicans they're going to reduce that $40,000 SALT cap that was in the House bill, sort of a necessary item to get 4 key swing district Republicans on board. But those Republicans themselves are telling our reporters this is going to cause a massive problem for them, and they will kill the bill in the House. So we'll see if they actually tweak the cap itself or find some other workaround, perhaps an income limit to sort of satisfy and create a compromise there. But there are going to be tweaks. We're expecting a new draft of the tax provision at the end.